Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning. Good morning, you knuckleheads. Happy Friday to you both.
No, it's a good morning. It's a great morning.
Well, even the S&P's down 70 handles, down 60 right now. I don't know how many good morning people can have on top of some weak markets and volatility not really expanding as much as we would like. We'll see how good this morning is. Could be a lot of opportunity. There'll definitely be a lot of opportunity. And I went to bed at 9 o'clock last night, so I am ready.
Wow. How'd you pull that off? No hockey, no special time, no early dinner. Like how'd you do that? That's good.
No special time. Even Vinny went to bed.
I'm sorry, Vanetta. It's too early to go there. That's my bad. 2 minutes in, that's unacceptable.
I was disassociating anyway, so it's fine.
You shut your ears off. I've never, even as a parent, I've never learned to do that. My wife can do that. Amazing. I mean, how she can not hear you when you're talking with kids. It's amazing. I've never been able to do it. Can you do it, Vanetta?
Can I disassociate? You bet your ass I can.
She just did it. She just showed you an example.
Yeah.
Live right here.
Yeah.
Yeah, Vinny wasn't feeling that great. We had a big late hockey game the night before. We didn't get home until like 11 or something like that. So he was feeling tired. Everybody was feeling tired. So early morning, ready to go. Woke up to this, which is a little bit of a 2 down days in a row, something we haven't seen in quite some time.
A rare occurrence. The instant V bottom is not in play, at least at the moment.
No, it is not at the moment at all. And the only V bottom I had was my head hitting the pillow last night. What about you, Nick? Did you make any soup last night?
No
Awkward
soup.
segue. That's fine.
Yeah, I know. That was rough. No soup last night. We went out for a little happy hour after work. Couple coworkers. That was a fun little time.
Oh yeah, how was that?
It was good. Kaiser Tiger hung out there.
Great place. Yeah, we've been kicked out of there before.
Yes. It didn't go that route this time. It was relatively tame. The shots were Prosecco instead of actual shots, so that was.
Wait a minute. Shots of fake.
That was Scott. Scott pulled that one off. That wasn't my choosing.
Scott Nye in social, not.
Yes.
Yeah.
Wait, for the research team?
No. This was like marketing data, a whole bunch of.
But wait a minute, somebody ordered.
You didn't get the invite.
I know that. I never get the invite. Somebody ordered shots of champagne.
No, there's a bottle of champagne, and then we just did shots of it. We had a little sip. It's not my favorite, but
what have you people become? Honest to God,
I say it's the greatest idea ever because Scott is my new boss. So excellent call, Scott. Prosecco for everybody. Love it. He's a classy guy.
Listen, here's you want to know what the whole problem is? We left you with Malort, and you evolved to champagne.
Oh no, I still go Malort. I mean, Malort's that's the classic. You wouldn't drink Malort.
No.
You're too hoity-toity for that
better.
now.
No,
yeah, you say like Prosecco as if you like aren't, uppity now.
Anyone who's ever paid the bar bill doesn't have to drink Malort. That's your rite of passage. So no more Malort for me. But I would do a nice little even like a Jack Daniels and a beer. I mean, it doesn't have to be something,
All right. I did
a little Jameson, a shot of Jameson and a beer.
It was a little get together. Well, I gotta be up and ready. We can't go crazy. Can't be doing shots of Malort.
Yeah, what are you? Are you like a politician that's running for office? You're like, I'm gonna put on my Carhartt and get a Jack and a beer with America, because that's how I roll.
You just said you were asleep at 9 o'clock. I mean, what the hell?
At least in Glencoe, Illinois.
Yeah, at least I was out. I mean, my God.
And the night before, you went to EJ's to have the lamb lollipops.
We each had one martini before bed.
Oh, the martini
one and a half.
before
We
bed.
split one and a half.
Oh, you shared one. Was it cucumber?
No cucumber. But we shared one and a half. You're right.
Oh my God.
Get out of here, dude.
I am getting roasted in the chat though, so
Okay, good. You
it's
should.
fair. But they
gotta
can
go.
roast me. You don't get to roast me.
Oh, come on. When I would walk the dog, I would go to the bar on the corner and just get a beer and a shot of Jameson. I mean, and come home just
Because you hated your life and your marriage.
Sold that you did that.
No, not his mom, the new mom.
Oh, okay.
No, old mommy Glencoe, there's no place to go on a corner unless you go to the neighbor who's like, and those people, they smoke dope. They don't drink and stuff like that. You can go.
Dope?
Oh my God.
Oh, they smoke drugs.
Yeah. Oh my God. Doobies.
Oh man. How are you feeling though this morning though, Nikki? Because the older you get, the harder it gets after
I'm good.
a happy hour. Okay,
Yeah.
good.
He drank champagne.
I drink champagne. It was nothing. Yeah, it's nothing. It's like water, bubbly water. No big
See,
deal.
my boss is a genius.
Headache from all the sugar. Wow.
Yeah, no, I'm good. How's your night, Vanetta?
Yeah, hopefully it was somewhere
Yeah.
between sleeping at 9 and shots of Prosecco.
I was at the dentist.
Ooh.
That's worse.
I had to get 3 fillings replaced because, yes, some of my fillings are older than some of our younger coworkers.
Oh, no. You and Glenn, both.
It was actually my doctor. She got 3 fillings done, filled, polished, all down, and it was all on the right side in less than an hour. And so I was I got to go back next week though to get a crown. So, but not the one that I deserve.
Great. So I get roasted for my happy hour. We got one at the dentist replacing old fillings, and the other asleep by 9 o'clock. Okay, got it. I got it.
That's because I was burning the candle at both ends all week long.
Yes. Yeah. Yeah. Oh yeah. Amazing.
You did leave the office at the late hour of 11:15 yesterday.
Like overtime.
It was a rough one. We had a nice viewer come visit us.
Yeah, our guy Vinny.
Yeah.
Oh, where was he from?
Charlotte,
North Carolina. Yeah.
Oh.
Yeah.
That's very cool.
Yeah, coming in for the Michigan Northwestern football game, the one at Wrigley that they do like every year.
Oh, I didn't know they were doing that this year.
Northwestern plays there. I don't know if it's the same team every year, but
gotcha.
I know that they do that all the time.
I've never seen a game at Wrigley. Have either of you?
No.
Not a football game.
Not
no.
football, no.
Football, yeah. That's what I meant. I apologize. I didn't use all
I thought you went to the Winter Classic though at Wrigley, or no?
Hockey?
Yeah.
No.
Oh, okay.
Tom or Scott. Maybe.
Okay.
Yeah.
You don't get that invite with them?
No, I don't get the free tickets that they can show off on, and we'll see. We'll see though. Things are changing. So
this is your year. Your year.
Yeah. Tom's going to that game. You might not be able to recognize him because he doesn't wear his beret that often anymore. Not a good look. Not a good look. But
I think he should start wearing headbands.
Right. He can use one. I will bring that up to him. I think I'm going to see him this weekend. I will bring that up to him. I'll bring that.
Are you guys having a boy date?
Boy breakfast.
Boy breakfast.
No walk of shame will be had in this breakfast, though. There'll be no.
Are you golfing afterwards? It's going to be like 60 degrees out.
65.
65. There you go.
No golf, no activities. It'll be just a quick little breakfast, in and out. No walk of shame, no activities afterwards.
Wow.
If he tries to recruit you, say no.
Don't you worry, I'm right here. A lot of loyalty on both sides, but that little guy right there.
Yeah, you never go against the family, Dad. You just remember that.
He's my everything. You know that.
Aww. Oh, that's really sweet.
Of course. Yeah, for sure. All right, what do we think here? What's Vanetta? Since it's basically it'll be a 33% chance of getting the right answer. You've got everything lower this morning. You got even the S&P's down around 1%. You got Bitcoin down around 3%. You got gold down around 2%. Which one are you buying today if you had to? Go ahead, give it to me. I'm going to write it down, and we're going to see. What do you want? What are we doing?
I want gold because I want gold jewelry.
You want gold. All right. So
No,
yeah.
the crown.
The crown.
The crown. It is down around 3%, trading 4,100 on the just about on the nose here. And as you can see, it's probably the strongest of the group when I mentioned the E-mini S&Ps, which are back down near their lows that they saw last Friday, right? That was that big move lower on Friday.
When you guys were in Austin.
We were in Austin. That is correct. And then the other one I mentioned was Bitcoin. Bitcoin well below anything it has seen in recent history. And by recent history, I mean over the last month or two. So gold is the strongest of the weakest.
The chat seems very bearish today.
Who is?
The chat. The peeps in the chat. They're starting. It's starting to come for the bulls. You know.
Isn't it illegal to even just be happy in any sort of internet chat?
No, you can't. Not even if you're looking at naked pictures, you have to find something wrong with everyone. I mean, that's just the nature. That's just the beast that we live with.
What kind of chat rooms are you in?
The ones you have to pay. You have to pay. It's not a chat room. It's a club.
Oh, it is. Oh my God.
What sort of goon squad are you on? No, thank you.
Seriously,
no, thank you, sir. Gross.
Seriously.
Gross.
They do have volatility in their camp. It is up 60 cents. 21.10. It has not reached.
Good segue. Good segue.
Thank you. It did reach its highs that it reached on Friday, not its highs from earlier when it traded up around, I don't know, like around 23-ish or so. But we've had a good 2-day spike in volatility. It is just a skosh off its highs by about 15 cents as the E-mini S&Ps are just off of their lows by about $10, and they're all down around the same today. Maybe the Dow is a little bit weak, a little bit stronger. That's about it.
Dow has been the strongest.
Dow
hit its record. Yeah.
It gave up its whole move though over the last 2 days, like everything else.
But a lot of the high flyers are down 50, 40, 30%, that kind of thing. Yeah.
Well, so you just buy everything now and you wait for Santa.
Exactly.
The Santa rally.
Those 3 days that Vecchio told us about.
Yeah. Technically it's 7.
Can we at least get through Thanksgiving? I mean, it's really bad that even like I got neighbors with Christmas lights up already. I mean, don't we value the turkey anymore?
Do yours not go up now?
No, but Vinny, it is going to be 60 in Chicago. It's only
65.
Yeah, don't short us here on those extra
you
couple.
You should put them up on tomorrow. Go put your lights up tomorrow.
That's what Vinny said. Dad, you should do outside. I mean, it's amazing. He's just like you guys at work. You find jobs for me to do to make you guys happy. This is.
I
made you record one TikTok.
An embarrassing TikTok.
That is
embarrassing one.
I'm glad that you got it.
No, it's going to go out today. I'm excited.
And the worst part is we don't get the like executive like look at it. You know,
no, you do not.
It just goes straight out. There's no, you don't know what it looks like, and then
I'll put a filter on it for you, girl.
Yeah, can you take like 10 or 15 pounds off the midsection for me? Tighten that whole thing up.
It's only from here up. I think Gus got in like real nice and tight. So
that's good. That's
amazing. That's so good. So happy.
You guys are stars. I'm gonna make you stars.
Thank you. Thank you.
Horrible.
We got a good show for you today. It is a fantastic Friday. The market is flying around. There are things to do. There is opportunity abounded all over the place. So let's get to it. Let's get to the good stuff. On this fantastic Friday, headed your way at the top of the 8 o'clock hour, Jamal is back in the hot seat for the weekend stocks, and he has titled his weekly segment, How to Lose the Government Shutdown Bid in just one day. Sorry.
Can we shut the government back down? I mean, what the hell? It opens up and everything goes down now. shut the thing down again.
Yeah, this only proves you can't give anything to the government. You just got to do it all yourself.
Yeah, what the hell?
Yep.
What the hell? What the hell? Anyway, Jamal is going to be in breaking things down through his unique lens. And then it is Friday, and my favorite segment, Fast Market. We got viewer-submitted trades. Our viewers are so smart. They are always scanning the markets. They're looking at charts. They're looking at graphs. They're looking at Wall Street bets. I don't know. But they're finding trade ideas, and the bats are going to try to execute on those ideas. That's at 8:40. And then 9 o'clock, market measures. What makes BPR a reliable risk gauge?
Very nice.
Okay.
Yes, right. It should be a good one. It's kind of a look at how much buying power you use relative to the risk that is realized on a position, and can you kind of use buying power as a gauge for max pain on a naked position?
Okay.
Ooh.
And then my live from the trade desk on the schedule, it just says TBD, but me in my heart, I want it to just say Marty.
It's possible. It's possible.
Yeah. I love Marty on Fridays. It just hits different, you know?
It's the best.
Yeah.
Yeah. Marty on a Friday was never a good thing, and I'm going back to the 80s.
Nice. Okay.
That's funny. All right. Well, that is our run of show for today. A lot of good content headed your way. In the meantime, in between time, you guys want your daily dose?
Sure.
Yeah. Hit me with my theme music. Let's go.
Our leading story, breaking news,
coming
across the wire. Our leading story, top story, just in.
In today's headline, this just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's November the 14th. I can't believe November is half over. What are we doing? This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
So the markets no longer view December rate cut as a sure bet, with Fed officials themselves even casting doubts. I think the market percentages, I think it went from like 90% to now it's like a coin flip. It's like 50-50. A few days ago, it was a 2-to-1 probability. And then even early before that, I think it was a lot higher. Where do we go from here? What are your takeaways? How are you using this uncertainty? And double down days now.
I mean, I don't know how you can. It's so funny because yesterday the bonds were down, trading and flirting with the 116 handle. As bonds go lower, interest rates go higher. That would set up with the news that you're reading here today. Today, you've got the bonds up 15 ticks to 117.18. They've been in a very tight range of around 118 to around 116. And here we are at 117 and change. So the market hasn't really, over the last week or so, hasn't really given any direction from a rate cut or no rate cut kind of thing. But the news and the noise is going to be that opportunity inside there. So right now, it looks like the market's saying everything is status quo. And the Fed Watch tool, which is from the CME, is basically saying a 50-50 shot. So I would stick with all of that. The market's saying, I don't know yet what we're going to do with interest rates. And the traders themselves are saying, I don't know what we're going to do with interest rates right yet. So right now, it's place your bets. IB rank is pretty low in the bond, so you're going to have to be directional.
I think this headline is a piece of the puzzle of why we've had this move lower. I mean, you've seen, gold is a good example of this too, with rates potentially staying higher. That would be a knock on gold and silver. You've had a huge 2-day move there. I know they had kind of the run up into the opening of the government, which I think was on the idea that stimmies are coming and liquidity is coming. This is kind of the snapback of the other side of that, of like, maybe stimulus and more liquidity isn't coming. And, that's kind of been the
we're both being a little hindsighty here, right? I mean,
of course, yeah.
2 days ago, everybody was talking about, I couldn't tell you all the gold bugs that came out telling me that, gold's going to make new highs. Look at silver. Silver was on an absolute tear. Silver has more volatility than gold. Silver's down a little, like 4.5% today. So It's just like the market. It's trying to get it's like a baby right now. It's trying to get its feet underneath it. Are we going to make like new highs in everything, or are we going to come back and retrace some of these lows?
Well, in that same sort of genre, I guess the dollar also slumped lower yesterday on worries of what clearing U.S. data fog might show. The dollar struggled to claw back steep losses and is on track for a weekly fail as investors still continue to await a backlog of U.S. data following the government's reopening. Let's look at currencies.
Yeah, Euro strong was strong. I mean, it's up about 150 ticks or so. I mean, that's not as it's had a nice 2 week run. There's no way about it. Dollar's been weak. Euro's been strong. Pound has been doing the same thing. I think the only of the three that we usually quote or look at, the Japanese yen, although it is up today and up nice 350 ticks. I just quoted the euro at 150 ticks up, but the yen is just off of its lows, where the euro and the pound are making higher highs this week so far.
Yeah, I got caught with my pants down because I am long dollar and short euro in a multitude of ways. So I'm 0 for 2 on those positions so far. So I could definitely use a little bit of a bounce in the dollar here.
So you need the euro and the pound to go lower.
I'm short the euro against the pound, so I need the pound to go higher. I'm short the euro Japanese yen, which is kind of like a uncorrelated pair. I'm long the U.S. dollar against the Swiss franc, and the U.S. dollar against the Canadian dollar. So I've long dollar against the franc and the Canadian dollar, and then I'm short the euro against British pound and the Japanese yen.
As long as you understand it.
Yes. So but the biggest problem here is that they're all kind of separate currencies that I'm trading. And the dollar being weak and the euro being like kind of flat is bad on all of my positions. Like I need the opposite of those.
I gotcha. I just want to go to the European Christmas markets. That's it.
Doesn't that start soon? Christmas?
Yeah.
What do they call it?
Chris Kringle? Chris Kringle.
Yeah.
Yeah.
It's soon.
No, but I want to go to the ones in Europe. I don't want to go to the janky one they set up in our downtown.
Yeah, it's like a $20 entry. You get like the crappy mulled wine.
Yeah.
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 Am I a bad parent? I don't think I've ever been.
Oh, you should take Vinny. I think they might have one at Wrigley this year too.
If I ask Vinny, can he throw a party at my house this weekend or go to the Chris Kringle thing? He's going to say, party at the house, Dad, party at the house. So,
all right.
Which we are not doing, by the way.
Keeping it moving. You guys did already touch on this a little bit, but gold, when I pulled this headline, gold was set for the best week in a month. I'm not sure if that's true, but gold did seem, I guess it has steadied today after a week that has seen prices fluctuate wildly. Let's talk about bullion.
Yeah, gold
right now, the low of the session.
Yeah, down $125 right now. That's almost a 3% move lower. Let's just say it was set to be if it closed where it was on Wednesday-ish, it would have been around a 6% move higher on the week. It looks like it's 3% higher right now, maybe a little bit less. We'll see how the day ends. Even the S&P's going near their lows too here, down 78. Last time I quoted, they were down in their 60s.
Silver down 4.5% too. It just moved almost like $1 in the last 30 minutes or so.
Yeah, silver's not for the faint of heart.
No.
Are you still in your gold position, Nikki?
No, took it off.
Okay.
I mean, you can't catch the whole move, but I sure wish I had some of it. But I know that's how I feel. But yeah, we scalped it pretty good yesterday. We scalped silver too. I have some short silver. We had a fast market trade where we did short SLV and then we sold the weekly put. So the put going into the November monthly expiration, the 47 strike. So, we'll probably be close to max profit there, maybe like 20 or 30 or 40 cents off from that. But it's a small little trade. So we played it. And better yet, the viewers have been playing it. So they caught that.
Hey,
They gave us that trade, that little piece of alpha that they have in their back pocket. And so they're in it. So it should be good.
all right, let's go. Hey, maybe you could get even more insight from Jamal when he comes in to do his segment, because he was on the floor when I think the news crews were rolling out this news. But FanDuel and CME are unveiling new prediction markets platform that's going to launch in December. FanDuel will extend its leading industry consumer gambling app with the FanDuel Predicts app, again, rolled out in partnership with the CME. That is going next month. They will provide access to sport events contracts across baseball, basketball, football, and hockey.
Good job out of them. Now the wars begin.
It does trade. So the ticker is FLUT.
Flutter, yes.
FLUT. I was looking at it yesterday because it was down like 15%. It's actually down another $4 or $5 pre-market here. But the
street hates it.
Yeah, they didn't like this one. But the options stink. I mean, there's no, the bid-ask spreads are $1 to $2 wide, and volume and open interests are basically nil. And you only have monthly expirations, so that tells you that generally liquidity in those options is probably not that high because they only offer monthly expirations. So
right, and that IV rank will be irrelevant since the markets are wide. That's another thing. I got an email yesterday about like Q IVR versus NDX IVR. Why are they different? If they're the same exact thing, only one's 10 times as big. Why is the IVR so different between the two? And that's because NDX has very wide markets, and the IVR picks up those tail markets, and since they're so wide, they skew the IVR. So always go with the ETF that has the tightest markets, which would be Qs or SPY, something like that. SPX has tight markets too.
Nikki, have you ever placed a prediction bet?
I have not done prediction bets yet. I've of course used FanDuel.
Sure, no, I know.
I am a
together, son.
Yeah, I'm sure I'll be doing prediction bets soon enough. I mean, I think this obviously tells you with the CME getting on board that prediction markets will be here in tasty land very soon as well. Because if the biggest problem with the prediction market space right now is there's not a centralized exchange. A lot of these are internalized spot markets.
Yes.
So having a centralized exchange like the CME or CBOE, I'm sure will come out with some sort of product in this realm as well. Will increase the access and open it up to, companies like ours that are heavily regulated.
Good news in the crypto sphere. Grayscale has filed for an IPO. The move follows public listings earlier this year from Circle and Bullish. Grayscale operates GBTC and several other crypto ETFs. It would be one of the largest digital asset managers to pursue an IPO. By the power of Grayscale. No? Where are my elder millennials at? No? Okay, fine.
I don't.
It was a cartoon, wasn't it?
Yeah, it's He-Man.
He-Man, yeah, I remember.
But I was a She-Ra. I loved She-Ra.
I don't know if that's elder millennial. I think that's Gen X. I'm sorry.
Okay, well, I've outed myself, but I still love She-Ra.
Yeah, it was one of those cartoons. I don't think it was claymation, but it was just after claymation.
No, it was animation. No, it was animation. Yeah.
But I mean, it wasn't good animation. It's not like what we have today.
Okay, if you were 6, you were amazed.
The real classic claymation was Celebrity Deathmatch.
Yeah, that was good.
That was good. They need to bring that back.
Let's get ready to rumble.
That was the best.
Oh yeah, you could have had like a Kendrick and a Drake.
Gumby was
Kendrick and a Drake.
Yeah, Kendrick, Drake. I mean, you could go so many ways.
Yeah.
Yeah.
Anyway, can we talk about Bitcoin?
Yeah, I mean, these funds kind of got killed by the iBits and the ProShares and iShares.
Mm-hmm.
ProShares, iShares, BlackRock, those are the most liquid, lowest fee ETFs versus Grayscale, which had a very, very high fee because they were the first one really on the scene. And so those Grayscale ETFs, I forget the tickers on them, but a lot of them, there was an ARB there where the Grayscale fees were like 1.5% a year versus something like IBIT, which was like a fraction of 10 basis points, something like that. So, I don't know if this is a IPO I'll get long.
I went out here so I can get longer on this. I went out to the longer dated. I went out to the Bitcoin USD. You'll see we're down 90. We're trading 95,000. We're down almost 3%, 2.5%. Numbers that we haven't seen since May when it bounced off of 70-ish handle. So here's an opportunity in Bitcoin. If you haven't traded it, to be in the middle of this long range here. So place your bets, 125 to 75, and now we're 95. What do you want to do?
Exactly. And a lot of the stocks, like Coinbase, is down pre-market to 269. So it's down about another $14 here pre-market. It's come down from, mid 300s to mid 200s in the blink of an eye. It's been about a month of a reversal there. So volatility getting juiced up there as well. I'm already in short puts, so I will feel some pain this morning. But if you don't have something on, volatility is certainly juicy there, and seems like you're at a price extreme. Can it go lower? Of course.
Sure, of course.
Bat, this next story is for you because I believe your people pioneered this business, but now it's
you people.
You'll see it's gone commercial. Robinhood is announcing it will bring you bags of cash right to your door, charging $3 to $7 extra bucks a pop. Robinhood says they are partnering with delivery app GoPuff to deliver cash to consumers. You can bypass hoofing it to the ATM and use the same day delivery service to have a bag of cash show up in a sealed bag for a $6.99 fee, but that fee drops to $2.99 if you have more than $100,000 in assets in the Robinhood platform. Who needs bags of cash? I have so many questions.
Nothing could go wrong here with a gig worker delivering $100,000 of cash.
Right, and you just see a GoPuff scooter and you take him out. Like I have so many questions.
I like when they come to the door, and I'm going to say, just leave it in the milk pail over there in the corner. yeah, and back away, back up.
Is this a great need that people on the reg needs bags of cash for legitimate purposes?
Only if it's under 10,000, I'm told. I think.
Government reporting. I mean, I'm worried about the delivery guys stealing an extra French fry.
I think that seriously. I think this is more of just a headline than it is an actual product. Like, I don't think they're.
How is this a business?
I don't think it's a business. I think it's just a goofy, funny thing that they can add to the list of things they offer clients. You want cash, you can get it here. No problem.
I was very confused by this, but anyway. Hey, getting to some of the earnings from last night, AMAT sees weaker China spending in 2026, and their earnings said that they expect spending on chip-making equipment in China to fall in 2026 as tighter U.S. export controls limit its market access. Last month, the company forecast a $600 million hit to their fiscal 2026 revenue. They forecasted current quarter revenue of $6.85 billion. So what did you do in AMAT?
Haven't done too much. AMAT 206, you are right. It is down around, what is that, about $18 or so? AMAT, one of the high flyers, definitely taking it on the chin from 240 down to around where it is right now. Just under 200. I'm sorry, just under 207.
Yeah, I didn't trade this one, but it did. It looked like in the after hour session, it got up to like 220, 230. You saw a little bit of a bid in like the rest of the chip names.
Yeah, and the market overall. I mean, S&Ps were up, NASDAQ was up.
The E-minis rallied like 30 points. You had the NASDAQ rally about 100 handles, something like that, into the close and in the overnight or into the after hour session. So it felt like, oh wow, this is the one we needed, and then now we're dead.
Yeah.
Another company that had IPO was a new IPO, and that's StubHub. They debuted to the markets in September, but the stock tanked 20% because the CEO was like, yeah, we're not going to give guidance for the current quarter. And the company posted a net loss of $1.33 billion. That was based on a one-time stock-based compensation charge. The company brought in revenue of $468 million. That's how I know you are friggin' lying. They charge that for one ticket, but whatever.
Yeah, if Stub opens where it's trading right now at 14 and a half, and again, this is a new IPO that traded into the 20 handle. 14.45 will be about as low as it's ever been, lower than its lowest low of its small career.
I hate StubHub. See you in hell.
Yeah, I don't know if I have any interest in trading this stock.
Yeah, I agree with you.
They do have options now, though. They're out there, so you can short this with some leverage.
Even the S&P update making new lows down 79.
Do you want me to keep talking?
Gold down 140.
Oh,
Silver down to 50 and change here, down 5%. Huge.
Yeah, that's a $2.70 move. That's almost a $3,000 to $2,700, $2,800 move. That's 5% on silver, 3% on gold. The only thing of a commodity that's higher is oil right now. Oil up 1.5%.
Shifting gears to the tech sector, Oracle is increasingly relying on debt markets to fund the build out of its AI infrastructure, and investors are growing concerned. The stock is down more than 30% from its September highs. What can be done in the Oracle?
Yeah, Oracle is not. Oracle's in a house of pain here. 211 closed at 217 and change. Going to be down another $6, but like you said, down over 30%. From its highs that were well over $300. Oracle's a little sicky right now, has not had an uptick in days, and not had an uptick in the month of November, hasn't had an uptick since the end of October.
I mean, it's lower than where it was before that explosion to the upside on earnings.
Yep.
I mean,
Are you guys buyers here?
I'm short. I'm short a little. I have a little long delta in Oracle. It's not good.
By default, we are buyers.
Sometimes it works out that way.
At this point, we are buyers at 200.
Okay.
Yeah.
So, but the stock's at 211, so we're a little bit out of the money at this point.
China's Baidu is unveiling new processors and supercomputing products related to its Ernie AI chat intelligence. They unveiled 2 new semiconductors for AI, saying the products can provide Chinese companies with powerful, low-cost, domestically controlled computing power. They could not stress that enough, as tensions they're doing things between the U.S. and China with regards to chips. But what are you doing in Baidu?
Have you done anything in Baidu, son? BID?
I had a butterfly on that I took off yesterday. I wish I held it because the stock is lower. You can't catch it all. But I had a downside butterfly. I think that was another fast market trade. Took a couple bucks out of that. I don't currently have anything on here. The markets are a little bit wide. I was looking at these yesterday with Mike, and Mike put it perfectly that he has never made money on the China stocks, and I too have never made money on the China stocks. At least if I do, it's very infrequent, and it's usually very small. And so we both kind of shied away from these. They are kind of on the board right now because they do have higher implied volatility. Even you look at like BABA was up yesterday, but it's got a 41 IV rank. It's had a little bit of a pullback.
JD had earnings yesterday.
That was another one where I played that with a zebra. It looked like it was going to be perfect in the morning on the open, and then the stock sold off, and I lost $100 or so on that trade. So I generally, if I'm looking at these trades, I'm in a bad place. Like it's usually like the last of the last things I look at. So I think I'm going to avoid these.
Okay. Good insight.
I don't look at it either. I'll be honest with you. They're the last of the last for me too.
Yes.
They would high IV rank of 66 certainly makes sense there. In the example you're using of Baidu, it does have earnings November 18th, and that's why that's pretty high implied volatility.
There you go. Something else that's been taking it on the chin is Tesla. The stock has fallen 10% since Musk was awarded his $1 trillion pay package. That's not going to help. The company is issuing recalls for some of its solar products. XAI is trying to do like another round of fundraising, but Tesla shares have fallen along with the broader tech sector. What are you guys doing in Tesla?
Anything in Tesla for you, son?
No, we currently don't have a position. It might be something we look at. I mean, it's down another $20 here pre-market, 382. It kind of got, I mean, it obviously had a big sell-off, but it pinned at the 400 strike for most of the session yesterday. It kind of just sold off and then just stayed right around 400. You're breaking through that today, down 20 and change here. 380 is kind of where it first kind of busted out to the upside. So it might be an interesting spot. Hopefully volatility expands a little bit. Maybe we look at like, wide iron condor or wide strangle, something like that in there. If volatility expands a little bit, we'll see. It's hard to project where some of these stocks are going to open, just given the market and the volatility that we're seeing in some of these names. I mean, Tesla could be 350 in the first 30 minutes. That would be a gift, I think.
Agree. It was languishing around the 350 level before that big move higher to around 450. So yes, you are right. You got a decent size. What is that, from the 20% move or so?
Yeah.
20% move or so.
Bear market. We're in a bear market.
You're in a lot of these high flyers. You're in a bear market, and our market, meaning the E-mini S&Ps, are only where they were last Friday, which was just a skosh off of all-time highs. Let's put in perspective here. I mean, we're just under 6,700. We either have a long way to go. Here's the conundrum. You either have a long way to go on the overall market lower to catch these high-flying stocks that brought us higher, or the rest of the market has kind of picked up the pieces here, and these stocks are for sale, meaning fire sale prices. That's the decision that you have to make at home. Yeah.
That's kind of how it's felt over the last 2 weeks. You had people talk about the healthcare stocks. All those have kind of gone parabolic. You have some of the, dividend paying stocks have been stronger. That's good. I think it's good to have that rotation. You don't want everything going in the same direction every single time. You got to have the rotations to keep a market a little bit healthy.
Something else that has been moving, maybe opportunity here, is Palantir. I don't know what the CEO is doing, but he's just going on this interview spree, and people are like, stop talking, bro. But he's slamming parasitic critics for calling his company's technology a surveillance tool. It's literally what you do, dude. And he says that patriotism will make you rich. And then he bashed Democrats for not uplifting alpha males. Look at this photo I put up of him. Is the alpha male in the room with us right now?
It's a confident alpha.
I would like to talk to you about how alpha I am.
Hey, I'm wearing purple. You can't say that to me today. Today you picked the wrong day to do this, all right?
You do look comfy cozy, though, in your jammies.
Thank you. Thank you.
He's well rested, too. He just decided to stay in the jammies and keep it going.
Let's talk about Palantir as a stock.
Down around $9, 163. Similar to these other stocks that we talked about, traded over 200, 205, down to 163. You're looking at $40 here off of its highs. Interesting little area and everything. IV rank is 29, probably going to go a little bit higher, even though the market's going a little bit lower. I think a lot of these stocks' volatility is going to pop a little bit. Usually it's the opposite way, but not on these extreme moves. Who knows if they're extreme moves? Not on these big moves that we've been seeing the last 24 to 48 hours.
Yeah, I've got the one.
You're not getting paid for short volatility this weekend. Anything.
Oh, no.
Even if the market goes in the direction you want, you'll make money on your delta. You are not making money on your theta decay.
Yes. I have the 145, 210 strangle in December. So probably going to take some heat on that in the morning, but on the open, but not too bad. It's out of the money still. Should be okay.
Oh, my peeps just came up with a brilliant one. We were talking about Bitcoin just a moment ago, under 95 now, 94.6 on the cash, 94.7 or 8 or so on the Bitcoin futures. They said, I guess they don't like the McRib.
Oh, that's true. Oh
Right?
my God. I
Oh
forgot.
no.
Yeah,
Wow.
yeah.
That's
Yeah,
fine.
I gotta give Sean his props out there on Twitter for coming up with that one. He's 100% right. I
I
guess
mean, the McRib indicator was due for a fail. It was 3 for 3, so you can't go 4 for 4. No way.
no.
I love nonsense, and I love that we're in a time of nonsense. And I think Apple, this is Chef's Kiss. They are unveiling this week the Apple sock. What is the Apple sock? If you thought Apple's $19 polishing cloth was ludicrous, can I introduce to you the iPhone Pocket? It is a cloth sling for your iPhone that costs $150 in the short iteration and $230 in the long. To be fair, it is in a collaboration with the Japanese label Issey Miyake. So, ooh, okay. Fashion. I love this sort of nonsense. I love that Apple is selling a $230 sock. Give it to me.
Your dad gets to sport an Issey Misaki overcoat back in the day, son. Probably when you were being conceived or so. Yeah, back in the day.
You were kind of a fashion maven back in the day. I'll give you your props.
Thank you. I'm becoming an old Italian man now as I get older. I have ear hair, but yes, back in the day, I might have been something better than my competition, which was not that strong, by the way. You see my old friends. Apple is a stock. Here's another one. So now, just like the market, Apple's kind of hung in there. Relative. It's not down 20-30% from its highs. So if you're looking to get some short delta, maybe something that's supposed to follow the market that I wouldn't imagine is going to rebound as much as everything else, well, Apple's your play. If you're on the other side of the coin, and this is what makes a market because nobody knows the future, Apple is the strongest of the group. If you're playing that, well, it's going to continue going stronger. I'm going to get more Apple and dump some of my pigs. Not the way I would do it, but that is the other side of the coin.
Yeah, I saw a great tweet that was basically like, the reason Apple's not selling off with this AI bubble sell-off is because they never actually got into AI.
Yeah, the by accident. Yeah,
you might be right.
It's true. Like they're so behind on anything AI that maybe that's why they've just.
I mean, they're making socks. They're
making socks.
Fun fashion fact. Issey Miyake was the designer behind Steve Jobs' iconic black mock neck shirts.
Oh, well, there you go.
There you go.
Who knew? I didn't.
Hey, I'm going to skip this next story here. I'm going to go to Netflix. Netflix is doubling down on gaming, building a new app with the biggest franchises. They are going to have some recognizable games coming to the Netflix ecosystem, including Pictionary, and Tetris. I think that's cool. You can play the games on it uses the phone as a controller and no hardware required. Netflix split goes into effect, I think, on Monday. What are you doing in Netflix?
Netflix down around $10. I mean, the overall market is much weaker today too. So, I mean, it's not unusual to see all of these stocks a little bit lower. Netflix, maybe that's a place where you park your money going into a split. I don't know.
And just to point out for the split, so the split, all your options will adjust based on the 10-for-1 split. So if you have call spreads, you're going to have 10 times the contracts, or put spreads, whatever, iron condors. You're going to have 10 times the contracts at 1/10 the width. So if you're 10 points wide, you're going to now have 10 contracts of a 1 point wide spread on the post-split Netflix price. Same exact risk and reward as you had prior to the split, so there's no change in your risk profile, but it is a lot more contracts and tighter spreads, and it'll change a lot of your Greek exposure as well. I know you mentioned kind of the gamma exposure changes because now you have 10 contracts versus 1, but the risk reward on the trade doesn't change. So I've got a number of emails on do you close the position or hold the position? What do you do? Nothing really changes from a risk perspective. There's probably going to be a little bit of wider bid-ask spreads, especially on the open of the options, but nothing really changes for the options themselves.
Right, but it does show you how much leverage you're being provided on these $1,100 stocks, even though you're going $10 wide or $20 wide, completely different than a $100 stock going $10 wide or $20 wide.
Yes.
Just real fast, Starbucks Workers Union launched a strike in more than 40 cities yesterday. Oh, not on Red Cup Day, but they launched the strike at around 65 stores. The open-ended strike is going to start with around 1,000 baristas, but could expand in coming days. What are you doing in the books?
It was actually up yesterday.
What do you do, Vanetta? I know what I would do. I'm just curious, so what do you do if you owned a Starbucks, if you were an independent owner of a Starbucks, what do you do in this situation?
I believe in unions.
Starbucks down $1.85. I fire them all. That's what I do.
Of course you would, you capitalist fat cat.
I give a chance to come back in, I fire them all. 85 and change, down around $1.
The stock has been stronger than some of the rest of the market here. I mean, it's had like a 2 or 3 day move to the upside, giving up a little bit. It's towards the lower end of where it's been trading, but it's kind of dead money at this point.
Yeah, IB rank of 20. I agree, deadish money. With everything that's going on in the market right now, there's better places to put your buying power than Starbucks, in my opinion. And it has nothing to do with the red cup or walking out. I did get a red cup yesterday for Vinny. I think he has 3 now, 2 or 3. I don't remember.
Yeah, but the hot item is that stupid little bear with the hat. It is really cute. They only had 1 per store, and people are mad. So you not seen it? It's really cute.
No, I'm trying
that's the iced coffee one.
I'm trying to get him away from plushies.
No, it's a cup. It's a cup.
Oh, okay, but it has a little doll on it.
No, it's in the shape of a bear.
Oh, it's just a cup.
Yeah, so it looks like a honey dispenser kind of, but it's for iced coffee.
I finally weaned Nick off of plushies when he was 17. I'm trying to do it before.
Oh yeah.
Hey, real fast, I've already gone over, skipping another story here. Just Under Armour is parting ways with Steph Curry as restructuring takes place in the company. Curry signed with Under Armour in 2013 after his Nike contract expired, and he created the Curry brand within Under Armour in 2020. So I guess Steph Curry is a free agent in that regards, as he says, night-night to Under Armour. See what it is? Okay. UA is the ticker that I'm doing my best.
That was good. Does he get to take the Curry brand with him, or do they just keep the Curry brand?
I just want to order some takeout curry. I don't know. Yeah. I don't know.
Is it UA?
$4 and change. I mean, I run for it, but
Mikey held long stock there, I think, for 3 years, and into the last move from 5 to 8 or 9. I think I got him to close that position out. He didn't even know he had it because he had stock not clicked on the portfolio page. So
no.
So it's just in there, and so
it's not supposed to work out that way.
Devastating.
Higher if you don't know you have something, and you've had it for a year, 2 or 3. You're supposed to be up 4-fold. I mean,
yes,
that's not how it works.
No, so this one's a dog.
Under Armour will release the Curry 13, the final Curry brand, in February as planned. And then just real fast, Polymarket struck a multi-year deal with TKO, that's the ticker you could trade, TKO, to integrate prediction markets into UFC events that will now be held on the White House lawn. So I'm not joking. This is what's happening.
I know. I'm kind of looking forward to it.
All I know is that you pound the American fighter on all those bets, because
we are a deeply unserious game.
And by pound you mean you bet on them during the whole thing.
Yeah, you got to bet on all the American fighters. I mean, Trump's not about to watch.
What you've seen, listen. I mean, it's horrible now that you go to a sporting event, with human beings playing the game, and you realize now that most of them were shaving points or doing.
Oh yeah, they're all in it. The fix is in. Everything's rigged.
The fix is in. So if you've ever thought about how your betting was, you are so far behind the 8 ball. Stick to the market, okay? I know how evil it might be and all the bots and all the other bullshit. You still have a 2-sided penny-wide market. So stick to the markets and watch this for entertainment.
No, you should watch this for entertainment. Here's a quick video I like to call Will like a little trader taste test. How about that? I'm doing Thanksgiving themed because I support Thanksgiving's right to exist. But ooh, this looks good. Check this out.
Okay.
Something different, not just cornbread.
Oh, there's gravy.
Potatoes.
Put the gravy in there.
Put the gravy in there.
There we go.
Gravy in the bucket.
Yeah. I'm for it. I'm
for it too, but this is way too much freaking work. I mean,
that's true.
I'll just dip my freaking mashed potatoes in there and save myself the calories from the frying it and crap, and I'll enjoy it.
I like it though. I like the effort.
Boosh. Anyway, whatever.
If you got a wife or a husband who does this for you, significant other, whatever it may be, maybe a neighbor in your condo complex who does this for you, they are a freaking keeper, okay? You buy them a present.
I would do this for you, so come wife me up, somebody. What's coming up next?
All right, open invitation, ladies and gentlemen. You got it. Bring it on. Bring it on. Good job out of you, Vanetta. We're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send, where we go over viewer emails. We're going to go to calls later today, too. So if you have any questions about the market, I'd love to do that with you. And then we'll get to Jamal, too, with This Week in Stocks. Confirm and Send next. We'll be back in 90 seconds. Let's Tasty Live. Thank you, Vanetta.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
That's right, Nikki. That music means only one thing. It's time for a little bit of confirm and send, but let's take a look at the market. Been talking about it all morning. Hasn't really moved too much. It made new lows while we were talking. I guess it's about 20 handles off of its lows. That brings it down around 97 at one point. It's down around 67 right now. I'm sorry, 87. It's down 67 right now, down a full 1%. NASDAQ doing the same, down 370 and change. About a 1.5% move. Russell down almost 30, and the Dow, the strongest of the group, down 300. You can see here they've all retraced about half or more. Even the S&Ps are about, I think they got down to around the 66.60 handle or 50 handle. So they're about 40 handles off of that lows from last Friday. Let's remember that. It was just last Friday. Bonds up 14, hanging out at 117.17. Really in no man's land the last week or two with the overall market. Bitcoin getting decimated, making new lows. They hated the McRib, 95.4. I stole that from Sean. Good job out of you, my friend. Ethereum down 44. Ethereum not down as much on a percentage basis as Bitcoin. Bitcoin down twice as much as Ethereum. Ethereum usually has a lot more volatility. We'll see what the rest of the day brings. Oil's the only one that's been higher, traded over 60, almost 60 and a half. It's 59.66 right now. The middle of its range up 1.75%. Gold, big pounding, down 3.5%. Still well over its lows from last Friday when it went lower at the overall market, trading around 3,900. It's 4,050 right now, off of its highs of 4,200, which it made last night. And then by highs, I mean recent highs from the last week or so, well off of its highs of, closer to 43, 4,400 on gold. Silver down $2.80. That's a big move, 5.33% move, but it too is in the middle of its range, well off of its lows from last Friday. So gold and silver relatively strong, even though they're getting hammered today compared to the market, which is closer to its lows than gold and silver. Nat gas down 17 cents. We'll let the rest of the market play out. We'll quote it at 8:30. We'll see what Jamal has to say, but let's do confirm and send.
Cool. And I just scalped out of the micro crude that I had on. So I took it small. I mean, I just traded one contract there. I took like $100 out of that into this move.
Very nice. Very nice. You're amazing.
I mean, I'm just putting my positions out there, what I'm doing. I mean, it's a big move in oil. You caught a dollar. That's what do you
it was. And
how much do you expect out of it?
Yeah, no, I kid you. I kid you because I missed it. So good job out of you. So that was a close. You'll see that on the follow page as a close and a scalp. Good job out of you.
All right, let's do it. Confirm and send. Couple viewer emails here. Friday, November 14th. Let's do this.
How do you size a pairs trade? How many contracts do you know to use for each product?
So there's a couple different ways. So you could do this notionally. I think that's kind of the easiest way. Like if you're trying to trade, Nasdaq Russell pair, it was what 3-2 was our notional, and that's just doing size wise. So like just taking the size of one size over the size of the other, you want it to be 1-to-1. And so you just do that kind of math. You can also incorporate
on the notional, not the price of them, right? Like
not the price, the notional. So you get, 10 shares of a $10 stock versus one share of $100 stock. That's notionally equivalent, $100 in each. Great
example.
In each product. The part you have to consider really in that pair is the volatility. And so, there's volatility adjusted notional values where you adjust the value that you're trading by the volatility of that underlying. So you want to have less of a higher volatility side of that trade and more of the lower volatility side of that trade. That's volatility adjusted pairs. There's a number of them that are built into the platform if you're using the pairs trader. So, that's a quick, easy way to do them. If you want to get more exotic with your own pairs trades, you
can put in volatility and everything else. I just like to go to notional.
Yes. And we'll probably be talking about this more in the future here. We've got a fun little future segment coming down the pipeline.
We do. And we're going to bring in industry experts for you too. So it's just not going to be you and I talking about it. We're going to go right to the source. We got a nice little surprise for you. Going to be fun.
Yes. Next one, please.
Coming as early as next week, I believe.
Yes, Tuesday will be the first one.
Awesome.
Fast turnaround.
Nice.
How do you use measures of volatility such as skew or VVIX in your daily trading decisions? Do you use them?
The simple answer to this is no. I really don't. You can certainly look at them. Like I have no problem using them for content. Like skew, you can't even trade. Skew is just
you can't trade either of these.
I'm sorry. Yeah, I wasn't looking at the last one. I was just going to the charts here for a minute. I don't know what does this show you right here? Skew at 142 from yesterday, in the middle of its range. It's the CBOE volatility index on options. I mean, it's a good to know how bid the tails are, but they're usually bid relative to when volatility is low, because those cheap options can only get so cheap. So the volatility on them, I'm going to use big numbers, is 200. When the front options at the money are, under 20. What does that mean? Well, it just means that 10-cent option is now 12 cents. It's not that big of a deal. It's not really. IVR is what you need to look at for a good broad-based view on what volatility is doing on that particular product compared to itself. IVR, that one little thing right next to every stock symbol, is the one you look at. This makes for a good story. It doesn't do for anything else, in my opinion.
I agree. I think they're good. They're good things to understand and look at from time to time, but it doesn't influence my decision making.
Yeah, it's just like we just looked a moment ago. Say, you know what? Gold and silver are stronger relative to the E-mini S&Ps and the Nasdaq over the last 2 weeks. What does it mean? I don't know what it means for the future, but that's what it is. So if you're a gold or silver bug, you might say, hey, it's really strong. People are parking money in there. That's where they're going to the safer assets. I want to buy those, that kind of thing. Mm-hmm. Or you could say, you know what? They need to fall further. I need to sell those. It doesn't mean anything. It just reiterates what your assumption might be.
Next slide, please.
I have heard the term price extreme used on the show multiple times. What I haven't been able to figure out is what that actually means. And how I can recognize them when they happen. Explain to me.
I mean, I think it's sort of a personal thing as much as it is just looking at like where markets have been. I mean, I consider price extremes to be recent price action. Like, a stock has been trading between 100 and 200 for the last year, and now it's at 95. I would call that a price extreme today, right? I mean, we have gone past a low or past a high. That's just price extreme based on my trading and how I trade, which is not on a long duration. Some people might look at NVIDIA and be like, oh, well, it's at a massive price extreme even here, because 5 years ago it was trading at $20, and that's just not how I look at markets. So I look at markets in the tradable near term, and so I would say NVIDIA is kind of at a recent price extreme, right? It was 220 or 215, a week ago, and now it's at 180. That's a 20 or 30 or 40% down move in the recent time frame. It seems like a price extreme.
Yeah, I always say my price extreme is a 45-day time frame, because like you, I'm trying to do something within 45 days. You can go 10 years, you can go 5 years, you can go 5 minutes, but mine 45 days price extreme, just highs and lows, very simple, not too complex. I'm not a complex guy, you know that.
I know that,
Nikki. Whoever your name is.
Next one here. Good job out of you.
Thank you.
Recently, there have been a number of sports betting scandals. Because of that, I've heard comments in the news that this is why sports betting will never become legitimate. But if you look back in the history of equity markets, there were and are times when scandals hit. Do you think these scandals matter long term for the future of sports betting, or is this just part of the maturation process?
I love the way this question is worded, because I would have, if it wasn't worded like this, I might have answered completely different. They make great arguments here. I think it's completely, I guess I shouldn't say completely. It's the same freaking thing. Like a thief is a thief, whether it's selling you an automobile that you buy used and doesn't tell you, its past history or masks its past history? Does that mean the whole automobile industry? And I know it's a bad example because the automobile industry is shady at AF. You were actually in it at one point. Listen, it's only as good as its weakest link. And when you've got a market that has regulation behind it and firms like Tasty and Robinhood and everything else get audited all the time, and the system itself is 100% rock solid. Now, are there cancers in between there? Are there? Always. Sorry, that's just human nature. Completely different than what you've got going on in sports betting, but I think.
Yeah, but it's not the infrastructure that's the cancer. The cancer in markets is insider info and politics and all that sort of stuff that is
illegal stuff. It's illegal.
That's illegal, yeah. And so is the stuff in sports betting, but sports betting is, and with what
you have no recourse. Like you'll win a bet and they'll say, well, it happened. It has to happen before 3 p.m. It happened at 3:01. They'll skew it.
There's nothing in NVIDIA that you're gonna do where you are gonna be disadvantaged or lied to or something is mispriced or it's a fake price or anything like that. Like that is a market where, and the stock market as a whole is like that. You watch a sport, a UFC fight, and it's kind of now questionable whether what you're seeing is entertainment or
whether it's WWE wrestling or if it's real. Yeah.
But markets that does the system of markets isn't susceptible to that. It's not possible in liquid, massive markets. In something illiquid, that some sort of penny stock, maybe things can be, manipulated, but not in the broad-based market.
100% correct, son. That's our last question. Let's take a quick 90-second break. We'll come back. We got Jamal. He's going to talk about all of this week, last week, see what's coming up next week. We'll be back in 90 seconds. Let's Tasty Live.
Beautiful.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Niggy, we are back, son, and you know what that means. We are joined by my friend and yours, Jamal. How are you, my friend? This week in stocks, you got a lot to talk about. Man, you could just talk about, yesterday into today.
I know, right? I mean, a lot of it is built around that. Yeah, I mean, I didn't really see this one coming. A lot of times you feel like, things are going to get scary. You feel like the setup is there. And we've seen the setup be there so many times this year, right? And it just hasn't followed through. But today looks like it might be some follow through.
Yes. Today it does seem like it's following through. I think the only thing we have in our camp from not having a follow through, if you're in that camp, is it happened overnight. Like, I like when lows are made before the market is open, for the market to get its feet underneath it. That's kind of what I look for. Intraday, man, the market can move wherever the hell it wants, but it makes these lows overnight. It seems to be a buying opportunity, but we'll find out for the day. Let's go to your segment and see what goes on.
I mean, look, I tend to agree with you, but it does feel a little weak, and we need some positive thing to save us. I mean, there's plenty of times like,
well,
to
it's
your
not
point,
Taco Tuesday, so you're not getting that. Could we have like Fajita Friday or something?
Maybe Fish Friday.
Fish Friday. All right, there we go.
No, but it's been a wild week, man. I mean, you see, Bitcoin has been struggling most of the week. We've broken through meaningfully to the downside there. Broken through 100K. Gold was the thing that seemed to be back, and to see gold down today, I think that's one of the reasons why I'm pretty pessimistic. When you see gold down as much as it is, you see the S&P down, and obviously Bitcoin has been following the S&P for the most part. That's probably the thing that makes me the most nervous, is seeing those three down in such a meaningful way. You know what I'm saying? Like that one.
But we were talking a little bit about this before you came on. I mean, relatively speaking, even the S&Ps were just a skosh off of their lows from last Friday, as gold and silver were making their lows too. And gold and silver have only retraced half of their move from last Friday's lows to today. So what are you in the camp of? You think gold and silver are going to have more of a move lower with the market, or you think the market's going to catch a little bit of a bid and go a little bit higher, like gold and silver have?
Yeah, I think things are going to go lower. Yeah, I mean, if you're pressing me here, Tony, which it seems like you are. Yes, I think things are going to go lower.
All right, that's what I wanted to hear. Yeah.
So what's our low? What's our buying spot? Because you think we get like kind of a flush out in the morning and that's kind of it, or is this continuing into next week? You got, option expiration next week, so you're probably going to get a little bit higher volumes, a little bit of rebalancing. You have a holiday coming up and a lot of holidays through the rest of the year. Is this it kind of gives you the like this is a good spot to kind of nibble on some long delta here going into low volumes, Santa Claus rally, holidays. Is that your feel, or you feel like we kind of are going to chop here?
No, listen, I always think it's fascinating to at least try and nibble, right? Like, it's always, because you just never know. Nobody knows anything. Nobody knows exactly how this is.
Don't waffle on me, Jamal. Don't waffle on me.
No. But if you're asking me what I'm nervous about us ending on the lows on a day like today. If you remember, we did the same thing last Friday. We just bounced towards the end of the day. It looked ugly then too. So really, it's not so much what I think, it's what I'm nervous about. What am I positioned for? I'm already positioned for us to bounce. I mean, that was the position, but what am I nervous about? I'm nervous about us ending on the lows here. And look, it's bears mentioning, like, I've been saying this all week. None of us cared about the market, not the market, but the government being shut down. There was no reason for us to. It didn't affect the market until last Friday. That was the first time we saw the market get nervous about it. And we saw, the airlines in particular. And throughout this week, we've seen a rotation, if you've noticed, like into healthcare, into some of consumer staples a little bit, stuff like that. It's been out of the AI-related, tech-related names. We know that throughout the week. And so that rotation has taken place to some degree. And for the most part, that's all it really was a rotation. It just so happened to seem like it was ugly because, well, a lot of the stuff that has been coming down is the tech related stuff and the nuclear stuff and the energy names, right? And so, but there's been the rotation in the oil. You see oil bouncing back today. That's probably one of the few things that are green besides volatility futures. I mean, other than that, it's mostly red. And so I think just seeing the market down decently yesterday and then again today, and then you see gold now down for whatever different reason, which again, there's been times where the three of them, gold, Bitcoin, and S&P have followed each other. Gold broke out of that over this week and it was doing its own thing. But to see that down today makes me a little fearful for the rest of the day and how that's going to play out.
Let's get to your slides, my friend.
I'm kind of on the other side of that where I like the fact that we had a little bit of a rotation here and that the market has remained kind of calm, so to speak, given these huge moves in, the tech names that have kind of led us this way. It feels kind of like that's healthy, but I don't know. We'll see on the open.
What are we thinking about everybody's foray into prediction markets? What do we think about this?
Ooh, I think it was an inevitable thing to happen. I think I don't know how strong the markets are going to be. We'll see how liquid the markets are going to be. I'm pessimistic on how liquid the markets are going to be, but I'm optimistic on the overall play of it. I think it's a good thing. I just don't think it's. I think it's going to be like the 1,000 ETFs we have. You'll only be trading 5, 10 of them, and the other 995 will go by the wayside.
I mean, you can look at it like Bitcoin. I remember I was actually, when I say everybody, I mean, let's just talk about, our partners, even exchanges. When I was working at SIBO when Bitcoin became a thing, and they were the first ones into it. CME was not far after. Not too many brokerages were doing it yet. And eventually CME took it and ran. Eventually SIBO dropped it. But we saw the adoption happen. It took some time and eventually became a thing. And so I feel like you're watching the beginning of that too. This again, they're at the forefront. These two exchanges are doing it now, and brokerages are doing it. I mean, it's becoming a thing. It's just kind of interesting to watch it permeate through. But I mean, people like it, right? I mean, even when we do polls on the chat, people like stuff like that. They want to see stuff like that. It's always been interesting to them.
Very good. Very good.
I think it's good that we got the exchanges on board. That was kind of the discussion that we had with Vanetta. It makes it a lot more accessible. It'll be, I want that I want my everything app. Mm-hmm. I'm waiting for sports betting. I'm waiting for prediction markets to be more regulated and kind of incorporated. And then, you'll have a tasty, I mean, imagine if you can also put your, Bears to win the Super Bowl bet on the platform here and trade that. That would be fun.
Right.
I mean, that would trade at pennies on the dollar now, but I guess it's gotten better over the last couple weeks.
Well, let's play prediction markets here. We're at 6,700 on the ES futures. Higher or lower? What do we got?
Like I said, I think
today are we going to end of day?
Sure, let's make it end of day. Might as well.
I think we end higher.
Well, you guys, I listened to you yesterday on the close. You and Mikey, you were both pretty bullish. I thought it was a pretty bold call to make, not in hindsight that we're lower. I thought we would oscillate around. I didn't think we were going to go anywhere one way or the other. That would have been the way I would have talked about it on Thursday's show at the end of the day if I was on. So I would have been wrong too. I'm not sitting here saying the same. I like that.
Don't waffle on me, Tony.
Yeah, right.
I'm going with you right now. I like that we made the lows, I mean, we're 20 handles off those right now at 66.77, closer to the lows of last Friday. I think a lot of people are looking for that, like the Tom Sosnoffs of the world, which they'll never get. So I think we might get a test.
He's looking for a 5 handle. He wants us back to April.
Yeah.
He wants the black swan.
I don't think you're going to get that today. Volatility is already off by around 30 cents. I think we'll have a little bit of a move lower right after the opening. Like this will be a kind of a relief rally, which is only 20 handles. I don't think it's a relief rally. They got to suck everybody in to sell them a little bit more. Maybe we'll test these lows. Maybe make a little bit of a lower low today, intraday. But I think we close higher than where we are right now at 66. Let's just call it 6,700. I think we close higher than that for sure. I mean, for sure is what I need.
I'm talking my book.
I agree with the beginning of your thesis that we bounce up into the open, and then I think at some point we touch the lows in the afternoon. I'm going to say we're going to close closer to the lows.
Ooh, I like it. That's what makes a market beautiful.
That's what makes a market.
Good stuff.
Yes.
That's all I got.
All right, very good. Let's take a quick 90-second break and come back. We got more Tasty Live with the opening bell next. We'll be back in 90 seconds.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nicky, we are back, son, in about 1.5 minutes. Even the S&Ps will officially open. Start your engines. Even the S&Ps down 67.5. NASDAQ down 370 and change. Nothing's really moved too much. Volatility up 50 cents to 21. You can see here at the high end of its range. No matter what the market does today, I would be very surprised if volatility comes in on any of the positions that you have for over the weekend. You are not going to get paid today for Saturday or Sunday or anything else like that, in my opinion. Very similar to what happened last Friday when the market stayed bid until the very end of the day, when the market rallied, and then volatility really, we had a 100-point rally on the E-mini S&Ps the last hours of the day. I think you're going to have a market that's similar to that today. I don't think you'll get that magnitude of the move higher, but you never know. I mean, even the S&P's expected move for today, let's put it in real context. It doesn't matter what I say. You're looking at around 50-ish handles. Yesterday, we looked at around 38, and the days before were around 24. So volatility has expanded. The IVX 5-day change in all of these products is going higher over the last 5 days, and all of your stocks too. So you're not getting paid on a lot of premium, but you are getting paid now for opportunity. Like, what do you want to do in the market? You've got a lot of things here on the platform at your disposal, whether it be gold, silver, which are both lower this morning. Gold now by 3 1/3%, down 140.
There's our bell.
There's the bell. Bells.
I would like to
silver down almost 5.5%. To Jamal's point, quite weak.
Yeah, I would like to see a little bit of downside move here in the NASDAQ, and then we maybe scoopy a little bit of it. 24/7, maybe we get another 40 or 50 handles from here.
NASDAQ off of its lows by about 190 handles or so, still down 1 1/3%. I'll go to even the S&Ps, down around 1%, down 65 off of its lows of 66.77. Russell down 27, Dow down 400. Bonds are up 8 ticks, 117.11. Bitcoin seems to be the culprit. We talked. The one thing I will say, I've been saying it all week long, and actually for the last 2 weeks. Even when the market caught a bid, Bitcoin did not catch a bid. Like the crypto has been a seller's market. Every rally has been met with a sell-off, trading down to 94 and change on the futures. It's 95 and change right now. Bitcoin really seems, and cryptocurrencies really seem like they've gotten a bigger bear market than the overall market itself. Here's the E-mini S&P down 73 now, getting a little bit of a sell-off. Go ahead. You just did something?
I just bought NASDAQ here, the micros at the 24,702. So I was looking at 24,700 as kind of a spot here. Maybe play for a little round number bounce. Small, but playing for a little bit of a bounce through the end of the day. You do have volatility kind of picking up a little bit, which is spooky. But underneath the surface, like I was expecting to see a little bit bigger move in some of these stocks. I mean, Meta down 10 is a big move. You've got, Hood down another 5. That stock's just gotten killed. I got some long delta there. Coinbase obviously getting killed on this move in crypto. Nvidia is down another $5 here. 180 has kind of been a spot. That's kind of bounced off of over the last couple months. So maybe there's a little bit of a floor there, but it doesn't.
Talking about these are extremes for that emailer or what we talked about on confirming.
I would consider them extremes. Would you?
Yeah.
I mean,
I definitely consider it extreme, especially to the overall market itself. Yeah, 180 on Nvidia, and here we are making new lows on the E-mini S&Ps, are right at the lows of 77 and changed as foretold. Now we'll see what happens to the market. Volatility, that's what you got to key on. 21, in my opinion, 21.25. Let's round up right at its highs. We got to see if the E-mini S&Ps continue to go lower. If that catches a small little bid there in the overall market.
I got another NASDAQ there.
I got you. You're just trading the M and Q. So you're just trading
small.
Small, yeah. 650 just to show you how much things move. 650 and 25. Yeah, basically 650, 25. Yeah. Their lows are around 27, 28, where they are now. They're down 460. Even the S&P's down 88. We will go to your phone calls today around about an hour from now at around 9:30. We'll see where the market is then. You have any questions, we would love to hear from you. Let's go through some of these stocks that are getting hurt here right now. Goldman Sachs down 24. Again, I was going to answer the question from extremes. Yeah, Goldman Sachs at 780 after trading up to 840 or so. Not quite the extreme as what you were just looking at a moment ago or anything like that. Like Meta trading at 590 down 12 is not an extreme down by its lows of 470, but it certainly seems like an extreme when you're looking at it to the overall market or anything else like that. That's what we talk about extremes. It's just price. It doesn't mean anything else in this price. Where have we been? Where have we going? Silver, what are you doing here? You looking at?
Yeah, this was a what's your assumption trade that we did. So I was short silver and then short the 47 strike put in the November monthly, so expiring next week. That one, it's a small. I mean, I wish I was just short the ETF outright. That would have been a lot better than a covered put. But took $80 out of that pretty quick. I mean,
yeah, you're talking like the covered call holder who like buys the stock goes higher too fast, and they make 30, 40, 50% of what they could make, but they want to make 100% because they got the move. I mean, stop yourself, okay? Pump the brakes a little bit.
I know. It's funny because I took $2 a heat on the upside. The moment I put that on, silver was up 1%. And by the end of the day, silver was up 3 or 4%. And I'm out 150, $200. And I'm like, oh shoot, I stink. And then it goes the other way. And then you forget about that.
And all of a sudden now you didn't make enough.
To your point, when somebody's selling the call, it's usually because they're scared of the downside and they're trying to hedge a little bit. And then the downside, you get a little bit more of that and you're like, oh, thank God I have this call on. And then stock comes back and it goes the other way against you. You got to be able to take both sides there.
As foretold, even the S&Ps make that low from overnight again. Now we got to see if it really is correct, or if only correct for 5 minutes, where that is the low in the market for right now. We'll see. Volatility trading just over 21 now. It's given up 35 cents. We'll see if my prophecy was correct, where we make the new low or flirt with the lows from overnight, which we did. We went 7 handles.
I'm going to scalp out of one of these. I just scalped out of the NASDAQ and I closed out of a position that I had in AMD. It was a shorter duration crab trade. So I did this long the December 250, short 2 of the 260s in the monthly expiration expiring next week in AMD. So I took $200 out of that trade. That was a nice little, couple day trade. And then I just scalped out of one of the NASDAQ contracts, which has moved. So I bought one at 700 and then I bought one at 650. I just closed one at the 726. So that nets me out at like a basis around, it basically puts me at 675 is kind of my sweet spot here. I might even close a second one here with. Nice scalp on the NASDAQ futures. Bought them at 650, sold them at 726 or so. You also bought them right around 24,700. Now you just sold them out at 794. So good scalps on both of those. Good scalps on your father's low that he predicted for you. Even the S&Ps down 65. They are now up 25 handles from that foretold low. My job here is done. I would like to close right here on a high note and not have to come back for the next segment, which is fast market, by the way. It's beautiful.
These prices are going to be all over the place.
Yes, for sure. Yes. That was a good little scalp. We took a couple bucks out of that.
A great little scalp. It was a great little scalp.
I have positions that are like all over the place. Like AMD, that was a big move here. I'm trying to look at you got HIMS moving higher, I guess. That's kind of helping a little bit, but
I mean, I don't know if HIMS is going to save the market, right? I mean, let's take a look at what is moving the market. If there are any bright spots, and by bright spots, I mean green on the board here. They're few and far in between. I'm not going to look at DoorDash, you millennials ordering food.
No. I don't do that. I'm cooking soup every day, dog. Come on.
That's what I like to see. That's what I like to see. Humble. I like it. I like it a lot.
The question I have here is I had some of these. I think I'm going to close them here. We're gonna get a little bit of long delta, synthetically long delta, because we're just closing short delta here. But I have some diagonal spreads. Like I had one in the Qs here that's $500-$600 winner on this. So I'm gonna close this out. And this is, we've talked about this before with the smaller size account, which, this isn't a Sosnoff sized account, everybody. We're dealing with real money here.
Well, he was dealing with real money too, but it was his own. So it's a lot.
It was just infinite in most regards. For most people, it was about an infinite amount of money. As close as you get to that.
Yes.
So some of the, I get that question all the time. Is like, I have limited capital. How do you get short delta or how do you get long delta? If you take off short delta via, whatever position that you have on that's a winning trade or a losing trade even, and it's a short delta trade and you're buying to close that trade or just taking off that short delta, you are synthetically getting long delta in your overall portfolio. And so by doing that, you can you can get delta without putting risk on, which is what you got to kind of do when you have limitations, which everybody has to some regard.
Very good, my friend. Even the S&P is down 66.
Look at this. Micron is up $4 today.
Yeah, Micron.
Did you have that in your deck of cards there?
I did not have Micron up $4 today in my as foretold deck of cards. Is that what you're referring to?
Yes. Exactly.
No, I did not. I did not have that. I did not have that at all in my. I will tell you this though. My Taiwanese sources just told me 800,000 SPY options have traded already today. You're not going to get that kind of volume in the predicted markets with that kind of liquidity, with that kind of movement, penny-wide markets. You're never, in my opinion, going to get that. That's the markets that you should be hanging out in. That's where you should be staying. Now you've got this tug of war. We're right at 6,700 on the E-mini S&Ps.
I closed my last NASDAQ, so we scalped them good.
Yes, and a good little scalp.
Yeah.
You're right at 6,700 on the E-mini S&P, just a skosh under, just about 24,800 on the Nasdaq. Nasdaq relatively weak compared to everything else. Nasdaq down a little bit more than everything. Everything's down around 1%, well up at its lows.
I'm gonna take off. Yeah.
I don't know what else. I don't know what else I could do for. I mean, do I not amuse you?
No, you've been amazing. I mean, your performance, it's stunning. It's stunning. It's beautiful.
Funny, but I have somebody who would like to dispute that for you. Some inside information. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We're going to go right to Fast Market. I can't wait to see these prices. Cool. This is going to be fun. We'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade. Right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tasty Live. That's right. We got more coming up with Fast Market.
Fast market. Certainly a fast market today.
Certainly a fast market today. Even the S&P's up, down 53, NASDAQ down 245, Russell. They're all now down less than 1%, except the Dow, which is down 1%. Russell's only down 0.5%, 12 handles. Even the S&P's down 53, going to the one-day expected move on the even the S&P's is now 49 from 54. Still elevated, still high. Volatility only up 35 cents to 20.85. We made a new low on the even the S&P's intraday right here on the opening 66.70. We're 67.08 right now.
Look at vol though. I mean, volatility, and you have Bitcoin and ETH kind of bouncing as well. I mean, volatility. Speaking of VVIX, which we were looking at, we had a question on this morning. You know, it's expanded, but vol hasn't, and we even talked about this yesterday, Mike and I. It wasn't like this felt like a panic. Like it just kind of felt like it was just a liquidation, a little quick like sell off kind of. It was pretty orderly yesterday. It feels that way today, and you got some stuff kind of moving in both.
Not too much green on your screen though when you look at that. Even the S&P down 47.
Yeah, I mean, you got the microns of the world. Like, you figure that you're going to finally get bailed out on this short delta, and it's up $10 on a day that the rest of the market's down 1%. It's like, that's the randomness that you love. And that's the traders market that we've had this last couple months has been, very two-sided. It's been great.
Yes.
All right, let's do it. Fast market. We got a couple trade ideas. Let's get all these things on. We can get these.
I'm ready to go.
Yeah, we're ready to. All right, let's do it. Oh, you give us the music again. There we go. Oh, God.
Oh, boy.
This one's had to have moved pretty big. I mean, so the gold-silver ratio based on today. So today we had, I don't have my watch list stuff. So we got gold down about 3%, silver down 4.75%. So this has moved almost 2% just today if you were in this position. So shout out to Zophius on Reddit.
Yeah, looks like it.
Because you hit it perfectly yesterday. If you were short silver, long gold, even though the gold move today is painful, if you did this equally, which it looks like you did.
1-to-1 ratio you're looking at?
They have it at 2 silver to 3 gold.
Yeah.
And I'm assuming that's a pretty close. That's exactly what you would want it to be at.
Mm-hmm.
I mean, so you hit it today. I don't know if I could do this today on a 2% move.
Yeah, so I'll put it up there for you. I'm selling 2 silver buying 3 gold. I'll put this up there on the screen for you so you can see it. I'm just using the pairs trader just so you can see where it is. And here's where it's been a great trade for you. So I agree with you, son. I don't think you can put it on, but it's been nice.
Yeah, I missed that one. Send me that sort of trade early next time. Come on. But good trade out of you.
You're a great trade.
I like it. Next one, please. Nike. Oof. Nike rallied today, even with the market tanking, IVR climbing. So betting it ranges, selling the 72.5 strangle into December. What do you think of this stock?
Ooh, Nike, NKE.
What about just doing the puts?
Sure, earnings are December 18th. You certainly can. I mean, Nike hasn't really fallen out of bed like the rest of the market. I mean, Nike fell out of bed way before the market. So I like it. I'd be rank a 41.
I did the strangle. I went to the 72.5. So I moved, I'm sorry, the 62.5. Yeah, 62.5. So I wanted to lean a little bit long. The stock is basically at lows. So I did the neutral position with a slight long delta skew.
Yeah. Very good.
So we're in 374.
Beautiful.
I will get that out there. I like it.
Yep. I like it too.
Costco. All right. Costco held strong in today's sell-off. It did yesterday. It was one of the only stocks that was up a couple bucks. 900 looks like a bottom, selling a put spread. So the 905 short put in December, 50 points wide. Big boy trade. I like this. I have a call diagonal spread that's long January, short December. It's up a couple bucks, or was. It's kind of now flat net. But I think we could add a put spread here. What are you thinking, Pops?
Sure. I don't mind that.
They're looking like close to at the money. You want to move this a little bit further out of the money just because we already have some long delta?
I like it.
What do you think, like?
In Costco?
Yeah, 20-point wide. Probably more.
I think you have to go 20 to, I mean, it's a $900 stock. You know, I think you have to go $20, $30 wide to get any squeeze.
Yeah.
Squeeze. I agree with you.
They're going 50 points wide, which I think is if you're comfortable with that amount of size, I think that's probably where you have to be. And I think in a normal situation where we didn't have already long delta here, we would go to that 50-point wide.
Yeah.
Given that I've already got some long delta here, I'm thinking maybe a 20-point wide, a little bit further out of the money. So I'm looking at like 870, 850. So going to around the 25 delta for the short option, 20 points wide. It trades at, or at least the mid price is somewhere between $4 and $5, it looks like.
Okay.
Which is a little less than 1/3 the width of the strikes, about 1/4 the width of the strikes, but you're only doing one side here, and with 35 days to go till expiration. What say you on that?
Do it. I like it.
What do you think we go in at, like maybe like 440-ish and work our way down?
Yeah, I think you got to go in above, and because markets in Costco are so wide, you don't know where it's gonna trade.
It's you usually got to go a little bit below the mid price here.
Yeah.
This market only down 38.
Yeah, we say only down 38. That's a significant move, right? But not pales in comparison to the overall market, to the overall movement that we've had so far in the market is what I should say.
All right, I'm in at 405.
405, just to let everybody know that you started at 420, which was a little bit above the mid price, and you got filled about a penny or two below the mid price, which was around 407, 410, something.
I started at 440 and worked my way by nickels and finally got filled. So that one's in. I like it.
Nice. Thank you. Good work.
Next one. Ooh, 0-day SPX. How do you feel about that today? This is Eric in Fort Collins, Colorado.
Wow.
They are canceling the crash here. So Eric is canceling the crash, just selling the 30 delta put spread, $30 wide. If you did this on the open.
If you listened to the bat and it echoed what you thought, Eric, then it was a home run trade. I think that play is over with and done right now.
Yeah, I think if you put this on the open, you're probably looking at managing a nice winning trade here, and I think you probably just
you already have the nice winning trade. You're already in it. Yep.
Yes. I think you take the money and run. Great job out of you,
yes,
Eric. I don't know. I agree with you. I don't think we can do this one, but we're in the same thinking as you. We scalped some NASDAQ and got some money out of that. So I'm with you here. So we're gonna pass on this one, but good job out of you, Eric.
Great job out of you.
Oracle selling puts in December, or maybe a Jade Lizard or Strangle if you want to cover both sides. Budalai. This is Reddit.
Boodalicious, we'll just call him. I figure you can't get the
Buddalicious. Oracle, what do you? Oh, John, come on.
Man, Oracle. I already have some long delta in Oracle. Oracle is the pig of all pigs.
Yes.
If you look at the play a little bit, it is off of its lows today, but everything is off of its lows today. 210 was the low. It's 214. I love the IV rank of 92. It warrants a trade with earnings coming December 8th, but it does not warrant, and it doesn't have the markets, like the liquidity in the markets, to add to the position. Like if you wanted to add to an SPY position that you may have had long delta in, I get that. Markets are tight and liquid and good. You can do anything you want. Oracle,
you don't want to get more long?
I do not.
We're short the 200 puts, so we're here with long delta in spirit with you, Bootylicious, but we're not going to add to the position here.
Yeah,
but I mean it certainly is interesting.
It's a much better spot than what I did.
Oh yeah. But to your credit, that put hasn't moved all that much to now being at the money. Like that volatility has expanded. Obviously, the stock price has come down lower, but it's the skew has still been to the upside here. So the puts haven't moved all that much. I mean, you're out a couple dollars. Not nice. It's not a nice position.
Not a nice position. I did it when the stock was 250. The stock is 215. So the stock has moved $35, and I'm out about $6, I think, or so on the trade. Stinks.
Yeah.
Stinks. I stink.
Nah, it's okay.
But you can handle it.
So we're gonna pass on that one. Next one, please.
Mm-hmm.
DraftKings. Oh God. Neutral to bullish, December 27.35 strangle. This is Chris in Asheville, North Carolina. I have some long stock in DraftKings. This goes back to a put that I had before the bat and bats took over. This was an option trading concepts live position that I just took assignment on a naked put. I was like, how low could it possibly go? I did the same thing in CMG. I sold puts into that earnings, and I was like, the stock's at lows. How much worse can it get? And then the stock dropped 20%. So that stinks in both of them. But I have some long delta here. You're looking at the 27.35 strangle. 27 is the at the money strike. You got funky strikes to the downside just because of how far this has moved. The 37, I'm sorry, you're doing the 35 call. Man, this.
Neutral to bullish, 27.35 strangle in DraftKings, DKNG.
What do you think about doing? So I have long shares here that are pretty much underwater. I mean, I'm long shares at like 40.
Just naked long stock?
Yes.
Okay.
Yes. Would you go? What do you think about doing the 27.32, and we'll sell 2 of the 32s? So this basically puts us in like kind of a pseudo straddle, because you'll be short a put. You're short the strangle, but you're also long a cover call. So you have basically a straddle type risk profile here. And if we get up, to 32 and change, we're collecting like $3 and change here. 32 would be a blessing, because you make $2, $3 on the upside move in the stock. I'd be getting out of this position if we get to 32.
Sure. I like it.
All right, 317. I'm in. So I did that 1 by 2. So I'm with you in your thinking, Chris, but I have to adjust this a little bit to what my position
because of your priors.
To my pain that I already have on in this stock.
Beautiful.
Cool. Let's do it. Next one. Oh no, INQ selling the 50 straddle. This stock, is this still at 50 right now?
Let's
up $2 today. Wow. Okay.
Well, I mean, this stock has gotten hammered too. I mean,
not as much as like Rigetti, which is
well, it's gone from 80 to 47 where it is right now. And,
I guess so.
And that's in a month's time. I mean, it got cut in half in a month. That's significant in my eyes.
Yeah, I mean,
I don't have your kind of money, but if something's down, 50% in a month, I mean,
these stocks were penny stocks like 6 months ago. Okay, that's why it's not that big.
If my aunt had testicles, she'd be my uncle. But I mean, it's we can't. It's only here and now. The last 45 days is what I'm looking at. That's significant.
Do you want to sell a straddle here? What do you think?
Every stock was a penny stock at one time. I mean, IBM was a penny stock at one time. I mean, how far back are you going to go to validate yourself? You sound like the other guy that used to sit there. What do you want to do here? Sell 50 straddle?
Wow, shade being thrown.
Well, the 50 straddle would be a long delta straddle here, right? Stock's up $2 if he wants to do the 50 straddle.
Well, what do you think about the $5 wide strikes on the upside? Makes it a little tough. What about doing like
the overall markets make it a little bit tough in here too. I mean, they're 50, 60 cents wide. I mean, it's only a $40 stock.
What do you think about the 40-60 strangle?
The 40-60 strangle.
Yeah.
40-60 is, yeah. I mean, the 60s are around a 30 delta. The 40s are around a 25 delta. It's a little bit, I don't hate it. I just don't know where you're going to get filled. I mean,
yeah.
I don't like the liquidity in here, to be quite frank with you.
Yeah, they're 30, 40 cents wide.
Yeah, I mean, I would probably abstain, but that's
all right. Yeah, I think it's junk. Josh, Boulder, Colorado. Thank you for the trade idea. I think we're gonna pass on this one though. Liquidity, not what it used to be.
No, not at all.
Not in this one.
No.
Cool. Coin. I think we got all we can handle in coin here. Stock down only $1 now. It's bounced from the lows. It was at 263 earlier this morning. I've got a short put on. We got a call diagonal spread. So we're locked and loaded here. We got some long delta here. You're looking at an iron condor, 250, 240 on the put side, 340, 350 on the call side. What is that? I mean, that's pretty wide.
Yeah, that's the name of that tune.
If I didn't have, I would have expected this to be out of the expected move, but the stock has about a $57. Oh, I'm looking at January.
Yeah, you're looking at January. Coin in December has a $42 expected move, almost 43.
Yeah, so you're right at the expected move on either side.
Yes, you are. Yes, you are.
I think if I didn't have a position on already, that was a little bit heavier than I anticipated it being, given the move that we've had in Coinbase and crypto as a whole. I would be looking at something like this. I like the setup. I'm just already locked and loaded here, so I think we got to pass on this.
And markets stink in Coinbase too. No matter how much play it gets, markets stink in Coinbase.
Yeah,
you got to stay with liquidity. I think that's another thing that we harp on, but we don't hit enough on. Yeah.
Mm-hmm. So I think we're going to pass on this one. Damn. I guess this is what happens when you get kind of whippy markets.
Yeah.
A lot of the trades that are coming in are kind of a little bit skewed. We had the gold silver pairs.
Don't worry. I just looked into my crystal ball. You're going to get another chance.
Okay. Thank you.
You're welcome.
Rivian, slightly bullish. IVR is relatively high. You got a 57 IV rank. You're selling the 17 straddle in December for $3. The stock had a nice rally. I don't know if was it an earnings move?
It was an earnings move.
Yeah, it moved from let's call it 13 and change to 18. Now it's kind of come down in the middle of that.
Yep.
All right. So the 17. So this was based on probably yesterday's price. You were leaning
the stock down 80 cents, which is a decent sized move. I mean, it's almost a 5% move on a stock of this magnitude, which means it's a $15, $16 stock.
I was looking at the 15, 16, but that still leans you a little bit of short delta. There's some skew on the upside here. The out of the money 16 delta call, or the 16 strike call out of the money is a 49 delta. The 15 is only a 38 delta. So if you did this one strike out of the money, which is like the only available strikes with the stock right in the middle, you'd actually lean about 10 deltas short. So if you want to get long delta skewed here, you got to do the in the money straddle, which is what they're looking at. AJ is looking at. What do you think about the 16 straddle? How does that feel to you?
I mean, the expected move is $2 and change, and you're getting 260, a little bit more than that. I mean, this to me seems like you could do an iron fly if you wanted to. I mean, how much do you care about Rivian?
Not much.
Right. So
but these out of the money options are junky.
Right. That's what I mean. So buying them and defining your risk, does it really come into play for you that much? You know what I mean? So what are you gonna pay? 40 cents for the wings? I mean, kind of. I mean, you can go $5 lower and $5. I guess you can't. Stop. The out of the money option, the 21 strike is $2.77.
That's what I'm saying. It's like buying these wings is going to move this trade from a $2.60 credit to you're going to pay 40 cents for the.
Yeah, but you're looking to make 50 cents on this. I mean, you're not looking to make a lot of money on this trade.
Yeah.
I don't hate it. Markets seem to be liquid enough and tight enough to trade something. You want to trade a small thing like this? Sure. You want to support AJ? Go
what
right
about
ahead.
A covered call? Or you want to just do the straddle? And just take you want to take the upside risk out of it. You do the cover call. I mean, it can only go to zero.
Right. I look at so how about this? Instead of doing the covered call, let's just sell the 16 put.
Okay.
I mean, it's the same. If you're going to use the 16 strike, it's the same exact trade. You know, the stock is penny wide. I guess you could do that, but the 16 calls are 6 cents wide. I just put an offer in and just leave it there and let the stock come to you. I mean, the market's weak. This is down almost 5%, 4.5%. Just put your offer in and you'll probably get filled.
I put it in at $1.45.
Perfect.
That gives you a basis.
You bettered the offer by a couple of pennies, and now you sit.
Yeah, that gives you a basis around, we'll call it like $14.
Well, it would give you a basis.
I'm sorry, because you're selling the 16 strike. So 15 or 14.50 would be your
14.55. I know math is hard. 14.55.
Yeah. I was rounding, Johnny. Okay. Next one, please. My God. NASDAQ only down 100.
Yeah, only down 100. You could say that when the NASDAQ was down, 500. So today. So yeah, you're welcome. By the way.
Hey, we talked about how the NASDAQ stocks have been the weakest of the group into this down move, and that the rest of the market is.
Well, they're all down around the same, except the Dow, which has been the strongest. There's that rotation that you're talking about. Yes, you're correct.
Yes. All right, we getting long the Qs here. Short put spread in the Qs.
I think you missed it for today.
Okay. Do you look at it for like December? Do you sell like a wide put spread?
I would rather sell December than December is 35 days you're talking about? That would be where I would. Yeah. That's where we make all our trades.
Yeah, I know, but you're saying you missed it for today. I mean, the market's down over the last couple days. I mean,
down.
You missed the move.
Down good, yeah.
You missed the opportune time today, or at least so far today. But you're not missing anything here. What do you think about?
No. You still got volatility hanging out at 2092. Yeah, sure. Go ahead.
What do you think about doing like just a one standard deviation strangle here into this move? Or do you want to just do the put? You want to just sell the put?
No, I would lean a little bit. I mean, if you want to, they want to lean a little bit long here. They're bullish. So I would do like a 25 delta put, which is something like the 580. I'm sorry, in December you're looking at. I apologize. Yeah. Hold on.
Yeah.
If you're looking at December, you're going around. Let's call it the 570 put.
Yep.
And if you're going to skew it a little bit long, you can go up to around, I don't know, like the
645.
Yeah, 645s, which would give you a delta of around 6 or something. Leading a little bit long, selling a strangle, using the same amount of buying power, collecting $11.45.
That's exactly where I got filled.
Very good.
All right, so I'm in. I like that. I mean, I think yesterday Mike and I did on the close a wide SPX iron condor in the December monthly. Obviously, with today's pop in volatility and a continuation of that move, it'd be better today. But I think, looking at these sort of neutral short vol trades right now are pretty interesting, given that you've got a pop in vol. You got a 20 handle VIX. Like that's that's kind of what you're looking for here. All right, so that one's in.
Beautiful.
So that's it. It was a kind of a mixed day. This was more of a typical bat performance, 60%, but I think we got some good trades on given the way the market's moving.
We did in some of these,
Thank you, John.
Thank you. And because of the way the market has moved, we had a little bit of a subject to change attitude towards it. So I get it. Good job out of you. I think you did wonderful. You got a plethora of different types of strategies in there. So it was very good. And you've done that pairs trade prior too. So good job out of you. Good job out of the audience. We're going to take a quick 90-second break. Let's take a look at the market before we do here. E-mini S&Ps are down 38. NASDAQ is down 146. Russell is down 10, and the Dow is down 500 and change. The Dow, the weakest of the group by a 2-to-1 margin. Volatility 2080. Bonds down 7. They're the ones that have reversed. I don't know if you could say Bitcoin has reversed. Let's just call it mid-range for the day off of its lows. Ethereum actually turned green here, up 28 on Ethereum. Ethereum trying to save the crypto market. Oil back up to $60 where it was last night, up $1.32. Gold down 116. Gold has not rallied, so going back, and nor has silver really. I mean, it's off of its lows ever so slightly, but not returned like the market have. So that whole synopsis of what we talked about, like I said, you know what? I would not be looking to be buying gold and silver right now. I might be looking to buy the market. I was playing just the lower lows versus the one that hadn't sold off as much as the rest of the market. That came to fruition this time. Now we'll see if gold and silver can match what the rest of the market is doing. We'll take a quick 90-second break. What'd you just do in Amazon?
I just sold a put in Amazon. You're seeing a little bit of strength in kind of the big name stocks today. You got Microsoft actually up $1.30 and change here. I mean, this is more of the story that we've been kind of looking at throughout the last couple of days. Of these stocks have gotten kind of whacked, and if we're going to bottom out, you got to kind of get a bid in these stocks, and you're seeing it. Apple basically unchanged. Amazon, down $1 and change here. The 24 IV rank. I figure I just sell put into this down move. But, you're getting a bounce back in Tesla as well, NVIDIA. You look at some of the chip names. NVIDIA has moved $5 since the open. And it seems like, you kind of got that. You took some air out. You took some leverage out. You gave some people some pain. But it feels like they're coming for kind of those big name stocks. So that was my trade in Amazon, was that thinking. And then we just got filled on Rivian as well.
Good. 145 on the put. Beautiful. Yep. All right, let's take a quick 90-second break. We'll come back. We got more Tasty Live with a market measure next. We'll be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with this market measure. Even the S&P's down 42, NASDAQ down 170, Russell down 14, and the Dow down 500. Volatility up by 32 cents.
What can we do in Tesla here?
Yeah, we talked about that pre-market, I think. Tesla down around $7. Tesla got as low as $382. It's about $10 off of its lows. It got as high as $398. What can we do in Tesla? No earnings looming. Obviously, December with a 63, January with a 62. You could do one of your classic diagonals in this $400 stock if you're looking to
That's kind of what I was thinking. I was looking at a put ratio spread, but it uses...
Put ratio spread would work good. IV rank of 21 is pretty good. You're going to use much more buying power, but you'll have a much higher probability of success and a wide. You could do a wide one. You could probably $15 wide. If I looked at your 1x2, you could do like the 45-30, and you can get yourself around $3 in credit. Not a bad way of looking at it. Your break even would be below the 10%. That's why you've got an 87% pop. I like your 1x2. You're using more buying power, but I like your 1x2. I mean, you can go $20 wide and still collect $2.
Yeah, let's do the 20, but let's do the 350, 330 at $2. What were you looking at? Which strikes were you?
I was one strike below you. I was 345, 325. It doesn't matter. 350, 330. It's the same thing.
Yeah. All right. Let's do the 345, 325, and we'll do that at $2. We'll see if we get filled on this.
That's moving a little bit against you as the stock goes higher. You'll need a little bit of a downtick.
$1.98.
198. Got it. Mm-hmm.
Cool. All right.
Filled right at mid-price. Basically 15-cent wide markets on each side. That mid-price is going to be accurate on. By each side, I mean each option had a 15-cent wide market. Mm-hmm. So that mid-price that you get is going to be good. If one market had a 50-cent wide market and the other one had a 15-cent wide market, that mid-price is subjective to change because it's bigger on one side than the other. So you got to look at that when you put on the trades.
Where's our spot in NASDAQ today to buy it? Because you think we get a little bit of a move lower at
I think we missed it, but I really feel like we're going to get another opportunity. Not, I don't think we'll be down around, 24,600, another 300 handles lower than this, but you might get a 200
800, like 800-ish, 24,800.
Yeah, or 750, 750, like a 200 handle move lower than here.
Yeah.
And I hope we don't get it. You know what I mean? Like, I played it for the new dip lower, and I don't want to be tested anymore. I want to be done. If that's okay with you.
That's fair. That's fair. I'm positioned for that, so I agree.
I think you'll see even the S&Ps, maybe you get a chance to watch them down around another, 30 handles from here, 25, 30 handles, down 60 on the day. But I don't want to see that. Like, you know what I mean? Like,
you rather it be done.
Yeah, I'm cautiously optimistic.
Me too. Volatility.
But it's too early in the day, 9:19.
Yeah.
I think it's too early in the day to be done here.
I agree.
I don't know. We'll see. We'll see.
Market measure. Let's do it. This is a cool one. This is an interesting one. This is one that puts a lot of context around risk and naked positions. We always get that email or question about, naked positions. It's undefined risk. How do you quantify that? Obviously, if you are afraid of the undefined aspect of the risk, the call side is where that risk is. Stocks can only go to zero, and there's, certainly a floor, or at least a perceived floor, in a lot of the things that we trade. I would hope my Amazon put doesn't come into a situation where Amazon goes to zero. I think we'd have a lot bigger problems than the dollars that I would lose. But overall, we're going to look at here with our market measure, what makes buying power a reliable risk gauge. So we're going to look at just risks relative to buying power here to give you an idea of like quantifying naked risk where it's technically undefined.
Right. Okay.
Let's do it.
Let's do it.
So prior to execution, double check that buying power is in an acceptable range. This is an amount needed to put on the trade. So in a margin account, a rough way to kind of determine what the buying power is going to be on a position is roughly 20%-ish of the notional value of the put side. So if you sell a 100 strike put, you typically use somewhere around $2,000 in buying power to hold that position. It can change based on a number of factors. So volatility, duration, time on that option, the vol being the biggest kind of component of that, the relative price of that underlying. You can have changes based on broker to broker risk parameters. So there can be exchange parameters. There can be status, like hard to borrow, can influence buying power. So this is very much a dynamic thing when you're trading options, and it's one of the reasons why we always talk about kind of keeping size small and keeping cash available on the sidelines, because a lot of those metrics can change throughout the duration of the trade. Buying power reduction is an excellent way, though, to determine our max risk, or at least quantify the max risk on a trade. Our research shows that over the last 15 years, there is a roughly 0.1% chance that the trade's P&L results in a loss that exceeds the buying power. And we're looking at SPY strangles here. Overall market, S&P 500, obviously the overall market. When you put those trades on, your buying power is roughly your max pain. There are cases where
the brokerage firm is taking $1 in commissions, right? I mean, that's, we take buying power away and $1 in commission. So for our $1 in risk, or $2 on a strangle, one contract on each side, we are going to take enough buying power, which we feel comfortable. The brokerage firm is going to take enough buying power, not me, but I'm representing them in this story. They're going to take enough buying power that they feel pretty comfortable for $1 to take all that risk.
Yes, and brokerages have been around for quite some time, so it seems to have been a metric that has worked.
Yes.
And so here we're kind of going to get into that. So the question we get a lot is how does buying power really, how does buying power really measure risk, and what makes buying power a reliable risk gauge? So we're going to kind of just quantify risk on via SPY strangles. And obviously there's much more risk relative in a Tesla than there is a SPY strangle, and that's all priced in as well. That's going to be reflected in the buying power. Next slide here. So the study that we're looking at is we're looking at the last 5 years. So we're looking at SPY from 2020 to 2025. We're looking at short puts, 45 days, managed at 21 days till expiration. So we're taking the undefined side out of this. We're just looking at the short puts. We're looking at a varying delta here from 5 all the way up to 50. The implied volatility here has been in a range from 10 to 100. So we've had, wide ranges of implied volatility over these last 5 years. You're talking about COVID, the carry trade unwind, Trump tariffs. We've had a lot that has happened in the last 5 years. So this gives you there's some real big events baked into this data set. This has not been a grind market the entire time. You've had some big ones here. So we're going to look at the buying power and then the underlying price variations throughout it. And then we're going to look at, we're really going to analyze the results to assess how buying power can gauge the risk. We're going to really look at the risk on these trades versus the buying power on entry.
Very good.
And the buying power changes, of course, but we're just looking at entry.
Right. It changes with the price.
Yes.
More expensive, uses more buying power, more room.
Yes. So the next slide here. If naked buying power is too high, it can be adjusted by just turning this into a spread. So as I mentioned in the beginning, when you're naked a put, typically you use somewhere around 20% of the notional value of that put option. If you want to, make it less risk, just spread off the trade. And this can apply to a reason to do this is also applicable to the account type. So if you're in a cash or an IRA account, it probably makes sense to always buy the put in some fashion, whether it's a 1 delta or 2 delta put option, or you want to do it based on the value of the put. Maybe you only want to pay $10 or 10 cents for the put for each naked position. It makes sense to do that just to get some of that buying power relief. But getting into the buying power relative to these naked positions, let's go to the next slide here. So as the SPY price rises, margin requirements increase almost linearly. So you have a perfect correlation of buying power increasing based on price. And that's not a shock to anybody because price is one of the inputs that goes into risk. When things get more expensive, there's going to be more risk. A stock that's at $10 can only go to 0. If the stock goes to 100, there's obviously a lot more risk because now it can go from 100 to 0. So as the stock goes up, your buying power is going to increase as well on that position. Traders should reduce the position size during market uptrends to maintain consistent capital allocation while market pullbacks naturally free up buying power for new entries. So you got to keep in mind that as the market goes up, putting on new positions and putting on risk is going to get more expensive. It's going to be harder to hold those positions. We talked about Netflix. Netflix, you kind of have to be defined risk in those trades because of the price of the asset. It's no different with markets as a whole. So your average buying power increases, linearly with the movement in the market or whatever stock you're trading here. So that's just kind of like a basic for you.
Very good.
Next slide here. So now we're going to get into a discussion of just the delta in buying power. So you would expect, delta and buying power have a high positive correlation. Of course, delta is a measure of risk as well. When you have a 50 delta option, you have more exposure to that underlying than a 5 delta option. That's just relative to the size of the position. Higher delta options closer at the money require significantly more margin than lower delta options. And that's because you have less exposure. Your delta is relative to the size of the position. When you're sizing the position bigger, you're going to use more capital. And that goes up pretty much linearly. I mean, like you see that kind of extend to the upside here. The 10 to 20 delta range is typically where we are trading, and it's sort of the optimal risk reward. And we've done 1,000 different studies on this range of, between 30 delta and 1 standard deviation is kind of our sweet spot. You get the directional exposure. You get the exposure to volatility. Your risk is relatively in line. I mean, we're not changing the game here with this study at all. We're just kind of, putting more context into
reiterating what's optimal, or at least what we found optimal from our research.
Yes. And as you go, as you go further out of the money, obviously the buying power is going to decrease, but your actual reward is also going to decrease as well. And you're still keeping the same amount of tail risk. Right. So, you got to kind of, that's something that you have to kind of build yourself of what your risk tolerance is. Some people might be selling at the money puts into this move today. And if you did that, it worked certainly today. But you got to kind of build that yourself. Here, this is just kind of a look at how the buying power curve is across Delta here. I think the most important thing is implied volatility, which is our next slide here. So let's get into the next slide here. Taking a look at IVR and IV, those are going to be negatively correlated with buying power. So when volatility increases, and if you're short premium, you're short volatility, your buying power is going to increase. I'm not telling you anything you shouldn't already know. You should know that if volatility expands, your positions are also going to expand in buying power. And this is why, when volatility is low, we suggest taking chips off the table and using less capital. When volatility is high, we kind of allocate more capital to trades because we're expecting volatility to contract. When volatility is low, we're expecting it to expand. These are all just the mechanics that we go through. Higher implied volatility correlates with lower buying power usage as traders defensively reduce position sizes during volatility spikes to manage risk. This creates re-entry opportunities when volatility normalizes, and traders can safely increase exposure as vol compresses and buying power recovers. So here, you should just keep in mind that as volatility expands, you're going to see buying power expand as well, and that's why you got to keep some chips off the table for those periods of time.
Very nice. Good job.
Couple takeaways here, and then we'll open up the phone lines and get to Quentin from the trade desk.
Yes, we will. By the way, that number 855-238-2789 or 855-BE-TASTY. If you've got any questions, concerns, comments, we would love to hear from you. So give us a buzz.
NASDAQ 2,500, 25,000, I should say.
25,000 was 2,500. We in trouble.
Yeah. Price delta and implied volatility are three key drivers of buying power, making it a reliable gauge of risk. It's risk in the moment, though. You have to keep in mind that risk can change. Buying power will change based on changes in the market as a whole. Historically, which is about 99% of the time, losses were less than the buying power, and we're talking max losses from those naked puts on entry, being less than what the buying power was, the significantly amount of time. Buying power has a strong positive correlation with delta as well as price. So as prices go up, as you go to a higher delta, you're going to use more buying power. This shouldn't shock anybody. Buying power has a negative correlation with volatility. So volatility expands, buying power increases. If volatility contracts, buying power decreases, and so on. All those things are dynamic and they're going to change. So you got to just keep that in mind as always. Markets move. Is that a shocker to you, Dad?
No. They've been moving in my illustrious career a lot more than I expected to the upside and a lot more than I expected to the downside. They always move.
Yes.
Give us a buzz, 855-238-2789 or 855-BE-TASTY. The number will be below us in just a moment. You call. I won't keep you waiting. I'll take you right away. But we do have Quentin and maybe one other from the trade desk here, but I'll stop them. I'll shush them. Shush. And go right to your phone call. So give us a buzz, 855-238-2789 or 855-BE-TASTY. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit from these guys.
Gentlemen.
Jason, my man. Whoa, we went straight to the top. How are you? Cream of the crop.
Thank you. A little bit of a head fake this morning, huh? I don't know. Will we unch by lunch? Who knows?
I think so. It looks like that.
So,
what do we got for lunch today over there?
Oh, I didn't even look at the board. I'm just
Velvet
grateful to have
taco.
lunch.
They got tacos or something.
Velvet taco.
Is that why you didn't show up?
Yeah.
I actually don't hate velvet taco. I think there's a time and place for velvet taco because they're for anybody that hasn't had them, they're goofy tacos. Buffalo chicken tacos, chicken tikka tacos. Like it's just like anything, just like a bunch of variety of food.
Kitchen sink tacos.
Yeah, just stuffed into a taco. Like
they have that one that's like with the melted cheese outside. After that, I just like it feels great going in, but I just feel dirty afterwards. But
yeah, and you don't want to be in the tasty men's bathroom after.
There's a bunch of jokes there, but I'm not even going to touch them. But one person who's not a joke, they're actually two. You get like a 2-for-1 with these guys. We got Rob and Maria, Daytona Beach, Florida. What's up, Rob and Maria?
Good morning, Tasty Nation. Can you hear me?
Oh yeah, loud and clear.
Sure can. Good morning.
Good morning. I apologize. We started a new YouTube channel, and Maria actually had to go get her hair done today, so we're sans Maria. But I wanted to, I wanted to call in and tell you, as a former attorney and as a gambler for 40 years, I have learned so much from Tasty. We started trading stocks back in 1985, but didn't start trading options till we found you guys in 2020. And I am always amazed at down days like today. Our society is crazy. When things are on sale at the store, people are cheering. When things are on sale in the stock market, people are crying. We love down days. Nick and Tony taught Maria and I the key thing to trading, and that is buying power. Don't use it. You've got it. Don't use it. Keep it under 30%. Why? For days like today. Stuff we were selling. I love to sell, as Nick knows, the number one trade he gave me, which I've made tons of money off of, are the naked puts, 45 to 60 days out, 12 delta, close them at 25% profit, 13.9 days holding every single time. Those things we were selling for $1 2 days ago, we're selling for $2 today. Who in their right mind would hate that? We love it.
Yeah, I mean,
and they're further out of the money. It's the pop and volatility helps not only with just the amount of premium, but being further out of money on those options. So good job out of you.
Rob, to answer your question, why, and it was a great analogy when things are on sale, except the market, everybody cheers about it. When they're on sale in the market, they always get fearful. It's because the public is basically risk adverse. Like they look at it as, instead of an opportunity, they look at it as risky. And you being an attorney, you're used to ripping us off. And then you being a gambler, you're used to looking at it as opportunity. And now you see it as an investor as an opportunity because you're just a math guy. Like you're looking at it, same risk, same amount of buying power, I get $1. Same risk, same amount of buying power, I get $2. I'll take what's behind door number 2 and not behind door number 1. It's so obvious when you can step back. Now it worked for us today. If we went down another 100, those puts would be $3.50, but still your entry would have been better. And I don't understand why people can't can't see that either.
It's why volatility exists, though. That's the VIX. That is what the VIX is. It's the overstatement of fear. I mean, we've seen it time and time again. Though the world can only end once, right? So, you got to be short that pop and volatility.
Yeah.
Math makes you money for sure. My grandpa gave me an abacus when I turned 10. For my 12th birthday, he gave me a slide rule. At 14, he gave me a book of random numbers. He taught me how to deal blackjack at 16 and how to count cards at 18 and how not to cry when I got kicked out of every casino at 21. But he always said the same thing, math equals money. One other thing I wanted to talk about if we had the time was gambling and how the fix is in. And I've explained to Nick and Mike on their show about how the fix is always in on gambling. And as a professional gambler, as long as you understand what the fix is, you can really profit from it. And gambling is a lot like options. There's a thing called steam gambling. That is when the market starts to move towards the favorite. That's called the steam. And more people will start coming in because they think there's some secret out there about the favorite. And you want to be a contrarian. What you want to do is we always bet the money line dog. And that money line dog, you might bet 8,000 to win 10,000 when the bet starts. But now it starts steaming in favor of the favorites. Where I used to pay 8,000 for that 10,000 winner, now I only have to pay 5,000 for that $10,000 winner. It's the same thing. And finally, I want to close on my number one bet, which I've told Nick and Mike about many times before. It's when you get down to the basketball tournament, the NCAA, rounds 1 and 2, the top 10 teams favored by 20 points or so. They're playing the Sisters of Mary, and the boosters go to the coach and say, Coach, it would be great if you covered today. That would be awesome. And so you always want to take that bet because sure enough, they cover those bets just by 1 or 2 points to make sure that the boosters can win a lot of money and then give them the money back to the program. That's all I got for today.
And then,
thank you so much.
You take the money line dogs on everything else, and the
that's right.
The first half.
I take the money line.
Yeah,
I take the money line. I take the
game unders.
I take the money line dogs and the under. You might remember 2 Super Bowls again. We went 12-0. We took every single money line dog, every quarter, every half for the entire game, and for the overtime when Kansas City won in overtime. Money line dog. Always bet the under. Again, why? 85% of the public is going to bet the favorite. 85% of the public is going to bet the over. Likewise, when it comes to puts and calls, everybody only sees the upside. So today they only see the downside. So they want to buy insurance. They want to buy premium. They overpay for that premium. Are you kidding me? I'll sell you premium all day long, especially when you're going to double my money from 3 days ago. I love this business. Way better than gambling. I just absolutely love what you guys are doing, and I really appreciate what you've done for me.
Hey, Rob, go manage those puts. The E-minis are basically unchanged. The NASDAQ's up 20. Good job out of you.
No, I hate it when it goes up. I want it to go down.
Good job, guys. Thank you so much for your time. I appreciate it. You are right, Nick. E-mini S&Ps are flirting with unchanged, up 4. NASDAQ's up 23. Russell's up 2.
Why'd you make me close those NASDAQs? I'm just kidding.
Get to my man. Let me get to my man, Jason. We'll get to you. We'll do your list. How has the trade desk been today?
You know, it's I think it's trying to find its footing, but now it's kind of found its footing. Like I said, we're almost unch by what time is it? It's almost lunch.
Unch by lunch. You called it.
That's right. But I think I wanted to echo something Rob said. You know, it's a very out of body thing to run into a burning building. Right. So that's basically being the contrarian. Right. And that's why I have no friends. So but basically, but it's helped me fund my Costco trips every other Friday again. But yeah, I mean, it's been great. But anyways, let's get down to some business, fellas. Let's do it.
Let's do it.
Top 20 symbols flowing through the system first 45 minutes of the day. For you, Bat, Microsoft at 20, IVR 21, Google at a 32, Netflix at a 20, SLV at a 52, Apple at a 16, MU at a 66, was that CoreWeave at CRWV at 25, Hood at a 13, TQQQ at a 40, Amazon at a 24, GLD at a 59, SoFi at a 36, running the last 8, Oracle at a 91, MSTR at a 27, AMD at a 43, IBIT at a 57, last 4, PLTR at a 23, Meta at a 23, NVIDIA at a 33, and lastly, Tesla at a 20.
Good job out of you. Good job out of our illustrious customers too, picking a lot of liquid stocks in there, a lot of decent IVR also, which is kudos to them. I am amazed at the market. I mean, I know we've been talking about it all day today. What's that?
Yeah, we're positive now. That's awesome. Look at that. For those of you that faded the open, there you go.
Unbelievable. Well, I'm going to let you go because I know you have more pressing things to do. Appreciate you coming on here.
Absolutely.
Nick, we've got about 10, 12 minutes here, really 5 to 7 minutes. Why don't you take a question from the chat group
I got some people in the chat calling me paper hands here for my NASDAQ. All right. Come on. I was laying them out today. I was laying them out yesterday. You got to take the money and run sometimes. I guess I do have a little bit of paper hands. I will. And
Hey. There's a lot of people that say a lot of things, and I'm sure. Listen, if they're watching the show, they're doers too. I'm not talking to them.
Don't you say? You're about to say something bad about my peeps? Don't you?
No. I'm not going to say anything about anything. I'm going to say something good about you. I always try to take the half full approach and not the half empty. You did something.
Yes.
There's a lot of people that did nothing.
Yes.
But you did something. A lot of people don't have anything on and didn't do anything. Those are the ones I hate the most because they were waiting for an event, to Rob's point, to a degree. They were waiting for an event to happen, and then when it happened, they froze. And that's the worst thing that can happen. So Good job out of you. Good job on anybody who's ever done anything. Even if you sold into it and you didn't make any money, it's okay. Like, you had an assumption it was wrong, and now you got to do something against it. Reduce your delta by 50% or whatever. Go ahead, Nick. I'm sorry.
Just a couple, and then some people saying they like the comments on the trades. I will put those.
Yeah, we don't have the time to do it intraday, but we will do it when you get off. Yep.
We got some love for Rob coming in and just the gambling and the trading. This is perfect.
And you know what? I don't. I've been out with Rob and stuff like that, and I've talked to him when things have gone horribly wrong too. You know what I mean? Like. He's the real deal. I mean, I've seen his account. He puts it out there just like he says, which is not a lot you could say for a lot of things that you hear and see online.
This has been quite the rotation here. You got some of the big name stocks. I mean, you're like Amazon. We were just talking about Amazon signing the put in Amazon. It was down $2 or $3. It's now up on the session. Microsoft, super strong. Tesla has reversed the entire move. Apple's up $1 and change. I mean, was this it? Is this it? Vol coming in 2037 on Vol futures. You got the VIX itself at 2045. Is that it? Is the pain over?
I didn't think so earlier today. I mean, I did talk about it making the lows and making new lows. I like the idea that it made the lows overnight. I like the idea that we retested those overnight lows to rally. I definitely did not think that we would be green today. No. So it seems like it's over, and it seems like we've reached a point where the lows are definitely in for the day. I mean, I hate to say definitely because nobody knows anything. Volatility is lower than where it was yesterday. We'll probably oscillate around. I really thought we were going to oscillate around 6,700. I told you that, and more like 24.5 or so, or 25. On the NASDAQ, or a little bit lower than that. I think for this week it's over. I don't know what Monday's going to bring. Monday's going to bring a lot of a good thing was we didn't do the 0 day because we moved way too much for the 0 day. You still got $38 in expected move for the 0 days at this time, which is just about 10 o'clock in the morning. We usually are in the teens by now. So you got a lot of volatility. If you wanted to look at something in the 0 days, like in SPX, you might be able to do something in there.
Yeah.
But I'm gonna let you go. Okay.
Cool. Perfect.
I appreciate everybody. I hope people benefited from today's show. You did a great job trading, no matter what kind of paper hands you had. As foretold, was out today. It hasn't been out in a long time, so I'm glad we brought back as foretold segment. I'm just kidding. Let's take a quick 90-second break and come back. We've got more Tasty Live with Liz and Jenny next. Even the S&P is now trading near their highs of the day. For today, $10 off of their highs for last night. We'll be back in 90 seconds.
Could you imagine doing anything else, dude? This is the best.
This is the day to be alive for a trader. Yes, for sure, 100%. All right. Peace, everybody.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
It's too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me. Know me. I like how you do it. You're helping me through it. Baby, your love is too good. You knew what you did when you planned it. You scammed it, making right off like a bandit. I know what I know. It's time that I go. 'Cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me. Baby, your love is too good. 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 Baby, your love is too good.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. How you doing, Jenny?
I'm good, Liz. I'm good. How are you? Are you ready for the weekend?
Yes. You know what? It was a short week because I was off on Monday. So I'm like all thrown off that I feel like I should be wearing red.
You know, it did feel like this week flew by. And you know, for me, it wouldn't matter if it were Wednesday or Thursday because I don't feel like it's time for the weekend. I do feel like the week flew by.
It did fly by, right? And guess what? Cancel crash, Jenny. Yesterday after our show, the market tanked.
Yeah.
Can I use the word tanked? It tanked. Like that's an official tankage, right?
It was ugly. It was ugly.
Yes.
And we were down, I saw us down as much as 80 today. Now we're unchanged on the day, but I wouldn't get too comfortable. Like, I'm not thinking of like, oh yeah, now it's a rally time. I wouldn't be surprised if we closed down on the day.
I mean, I wouldn't either. We're down a little bit. Do you want to jump in the platform, take a look around?
Sure.
I opened up some things, but I just want to take a look at the left sidebar real quick. So ES is down. To Jenny's point, we were green just a second ago, and now we're slightly in the red. I would call that a sharply unched market. And the rest is a mixed bag of tricks, but I couldn't believe. So to your point, let's go to, I'm going to go, stay in the even S&P's range, because that's usually what we look at. So we were as low as 66.70.
Yeah, we were 80. I saw us down like 82.
Yeah, that's a big.
But you know, to put things in perspective, and it felt ugly. But if you remember, like we haven't had Tim Knight on for.
Oh, that's what I'm saying. Look at this. Yesterday felt ugly, but it brought us back to November 7th.
Well, I was going to say, do you remember when we had Tim Knight on and we did that gold Qs pairs trade where we shorted the Qs and we got long gold? If you go to our short Qs position, it was a small winner this morning. This morning it was a small winner, but I would say like just take this share of QQQ off.
I kind of agree too. It's in there. So there's the gold, we're down $4 and gold, we're down $2. QQQ, we are down $4.
If you want to leave our 2 shares of gold, I'm okay with that. But I would say after this move, which felt like a big move, let's just take that share of QQQ off.
I mean, okay.
Right? Don't you think? Like we had what I felt was a pretty big move in the market over the last couple of days.
And we just got to where it was. Okay, it's being closed. I'm going to see if any of our GTCs hit. Hold on, let me close our gold. Activity, no. So nothing hit today. That's fine. Jenny, good news.
Wait, did anything hit like yesterday after our show? Go, take a look at yesterday.
Natural gas.
Well, natural. Oh, we got filled on it. Okay.
Yes, here's our natural gas. So if you want to push that out, that'd be great. This is the natural gas. Upside broken wing butterfly. We're up 16%, $25. And because natural gas is down.
Right. So we put on upside broken wing butterfly. We risked very little. I think we took in $1.50 and risked $3.50, something like that.
Yes. So we're filled on triple Qs. Here's our natural gas from yesterday. Jenny, I opened up a couple things. I actually want to go silver lining first, if you're okay with that. Take a look at this. Now, we were up a lot more before the show, but that's okay. We do things live on the show. AMAT yesterday had earnings. We just threw in a 217 calendar because it's Liz upside down. We made 54%. I saw it as high as 100% because we bought it for 2 and we could have sold it for 4. It's okay. No big deal. AMAT's kind of going up a little bit. So I'm going to take this.
Yeah, sure. How much are we up in it?
$100. It was 2 because AMAT was down a little bit more earlier, but that's fine.
Oh, well, yeah. I mean,
that's okay. You know what I mean? We do things on the show and we keep it how it is. It all comes out in the wash. It's still a calendar win.
Yeah.
Okay, so we're filled in AMAT as well.
Okay, so I have all of that pushed out now. Our natural gas, our AMAT, and our 1 share of QQQ. But it's funny when you have things in like that, and it kind of gives you some perspective of. I felt like we were crashing yesterday, and then it's like, oh, we're not even. We just dipped below this morning, where we were when we put that Q's gold pairs trade on.
Right, and so keep that. Like I said, keep this in perspective. Oh, yesterday when it felt like a big move, this is nothing. Even at its low yesterday, we are exactly where we were November 7th, which is.
But I'll tell you, my account took a hit.
Yeah, because I'm too heavy in certain factors, like when Oklo's down or Archer's down or Intel's down. So it's not that beta weighted delta it's just theoretical, right? So it's not 100% if it's down, you know what I mean?
And I think crypto, like if you go to Bitcoin, it was like crypto has been painful. And it's not just Bitcoin, it's all the cryptos.
All the cryptos in the 96 handle. It's down another 1% today.
So like if you look at that chart, if you do $ BTC,
well, I mean, even if you just do BTC, take a look at that. That's a big from the fall from grace has been fast and furious.
So I think this is where a lot of people have been feeling pain in the crypto.
Yes.
So when we say like our accounts took a hit, a big chunk of it was crypto.
Look at this. SPOOs are down 11 again. So it's pretty interesting. So I followed Jacob's study today, Jenny. I did. So at 9:05, I actually wanted to remove myself from the situation because I know SPOOs were down a ton, but I removed myself from the situation. And at 9:05, I blindly opened it up and put it in, and I was out 15 minutes later.
We had that big rally. We went from like down 82 to green.
No, I mean we were down at 9:05. We were not.
We were down like 40 probably.
No, we weren't. I don't even think we were down that much. But I was like, okay, I know we've rallied back up. I think we were only down like 20. It was crazy because I was like, okay, whatever. I'm just gonna do it. I'm blindly following it.
I did both sides because it was so you could get it. It's so wide when the vol. I think. When the vol is so high, you can make those iron condors so wide. So I did an iron condor, and my short puts were the 6,600, and my short calls were the 6,735. Now we're at my short calls.
But you closed it, didn't you?
No, I still have it.
Oh, okay. I thought you were going to.
I closed. So it's funny because. Then I did this at 8:30. So at 8:30 we were like down 50, and I did this at 8:30, and I gave myself more room to the downside. And I think I wanted
6,600 is pretty far down.
Yeah, it was pretty far down. But I did a wider put spread. Basically got like I got 210 for that. $10 red put spread, $5 red call spread, and. Then we went from down 50 to down 80, and I thought, oh, maybe I'll buy that call spread back. And I should have, because it was trading only like 50 cents. And I should have bought that back because then
have you not learned anything from Jacob's studies?
But Jacob's study said
put spreads.
Well, and Jacob's study on iron condors work, but it says close them as package. So I said, well, maybe I'll need that extra 50 cents. I'm gonna leave it on. But what I did close when we were unched, I closed that put spread for a dime because it was the puts. Like more of my risk was on that put spread. So
no, I get it.
So I'm not. I still have my call spread, but I'm not doing anything with.
So you need time to pass. Like right here, you're fine because you're 35.40. You said right.
Yeah, and my call spread is so narrow; it's not that big of a deal. Like if I lose on the call spread. More of my risk was on the downside, but so now I just am left with that call spread because I thought for a dime, I'm not going to close that puts. I'm not going to like leave that put spread on for a dime.
So VIX is keeping its wings up. It's up another 3.8% today. I want to see as high as it got because I thought it was higher. I thought it was 22 today. Yeah, 23. It grazed the 23 level.
Yeah, that's big. That's big because you were looking at the SPY chart where we had that down move, and then yesterday we had that down move that kind of matched it. The last time we had that down move, I don't think we got above 21.
No, we did. We got to 22.75.
Oh, we did get that.
Yeah, right here with those matching twin peaks. November 7th. This would have been right around there. Yeah.
Okay. I just remember I had those like AM settlements on the Monday, and we were at like 19. It was like at like 1940 on Monday, and
because you got to pin it perfectly, Jenny.
Yeah, you got to get it just right.
Yeah. You got to pin it perfectly. Let's do a couple adjustments. So, Jenny, we are taking live tweets. People put the hashtag LIZJNY, questions, comments, concerns, trade ideas. We'd love to see it. We also have, and I'm excited to go into this, Kai is awesome, and he gives us a market measures recap of the week, which is kind of fun. So we're going to get the takeaways, and if anybody wants to go back in and rewatch the market measures, they can. But this is a brief synopsis of here's the setup, here's the takeaway, here's the setup, here's the takeaway, and I kind of like that.
I do like it because we know people are busy. We're busy. People are busy. We can't watch every single market measures. So this is every market measure from the week. But you
know what? I think as you get better as a trader, I'm not saying better as a trader, maybe more familiar as a trader. How about that? Because nobody's ever really better than anybody else. But as you become more familiar as a trader, you don't need the nitty gritty, right? You don't need the setup. I don't need to know why the sausage is made that way because I trust Kai, right? So I'm never going to be like, I need the details on how you got from point A to point B. Just give me the gist.
Oh my gosh. Do you know how many times people are trying to explain something to us and they're getting into the details of the formulas, and it's like, look, just tell me the trade. Tell me the trade, or tell me how this should affect my trading, or I can change my trading, but I don't need the details.
Give me the takeaways. I want the takeaways, not the details, because I do trust the people that are putting this together. It's kind of, that totally reminds me of TP. Like I said, we've done this to him so many times where he's just talking because he's so smart. And we're like, what are you trying to say?
I know, that's exactly who I was thinking of as you were telling that story. I was picturing my last conversation with TP.
Yes, it's pretty funny. Okay, let's do a couple quick adjustments. I opened up some things that I don't want to spend a lot of time on these. I think this should be pretty quick. We can do nothing and sit on it, which is fine. We have ZB. We've been in it for 16 days. We have the 16.17 put spread. It's trading 16.25. So I'm going to go to, hold on. Let me go back.
So, we're like, we're a few ticks, 7 ticks away from being at 117. I don't know if we roll it out. If we roll it out, we're probably rolling to a different future.
Let's take a look. Close this up, and you're rolling to the 16.14. So I'm gonna sit on this. I'm gonna give this one more weekend. Okay.
I don't know. There's all this chatter of interest rates now. Are they not going to lower it? What?
And that was, I think, the debacle yesterday. So if I was going to roll to the same strike, hold on. You're taking a 7-cent credit, but it's a different future. Let's do it.
Yeah, let's do it. Go ahead.
It's only Jenny. It's only taking us out. Hold on. 7 days.
You're only going out 14. Yeah, let's go a little further.
Yeah, so I'm going to go to
42 day.
Yeah.
Then you'll take in more.
Still 7 cents.
Oh, really? Just go the 14 day, right? Well, I don't know.
No, I kind of agree with you. Let's just give ourselves a little bit of time. Because we can always, guess what? We do this, we'll be back here again on Monday. And if we decide to roll it out farther, we can, right?
We can, unless it really falls, but the 7 cents isn't, that's not bad. How much? Yeah.
We got 6, so that's good. Next up, AI. We've been in it for 39 days. So here we go. We just have a short put, 17 short put, which we have an order into close with wishful thinking. We've been in it for 39 days. This is probably with our buddy Alan. Turn off my phone. This is probably with our buddy Alan. We've got 7 days in here.
Wait, I think we've changed our AI trade with Alan. So tell me, what do we have? Sorry, I was pushing everything out.
No, we have a short in the money put. We didn't change it. We have a short in the money put that has 0 extrinsic value. So I'm going to buy this back. And then we know we're going through earnings for this. So I might actually just go, I want to make sure earnings are right there. And we know we're bullish. I might actually just go and buy the 12 call through earnings. We're getting back $400. Now this is our earnings trade. Then if it goes up on earnings, we make money. If it doesn't, we don't. We can sell a strangle around it.
And I don't even mind if you pay a little more extrinsic value. Like, I don't mind if you go bring it up a little bit. Like, even if you buy.
Look at how wide those markets are, though.
I know. I'm trying to look for a narrower market. Like the 13 is 180 at 211. At least it's a little bit tighter.
Yeah, and then we'll get some of that extrinsic value back on earnings by selling premium around it.
Sure. Yeah.
So we're getting back $400 in buying power. We still have a bullish position in AI. Okay, so that.
I mean, like as far as the way the market was moving, if people are trying to put a Band-Aid over a bullet hole, would be buying back your short deep in the money puts and replacing them with in the money call, which I did that.
And the reason that is a Band-Aid over a bullet hole is because it caps your bleeding, right? So no matter what happens to AI, no matter where, if you'll make money if it goes back up, but no matter what happens to AI, the only thing that you can lose is what you paid for that call.
Right. So basically, like if it goes back up, what are we going to lose? Well, that 60 cents in extrinsic value that we gave up. But but that our only risk now is that $200 that we paid for it. So yeah, you give up a little, but then you've got some risk definition. I guess it's no different than if you have the stock and you buy that put.
That's exactly what it is that you have the stock and you buy that put. But what you're doing is you're just capping out. You're saying, okay, this is where I'm saying I want to stop bleeding. And that's not, it's just they're very expensive when the implied volatility goes up.
Right. Yeah.
Okay. So that is good. AI. One more thing I want to look at, and I just pulled this up pretty quickly. This is what do we have here?
What is it? KVUE. Click on it. What is that?
I don't know. I'm going to type it in slow.
Kenview Inc. That's what I said. Kenview Inc. You know what I did? It's KVU there. So 2019, we have a long, this must have been what's your assumption or something. Someone wanted to get long. We put in a long.
Oh, we're going to leave this. This is worthless. We're not even going to close it. Okay. When I saw 7 days, I wanted to address it. This is something that we bought as a shot. We've got 7 days left. Okay. I think that concludes our portion of.
Yeah, we don't have, as far as problems, like Qualcomm down. It says we're down $570.
That's a worthless.
Yeah, that was like left over from a diagonal.
Yeah, we opened up all these and kind of addressed them. So let's leave it. HIMS is going in the right direction. Things are going in the right direction. So Jenny, this is choose your own adventure for you. Would you like to go to Twitter or would you like to go to Kai's study?
Let's go to Kai's study. We are taking live tweets, include the hashtag LIZJNY. We'll be in Twitter later, but let's go to Kai's study.
Okay, this is the weekly summary of the market measures, which I love, and I got to send a thank you note to Kai for putting this together.
I love it. I love when you're controlling it. I feel like I need some popcorn and a drink and to sit back and relax and watch the market measures recap.
Well, you still have to talk, so stop eating popcorn. Stop eating popcorn. So I thought this was pretty interesting. So shutdown fallout, what history tells us, which we've seen before, but I like this. So we know the shutdown is over, right? So the longest government shutdown in U.S. history has finally ended, but the economic effects may just be beginning. Do you want me to read it all?
Dun, dun, dun. Initial estimates suggest billions are lost in lost output and delayed spending, but history can give us a clearer sense of the longer-term impact.
So that's why I'm happy we're doing this today, but let's check in with the results from past shutdowns to try to anticipate where the market might go from here.
You know what I started watching, which I've never watched before? West Wing.
Oh, it's so good. You've never seen West Wing?
No, and I had nothing to watch, so we said, let's start West Wing. That'll give us 8 seasons.
Oh my God, you buckle up, because I mean, if you're watching it with someone, you better make them, because you can go through that pretty quickly. It's really good.
I'm on like episode 3 of season 1.
Yeah, because if you're watching with someone when they have to be home, you're going to need to ditch that person.
Okay. All right. So it's good. You said it's good.
Oh, it's great. It's great. West Wing was one of my favorite things to watch.
Yeah, I figured.
I'm actually kind of jealous that you haven't seen it. It gives you good, solid 8 seasons.
Yeah, guys, it's something to do now.
Good. Okay, the shutdown fallout, what history tells us. During the initial ACA dispute, the market begins to rebound from the shutdown before it even ended. Okay, so let's take a look at this. S&P, airlines, healthcare, defense, consumer staples.
Oh yeah, that's kind of interesting. So let me take a look at that.
So this, I'm assuming the red is where the government was shut down, right? So from here to here is where it's shut down. So it kind of goes up a little bit, but then look, we open up.
Now look at the airlines.
Yeah, those airlines.
Yeah. That's kind of what stood out to me. Look at those airlines.
But you know what stands out to me, Jenny? And I'm kind of excited for this. You see, we open up here, we go down.
Yeah.
And then we go straight up.
Well, and this is going back to, this is
2013.
like 2013.
Yeah.
That was the other long shutdown.
Mm-hmm. Yeah.
Yeah.
So pretty interesting. Now let's go. Okay. And while prices have had erratic responses to the government closing, volatility was more predictable. That's interesting.
Prices have erratic responses. Volatility was more predictable. Well, we've seen VIX keep its wings up and the, 18, 19 handle, and now at 20, where is it today? 2020?
Let's take a look. Let's go back to VIX.
2040.
Yeah, 2040. That's pretty high.
So yeah, I guess volatility is more predictable. I guess you assume when there's a shutdown and you don't know what's going to happen, vol keeps its wings up.
Yes, true. And we've seen that too. Okay, so here's the takeaway.
But if you go back to that chart and you take a look, right after the shutdown, you see how VIX goes from, during the shutdown, we've got VIX 18, 19, it got as high as 20. And you see how quickly it drops to 13?
Yeah. But it almost drops to 13 before the government opened. Do you see what I'm saying? The government was still shut down here.
Yeah, and it was really taking a nosedive.
Yeah,
it's a little different this time around.
This is the fear index is saying we're going to be fine. Okay, so then since 1980, when Congress fails to pass a budget, the federal government stops making payments. Okay.
This typically exerted bearish short-term effects, though with some industries more sensitive than others.
Okay, despite the length of the recent shutdown, equities actually remained more constrained throughout previous examples. Wait, so equities remained more constrained, meaning down through. Okay, so they were up higher than they were in other examples.
What took the biggest hit after in that little chart? What took the biggest hit after the shutdown? What sector?
But nothing looked like it took a hit. But we'll go back. Hold on.
Okay, so I
would pink, but pink always stayed there. Pink
was always lower. Was there something that was? I don't really know. The green, maybe. What's the green?
So the green is
healthcare,
the green is healthcare. I mean, they're all kind of right there. I wouldn't say any of these.
Yeah. There wasn't anything that took a massive hit after.
No. Okay. Volatility, on the other hand, has always shown significant action in response to government shutdowns,
giving opportunities to option traders. The beginnings of shutdowns are more predictable than the ends. If we look to have another one at the end of January, trading on it early or waiting for the volatility to spike may be the best approach.
Okay.
What are you looking at?
No, something just got filled in my account, which was weird, but I can't figure out what it is. So,
what's on the move? What if you go to the platform? What's on the move?
I mean, the SPOOs are red. Everything's green.
Yeah.
SPOOs are up 7.
There's nothing crazy. And oil's been up today. Bonds are still down. I don't see anything too crazy.
I don't either.
And it's funny, the Dow is down today, and wasn't that the strongest yesterday? The least of the worst.
The least of the worst.
The best of the worst. The best of the worst. I don't know.
Possibly. But you can tell they're battling because it's been red, green.
Yeah.
Okay, so let's go to the next one. Decoding Theta Vega trade-offs. Jenny, are you ready?
Yeah, right. So Theta Vega trade-offs. We want positive theta, but at what cost? We don't want to have too much short Vega, especially if vol is low. But when vol is high, I don't mind it.
Yeah, but do you look at your Vega? Let me ask you this. So as a self-directed retail trader, is that what we're called? Is that would you call yourself a self-directed retail trader?
Yes.
I don't look at my Vega.
Okay, so I'll tell you, I'll tell you, like as a floor trader,
Yes.
We would get killed in the leaps. We'd get killed in the leaps. And so as a person who doesn't really trade the leaps, it doesn't hurt me too much because again, Liz, you know this and I know this. Risk is managed at order entry. If we know our risk in a trade when we put it on, it doesn't matter how high vol gets. We know what's gonna happen.
Right, but so that's the one. It's so funny because I know people want to understand this because people want to look at the Greeks a lot, but I don't look at Vega ever. I just kind of inherently know what's happening when vol goes up or down in my account.
Right, and and for as far as
I do look at theta though. I will look at theta.
Oh, I look at my theta, but I'm not looking at my overall Vega because I know how it's not going to hurt me that much. I mean, we know if we're selling short premium, yeah, sure, we're if vol expands, there's going to be more premium in those options, and we're going to have to wait for time to pass to get out of them, or we'll have losing positions because the vol's exploding. But again, if you're trading in that 45 weekly to 45 day range, it's not that crazy. It's when you're further out in time. I'll never forget this time my backer came up to me in the pit and was like, how did you lose like 80 grand? I'm like, don't worry about it. Everyone's buying the leaps and we're short so many leaps. We keep jacking up the prices of the leaps. Like I'm short so many leaps and we just keep jacking up the prices. And, and that's Vega. Like that's Vega. That's how Vega hurts you. If you're short something and the prices of those options keep increasing.
And don't you feel like, so that story is the perfect example because you were a market maker. So if somebody wanted to buy it, you had to sell it. So, and that's just it, is you're controlling the price, but you had to take the other side.
Right. And so if we have to keep selling it and we're short it and we keep, let's say I'm short some big firm keeps coming in and buying the 100 puts and I'm selling them. And so we raise the price and we're selling them and we raise the price and we're selling them. We raise the price. We keep raising the price. And we're already short so many. Yeah, it's going to hurt. It's going to hurt in our P&L on our mark because what we sold at $5 are now $8. But we know that with time that will decay, but that's going to take a long time when you're way out in time. That's why we don't like going so far out in time.
Yes, agreed. Well, and we usually don't now anymore. Okay, let's get into this. So short premium traders benefit from the time decay, which we were just talking about, of options extrinsic value, theta, but the risk of losses from exposure to changes in IV, Vega.
All right. A trade with a high initial profit potential has a high theta for the amount of Vega risk at the time the trade is placed.
That's correct. So let's take a look at these risk factors for 16 delta SPY strangles in different IV environments. Okay. So takeaway. I like it. We're just going to jump right into the takeaway. That's what I wanted.
Jump right in. A trade with a high initial profit potential has a high theta for the amount of Vega risk at the time of the trade is placed. I don't want viewers to listen to this and get like too wrapped up in it and worried about Vega too much.
And that I agree. I'm glad we started with saying that because this is something where you're reading this and this makes it seem more complicated than it needs to be.
Now, if you're not just an independent retail trader and you're managing a huge portfolio for many people or a big firm, then sure, maybe you got to be mindful of it. And if you've got so many positions that you can't think of each position individually, that you've got to manage the whole portfolio by monitoring the Greeks, then that's one thing. But for just someone managing their own account, even if it's a bigger account, I wouldn't get too stressed out over it.
I'm laughing as you're talking only because if somebody's got such a big account that they're managing it and they have to look at the Greeks, they don't have the time to watch our show.
Or we might be on in the background. We might be on in the background.
But you know what I mean? And I'm glad you said that because this is something you don't want to get into the weeds. Like you have to understand your volatility at the time. And you have to understand all the Greeks kind of have a conjunction with each other. Because do you remember the one guy that we met on the road? We talk about him all the time when he's like, girls, I got my theta up to, and it was ridiculous. You're like, Liz, come here. You got to hear this.
Oh, his theta was, thousands of dollars a day. He's like, oh, this is so great. Got my theta up. It was thousands of dollars a day. And we're like, okay, but you got, his risk was way too much for the size of your account. Because remember, your
You're
theta
out of your skis.
for like $100,000, your theta should be like $100 a day.
Yeah.
So, but maybe more when vol is really big, like when vol spikes and vol is really big and we're selling more. Yeah. But I don't want people to get too hung up on this.
Yeah, we don't.
Honestly, if you, and I think this is a good practice, if you go through your positions and you look at it like, okay, I'm short 5 puts here. If I had to take 500 shares of stock, what's the notional value of the stock? What's that going to use? How much capital do I have to allocate to that position? Do I have enough to back that up? Like I went through my positions and did this like check. Okay, I've got the capital to back up the notional if I have to take that stock. I think that's a good practice to be in so you don't get yourself into trouble and you're not so worried about big vol expansion.
I agree. Kind of understanding. And that's just it is, I think as you start to, not a better, like I said, I'm removing the word better trader. As you become a more experienced trader, it's just something you inherently know, right? Like you're going to look at this and I know you went through and checked your positions and that's good, but you kind of know, it's not like it's going to take you hours to be like, oh, okay, let me open this. You kind of inherently know what's happening and what your things are.
So like day to day, we're always putting on trades, right? Oh, this looks good. I'm going to sell. I'm going to put this trade on, sell puts here, do this. And like we keep adding. So every once in a while, I need a check of, I'm going to go through my positions and see what the like notional value of each of these would be if I really had to
take them.
If there was a big move and I had to take this position on, like if I had to take the stock, I always say I'm not going to sell puts in something unless I'm willing to take that stock at that price, because you could say we're going to roll, but if that put ends up $100 in the money, what are you going to do then?
Right. Because as you said earlier, risk is managed at order entry.
Yeah.
Okay, so let's go to the last one. Technical indicators introduction. And I think they probably got this idea because we talked about maybe doing this with Tim Knight.
Oh.
Yeah. Somebody on the road when we were in Texas was like, I love your show with Tim Knight because he's on our last call and we have him on Wednesdays. And they said, I was like, oh, we'll give him symbols and we'll do this. And he's like, how about you just ask Tim Knight to teach you one basic technical indicator each time? And I was like, that's awesome, actually. Right.
So I feel like this is something where I know Kai gives us the like title and the takeaways. This is something where we actually need the meat of the market measure.
All right, well, let's look. Oh, I've never heard about this. The volume weighted average price, VWAP. Oh my goodness, is a widely used technical analysis indicator that resets at the beginning of each new trading session. It represents the average price at which security has traded throughout the day, weighted by both volume and price. Okay, Jenny. Wait, hold on. Let me finish this. VWAP is a valuable tool for traders as it offers insight into a security's intraday price trend and overall market value. So there is, we haven't been talking, but our friends at the SIBO and our producer Beth have been talking to put us on something else. Remember what I'm talking about?
Yes.
And if you ever watch, all they do is go VWAP.
Oh, really?
VWAP. To the point where I was like, what the heck? I Googled So I wound up Googling this the other day. So we might be more in the thick of this than you will ever know, Jenny.
We'll see. VWAP. Good thing we had this market measure, or when they mentioned it, I might have been like, what the heck is VWAP?
So you should go back. I mean, I'm going to highly recommend you, Jenny Andrews, and me, Liz Deer, can go back and watch this real market measures because we're about to be VWAP'd in the face.
Yeah.
And there you go.
And here's the equation for it. VWAP.
We're not even going to read this. This is the equation. It'll be here if anybody wants to read it. And then here we go. So this is Starbucks. And this is, okay, Jenny, and this is what it looks like when they're doing the VWAPs.
Okay, let's see. The VWAP indicator plots a central line with two bands, an upper and a lower. So a central line with two bands, upper and a lower, typically set 2 standard deviations from the VWAP, similar to Bollinger Bands. These bands widen during high volatility and narrow when prices are stable. Early in the session, they're close together due to limited data, so VWAP signals are more reliable after the first 15 minutes. Tom would die if he saw this on our network.
I know! And then the most popular time frame for a VWAP is 1 minute or 5 minute charts because it's used for intraday trading and restarts every day. So I'm telling you, Jenny, we might need to study up on this because we might be in a
I wonder what the VWAP was for SPX today.
Yeah. So this is pretty interesting. So that's just kind of, they're looking for those intraday channels. And so what I watch the people do, I don't trade like this, but that's okay, is they were saying, oh, it's near the bottom. And then they would get, you know what I mean? Because the intraday channel.
I see.
Or so like it's VWAP's up here, or when it touches this type of thing. I have no idea.
I don't know. I'll have to brush up on our VWAP.
You're gonna need to.
Takeaways. VWAP shows the average price of an asset weighted by trading volume.
Okay, it's calculated by using the price and volume data summed across periods and divided by the total volume.
Let's ask him Knight about it when we see him on Wednesday.
I mean, I don't know if he does VWAP. I'm not even gonna lie to you. I think he's more cup with the handle and spinning top.
Resets daily, making it best suited for intraday trading. Yeah, because he's more longer term. He's not like intraday.
Yeah. And then standard deviation bands or additional indicators like volume profile can enhance its use. And you know what, though? I have no problem. I like when, and that was it. So I don't mind if someone needs, I'm not saying needs, I'm trying to use my words here carefully. If someone wants some type of assistance in making their directional assumptions and trading, great. I have no problem with that.
Sure. And we usually will use options to place high probability trades, but these are not that because this is intraday trading. So if you're intraday in the day, out in the day, this is just directional stock trading. This isn't using options because most options don't have the 0 days unless you're just using the VWAP for SPX and using those 0 DTEs.
That's what I was thinking about. That's what I want to VWAP is those.
That's why I said I'd like to see the SPX VWAP for the day.
But that is exactly it. And so you using the options on top of it. So we have a defined risk if the VWAP goes wrong in our.
I'm glad you were here because I would have been calling it VWAP.
Well, all I know is I literally Googled this the other day because I was like, I think we're going to need to know what they're talking about because it's like they're speaking a different language. I wanted to show somebody posted this. Ooh, VIX was under 20 a second ago. Or somebody said it was. Let's see. Low 1996.
1996.
Dipped
below. A good year. 1996. That was a good year, Liz.
It was a good year. We were both in college.
Yeah.
Speaking of college, I know your son's about to graduate, and mine is just getting there. And JD is having the time of his freaking life. He was sending me pictures. He went to a formal yesterday with all of his friends. It totally reminds me of when we were in college.
I know. It's fun. I said, I think I've said this before, like, I'm sad for my son because he's so sad to leave college. Like, they're all gonna, these kids I think it was, it was Buddy from the CME, Craig from the CME. He went to the same school my son did, and he was talking about when they left school, when they graduated and left school, how he looked over and his buddy was crying driving the car away from school. And they're so sad to leave because they've lived the best 4 years of their life.
Oh, Jenny, I left school early. I graduated early. Dumbest decision I've ever made. I mean, I'm sorry for the people that are graduating early. I left in December and I left all my friends. So they were there for another 6 months and I cried the entire way home.
Yeah.
And then cried every night while I was working at Anderson Consulting. Yes. So it's pretty interesting. It is such a good time and it goes by in a blip. You know what I mean?
I know. It's hard. And it's hard when they have to welcome back to the real world. And now you're lucky if you have 15 vacation days.
Oh, I was laughing. And we will go back into markets in a minute. But there was a friend of ours whose daughter graduated last year. I don't know if you don't know who these people are. They're friends from Lamont. And I saw the girl out and she's like, "Do you know they make you work the day after Christmas?" I was like, yes. Yes, they do.
I know. Oh my gosh. I know. I was planning, we were planning next year Thanksgiving a vacation, and my son's like, "I don't know if I can go. I don't know if I'm going to get time off work."
It's hard. Okay. So we are, look at this. We are, they are rallying. So we've got 67.81. I mean, cancel crash. We're back up there. Let's go to, I'm going to go to Twitter real quick so we can take a look around. And I will go top down. Oh, wait, I should just go to Blue Wackadoo first. Hold on. I'm going to go to Blue Wackadoo first because I don't know what's happening here.
Rehab friggin' Friday. No 0 DT SPX birdies for me today. Managing the VX MES aftermath shit show, reclaiming capital, and consoling myself with Costco. And wait, is that you, Meta? Okay. So
hashtag way too long delta. I get it. Yesterday was a tricky one.
Yesterday was painful. And Blue Wackadoo, I took a full loss on my SPX 0 DTE, and I know you're probably bigger than I am. And then, all of our long delta. Yesterday was very painful. All I could do was, Liz and I talked about this, close the computers and do something else.
I did. I closed my computer and walked away. And you know what's crazy is a lot of times those would have affected me a little bit more. And I think that just comes with trading experience. I was like, whatever. I'm gonna clean out a closet or do something, take a walk, do something.
Yeah, I was on the phone with someone today, and I was like, "Yeah, I used to have a lot more money 2 weeks ago." But I don't know what happened.
And the reason is she's hashtag way too long. I like that hashtag. Thank you very much for back to. I'm going to retweet these. I did. This was 1 hour ago, and I have to go to Ashvin, even though he's a Cards fan. Snagged a couple of bucks shorting MES again, so he's doing that, which is great. Hopefully you got out of that. I like it, Ashvin.
And Frank, I see Frank on here, but I also see we've gotten some messages from Frank. Talking about, and these are not any kind of market secrets, volumes are huge, all in capital with an exclamation point. Huge. Many have already traded a full day's worth. So like a full day's worth of volume already traded by 10 a.m.
Yeah. I mean, it's kind of crazy.
Yeah.
Which is awesome. And I appreciate Frank for giving us all that stuff. Frank the Great is honestly really good at his job. No one can do it.
I have a question, and I don't know if I'll get any answers, but I literally do have a question I'm trying to answer myself. If anybody out there has any suggestions, I live in Chicago. I have a hot tub. I have to decide this weekend, do I want to, give it a fresh fill for the winter, or do I want to close it and shut it down for the winter? I have never closed the hot tub and shut it down. But I'm thinking about it. If there are any hot tub people out there, tell me if I should keep it open or shut it down. Hashtag LIZJNY.
Well, you use it a lot.
But Liz, we've had a couple mild winters, which has been easy. But if we get a lot of snow and then the thing's running like crazy and steam's coming out and the hose isn't hooked up and the water's evaporating and I'm filling it.
Okay, so this is from Frank the Great. And there's an exclamation point with it. He says, drain it.
Maybe he has one up in Wisconsin.
Oh, and then Blue Wackadoo says, keep it hot. You're getting, I don't know. Who's to say? This can go either way. I wanted to get to this for you just because this was Ashvin yesterday. And he said, yes, Jenny, Louisville and Notre Dame are both in the same conference. So it's quite possible that that was the opponent for the basketball game you saw. So I wanted to make sure we got to that. So Frank, thank you for all of your service and your information. Okay, there's Ash again. Okay, now I'm going to go top down because we've got some tweets coming in.
Oh, wait, hold on. That. Or yeah, that one from Frank.
Let's go bottoms up just because we went with Eric first. Okay, so then we'll go, Liz and Jenny, do you guys do a poor man's covered call? Sure. I want to get long Netflix Monday on the split, but doing it with a poor man's cover call by setting up deep in the money call and selling calls against it. So, okay, these are opinions. This should mean nothing. Let's go to Netflix.
And I'd wait. You may definitely wait for the split.
I know that's what I was going to say is I wanted to get long Netflix going into the split too. So I actually have options that are expiring in 9 days.
I wouldn't keep them. They'll get all messed up.
That's exactly what I was going to say. I wanted to go into it. I'm closing them and then I'll go back in after the split because I think they lose a lot of liquidity when you go through this.
Oh, and then they're all, I wouldn't fool with it. I closed my Netflix position yesterday, or the day before. I don't know. I got out of my Netflix, just because I'll wait till after the split. And then after the split, it'll be pretty easy and inexpensive if you want to do a poor man's covered call on Netflix, because it's only going to be, it's a 10 for 1 split, right?
10 for 1, I believe.
Is it 10 for 1 or 5 for 1?
Well, it's $1,000. I'm going to assume it's going to be 10 for 1, right?
No, it might have said 5. Well, I think it is 10 for 1. I think it'll be.
I don't know. Hold on. It's got to be 10 for 1. You're going to get, it's going to be $111 stock instead of an $1,100 stock. Now, Jenny, would you, if it's going to be 10 for 1, would you ever buy 10 shares right now if you wanted to be long it?
No, 10 for 1. 10 for 1.
So that's something that you could do if you wanted to belong it through there. I know
they want a poor man's covered call. They want a poor man's covered call. They don't want to buy the shares.
No, I know what you're saying, but a poor man's covered call is bullish. So if you're trying to make a bullish play on something, you'll find a lot of people with a lot of different opinions. I don't like having options once they go through the split.
Yeah, and I don't think, like, what are you going to miss out on? A one-day move, and it might not even go up. It might go down. Who knows? So I would just wait, and we could even on Monday look at some poor man's covered calls in Netflix.
Yeah, we will. Okay, so it's pretty interesting.
I mean, it'll be nice. It'll be easy to just sell puts in there. $100 product, it'll be very easy to sell puts in there.
It will be.
Can I see the chart? What kind of hit did Netflix take these last couple of days?
Oh, it took a big hit. Well, big-ish. I mean, it brought us back to November 10th, so not that big of a hit. But it's not a foregone conclusion, because take a look at this. So this was a $1,000 stock that went 10 for 1, and then after the split, it just completely tanked.
Yes, CMG has been ugly since the split.
Yeah. So that's the one thing. It's not a foregone conclusion. It really isn't. It's not going to split and double and split and double and split and double. It doesn't always do that way.
Except Walmart.
Did it split and double and split and double?
I mean, didn't we ask once, like, how many times Walmart has split? And Walmart has split, like, I'm gonna look this up, because I think.
But that's why the term. That's what it comes from. Some of these stocks have split and doubled, split and doubled, split and doubled, right? So that's where I can't make this stuff up if I tried.
How many times has Walmart split? Walmart split 12 times.
Yeah. Mm-hmm. And it's so funny? Walmart, it looks like it's always trading around the same price between. I guess
right. That's what I mean. But it split 12 times.
Yeah. Yeah.
Since 1970.
12 times since 1970.
Yeah.
That Walton family, all the kids are some of the richest people in the entire world. I did a report on them in college.
Oh.
There's so many siblings of the Walton family, and each of them individually are on the list for the richest people, all the kids, which is crazy. And thank you very much, Old Dog Bronco. CMG was 50 for 1. It split 50 for 1.
50 for 1.
Yeah. Okay, so I'm going to go back to Twitter. Thank you very much. Now we got Punished Pixels. Good morning, ladies. Interesting trading day feature request. Is there a chance to get additional reporting that can be built into the platform to determine which types of trades are most profitable by symbol and duration?
Send that to research. Repost that and it's put on research. Liz, repost it and quote it. Like repost, quote, and then what is it? Tasty Trade Research?
I have no idea.
I don't know.
I'm just going to go at Tasty Trade, right?
And then somehow, or who's our researcher to put on there?
Julia Spina.
Yeah, tag Julia. Okay, yeah, good.
Where is she?
I don't know. Is she trading? Maybe she's not. Maybe she's too cool for. She might not be on X. She probably is, though.
Yeah, I don't know what hers is. I don't know who else is on there, though. Nonetheless, I just put at Tasty Trade. It'll get to
and
the
then
right
do put hashtag research, and they can send it to the right people. I have my window.
No, this is platform.
What?
This is a platform request.
Well, we'll figure it out. We'll figure it out. Yeah, just send it. Just send it to.
So Punished Pixels. This is above our pay grade. We're gonna send this to the powers that be. There we go.
Yeah, we'll see what. Okay. I mean, Liz and I are just like peons in that office.
Yeah, no kidding. Okay, and then Ash, another win put on the calendar yesterday in MES. Good job.
That's good, Ash. Ash Fitness been doing well.
I like it. I like it a lot. Okay, so that's perfect. Let's
go back in the platform.
Go back in the platform. Dues are up 13. Okay, prediction market times. I mean, really, not market. Prediction time, Johnny Andrews. It is Friday, 10:47. So we've got about 7 minutes left in this show. Where do you think SPOOs are going to end today? I'm going to use SPOOs, not SPX. We're going to use this, okay?
I think we're going to be around. I mean, I kind of thought this morning when I was looking at it, we'd end right around 6,700.
6,700? So you think we're going to go down 73 points?
Well, this morning.
Oh gosh. Okay, she is a finance photon. Thank you very much.
Oh, there we go. Thank you.
Okay.
I thought that we could have ended up around 6,700. Well, it's not an expiration. It's just a Friday.
It's just a Friday.
I kind of think we'll be down on the day, and that's honestly just my own wishful thinking. I'm trying to put it out there because I took off my put side of my iron condor for a dime. I still have my call side.
Which is so, isn't it hilarious that you actually look at those small SPX trades more than you do anything else?
Because I'd rather be down today, cash in on the SPX trade, and then go up for the rest of the year for the rest of my portfolio. I
know. I mean, we're just having a conversation here, and I know.
Where do you think we're going to be?
I just wanted to bring it up. So if it is 0 DT, because we're asking at the end of the day, these deltas are a little bit wonky, but your 6,700 has a 16% chance of touching it at some point during the day.
I told you my put spread that I, had on this morning, that I put on this morning, was the 6,600. That was my short put, the 6,600. I had the 6,600, 6,590.
What delta was the 6,600 this morning?
I didn't even look. In my mind, I thought, here's what I added up. I thought we won't be down more than $150 on the day. This is what I was telling myself. We're not going to be down we're not going to be down more than $150 on the day. So I went from yesterday's close down 150 and picked that strike.
Oh, okay. And you, but you were.
I didn't even look at delta. I just thought we're not going to be down more than $150 on the day.
So was it like a $20 wide put spread, or how wide was your?
I only did a $10 wide. I did $10 wide, and I got $1.10, and then I did a $5 wide call spread for $1. So I got $2.10.
Now I know you were in SPX, not in SPYs, but you got
Yeah. Oh yeah, I was in SPX.
Yeah. So they're different strikes if you're looking at that. But I think even S&Ps, I think there's a shot we're going to close just under 6,800.
So I'm going 6,700. You're going 6,800.
I mean, I figured I'd just give you a round number.
Yeah, and when I say that, I'm looking.
But I had the luxury of having the platform open while we did this because I kind of liked a 25 delta, like a 28 deltas. This is giving me a 60% chance we're going to hit it at some point today.
I kind of want to be down on the day.
I'm out of my SPX, and
even if I didn't have the SPX, I still kind of want to be down on the day.
It's a battle royale, as Frank was saying. Hey, did he give you the info? Is it calls over puts over calls?
He didn't say. Oh, the only thing that's on my phone right now is an Etsy notification. Let's take a look at Etsy. I have Etsy stock. That's one of my strongholds. I'm holding firm. I'm not selling it. I order way too much stuff on Etsy.
We have an Etsy position, I believe, don't we?
No, let's get in. Okay, so take a look at the chart in Etsy. It's taken a little bit of a hit. You can see yesterday's move. Yesterday's move was decent.
Yeah, it was down lower that November 10th. This is the one we keep saying. It's been there. And then before then, it wasn't there since September 15th.
So let's look at December puts. You get 219 for the 55s.
It seems a little excessive.
The buying power?
Yeah.
I know. Buy the 45s. Do the 55-45.
Doesn't it seem crazy excessive?
It did, but now for $1.91, you're only using 800.
Yeah, I don't mind that. You're giving up a little bit.
I didn't show you my recent pants. You're gonna like these. You're gonna like these. They came. These pants. These are flowy pants. I don't know if you'll be able to see. Oh yeah, they are. They're like. See, it's like Mickey and his cruise hat. They are Disney cruise pants.
I need a photo of you in those. I need a photo of you in those, please. I laughed so hard when you were pulling those up. Nothing came out for a second.
Yeah, they're big flowy pants with Mickey Mouse and his captain's
hat. I didn't know what. This is what I love doing a show with you. You never know what's going to come out of your mouth. Did you order them from Etsy? Is that why you're showing me these pants?
Oh yeah, I got a whole Etsy haul. I got a lot of stuff. Lots of stuff. I'm getting ready. We leave for our Disney cruise on January 1st.
That's going to be fun. I can't wait to see you in those pants.
And it's so funny because this is okay. So we're going on like one of the newer ships. We're taking my son's girlfriend. She's never been on a cruise before.
Ooh,
I've got all this stuff. Like I have all this stuff. On Disney, you hang these things from your door, and people put surprise gifts in.
Yeah.
And I have like gifts lined up for her every day. And then she's going on so this is her first cruise. then her second cruise ever is going to be like bottom of the ship, inside room.
As I like to call it, the belly of the beast.
A $300 7-night cruise for spring break with 13 of their friends. And she's gonna walk on that ship and be like, "What the heck? This is nothing like the cruise I just got off of."
No, she will not be.
She's gonna be in. She's gonna come off this ship in January and tell all of her friends like, "Oh, you guys are gonna love it. It's so much fun to go on a cruise."
I mean, it is. And like teenage kids don't. I mean, they're not teenagers. They're in their 20s and they're actually legal drinking age. So I'm just going to put that out there. Unlike the ones I was going to say, they don't mind. Like they're in it for fun. If they're all together, you know what I mean? They'll have so much fun that you just can't put like me in the belly of the beast anymore. I can't do it. I can't do it. I wanted to see what Royal Caribbean was doing. Are they taking a Royal or a Carnival?
Oh, Royal Caribbean.
So look at this. Royal has really taken a hit. I mean, I still think it's way higher, but it hasn't been there since May.
Yeah.
Yeah.
Yeah, that took
been there since May.
And what's Carnival doing?
See, but Carnival didn't go up nearly as much. It's down too, and that's as high as June, but it didn't go up nearly as much as Royal Caribbean.
No, but Carnival at 26 isn't terrible. I'm just curious what kind of premiums in those options because that was never.
God, you have to tell Logan because he'll get. I mean, is it a 7-day cruise?
7-day.
You have to put this into his account for one day because he'll get $100 credit, and if it's a $300 cruise, that's a third off.
A third off. So what do I need to do? So he's got his trading account. So he has to buy how many shares?
You have to have 100 shares.
He doesn't have that much money in his account.
But you have to have it in there for one day.
Are you sure?
You have to have it on the statement. If you can get it on the statement and then get it out, you get $100 off.
But when? Right before the cruise?
So a couple weeks. When is his cruise?
In March.
Okay, if his cruise is in March, he needs March what? End of March, beginning of March?
Like March 20th.
Okay, on the March statement. So you need to put it in there like literally April 30th for one day. And
no, but that's after the fact? That's after the cruise?
Oh, I'm sorry. March is, no.
So March 20th.
No, before the cruise.
So February.
February. Like February 28th, you buy 100 shares. March 2nd, sell the 100 shares and he'll get $100 off.
Okay. Excellent idea.
Excellent idea. You're only going to risk $12,000 for one day.
He's going to own the shares for one day. But I feel like if anyone from Royal Caribbean is listening to us, they're going to cancel their program.
I mean, how many people are going to be doing this? He's got to. A lot of people wouldn't do that. All right, Jenny.
It's 10:55. We're out of time.
That's what I'm saying. This is my closing remarks to you. Have a wonderful time. Please send me a picture of you in those pants.
Well, I'm not going to wear them this weekend. I'll be. I'm still deciding. Do I close my hot tub or not? That's going to be this weekend.
It's a mixed bag of tricks in the chat. So it was Blue Wackadoo and Frank made a market on if you should close it or not. Close it, not close it. So we will find the deciding factor on Monday. Everybody have a wonderful weekend and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Monday.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Let's celebrate, dance to the beat. Forget the walls and stop the feet now. The fun and games and memories I love to share with my family. And everything is better when we get together. Everything is better when we are side by side. Hey, 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 side by side.
What's up, Tasty Nation? Welcome back to the show. Hopefully you enjoyed that new opening jingle.
I know, right?
My name
new opens? Wow. Didn't know.
Upgrades everywhere. We got new mics. Let us know in the YouTube chat if we sound significantly better. Maybe we can whisper, do a little whisper market session into the new mic. But
keep talking. I'm curious to know, and you can keep talking. I've always wondered, because we had these old mics before, right? I'm curious if we actually talk at the same time. Before it would stop one and then the other would go. So you're not keeping talking. So I think you can actually get heard the same. This is awesome. Great mics.
I didn't realize that one would cut out the other.
Yeah, that's interesting. For sure. Like some of those older mics, it would almost like you probably noticed it. It was just like almost cut off some. It would happen sometimes, but I don't think it will now. I don't think it will.
We've got some crisp sound reviews. Sounds crisper. Okay, crisp is the word of the day, people.
Nice.
Love to see it. But yeah, we are seeing a little bit of a reversal from yesterday.
Yeah, just a bit.
E-minis up 25, NASDAQ up 150. The Dow is actually down on the day, which is interesting. Russell basically unchanged. Bitcoin down 960. We're well under 100K now, which is very interesting. We'll certainly talk about that. But if you have any questions, comments, trade ideas in the YouTube chat, you can join us there. Just pop over to tastylive and throw those ideas into the YouTube chat. Shout out for Tony from Mexico for this hat. We saw him in San Diego. It's a nice little pickleball hat, athletic pickleball hat. But
was it the Bobby Riggs Pickleball Club or something like that?
Literally.
Yeah.
It's literally it. But yeah, lots to talk about. I think the most hilarious position that I have in this portfolio is Micron. MU is just flying around like crazy. I have this iron condor that was 14 points out of the money yesterday, and now it is 4 points in the money. So this thing is just insane. Got to be careful with this product if you're trading it, but I've just never seen anything like this. Like it's like meme stock territory for chips.
Bro, and look at SanDisk, same deal. These are the same names we were talking about yesterday. This is why, man, I just chosen to stay away. I mean, they are moving around so much. If risk defined is definitely the way to go, like you have, if you're going to do it. But first of all, I'm a little shocked at this move so far today. I really am. And I thought we were headed for low. When I woke up this morning and I saw where things were, it looked pretty ugly. And I was like, uh-oh, we're in for an ugly Friday. And I didn't think that we would see what we saw last Friday, which was a big bounce. But sure enough, we have. We'll see if we maintain it.
Yeah, it's very possible that Nick is back in the matrix, seeing the matrix of the markets. He was saying, we did see kind of a bloodbath yesterday, but volatility wasn't picking up as much as he would have thought. So he thinks he was playing for kind of an upside move here. And I think really when you look at all of these moves in the E-minis, whether you're looking at SPX or the NASDAQ, all of these sell-offs, or I should say most of these sell-offs that were big liquidation events where we were down more than 1.5%, let's just say, the next day or a couple days after, we were right back to where we started. So very interesting here to see it happening again. And I think really that's why, in my mind, that's why volatility isn't moving on the initial move. I think the market is waiting for a continuation to the downside. And that's when volatility really will pick up, because we've seen it time and time again where we see the big sell-off and then the next day we get a big reversal and a vol crush. So until that stops, I think that's kind of the status quo, or the way that I'm seeing it is, if we see a big sell-off over 1.5%, and volatility is not really moving that much, it's likely because, the market is kind of pricing in the possibility of a reversal with some of these names, but still super volatile. Regardless, if you bought the dip yesterday in some of these names like Micron, Microsoft, you are making out like a bandit today.
You look like a genius. Look, this morning when we were talking on This Week in Stocks, we basically did a prediction market for the rest of the day. I was the lone person that said lower, not because I wanted it, because honestly, I just thought that was going to be the worst thing for my portfolio. I was definitely already long. And so I am fine being wrong with my prediction totally, because mostly I have long deltas, and that was the case yesterday. It didn't really add anything today, but at some point or another, maybe we'll risk manage throughout the day. I don't want to kill the winners. The winners are doing well, so let's just let them ride.
Yeah. Pedro in the YouTube chat, good shout out here. Why is nobody talking about the big move in bonds? Huge move to the downside here. And shockingly, if we look at the CME FedWatch tool, we are now at almost a 60% chance that we do not cut in December. So that has flipped on its head. Yesterday, we were looking at a 50-50 proposition. Yep. A week ago, we were looking at a 70-30 where we were getting a cut, 30% chance that we would not. And now we are sitting at a 60% chance that we will not get a cut in December, which is a very interesting move in the bonds. And I think that has permeated through the markets as a whole. But yeah, kind of a crazy move there.
That was a fill on my SPX from yesterday. The basically 1 DTE Iron Condor got filled on that one. Did that one for $2 yesterday and just bought it back for 50 cents. So
love it.
Yep.
Yeah, I was doing last call with Nick and we were talking about SPX 1 day going into 0 day, like the cookie cutter Iron Condor strategy. And I was just like, 50 points feels a little light given the move that we just saw. And then the market opened like basically flat. And I was like, well, that could have been a nice winner there. But yeah, these trades we placed yesterday coming in nicely. I mean, that the Iron Condor I placed, so I had the 6450, 7100 Iron Condor.
Yeah.
That one is actually coming in a little bit in 20 cents from where I sold it, but it'll be very interesting to see with 47 days to go. This is an end of the year Iron Condor where we end up, especially if like next week, if we just chop around 6,800 and we get a bigger vol crush. I'm very interested to see how that translates to this Iron Condor premium getting crushed, because 7,100, 6,450 is pretty far away from the current price. But still, I would prefer to see a rally because I've got this 14-day 10-point wide put spread to finance a 5-point wide call spread, getting back 90 bucks today on a 35-point move. So if we reverse yesterday's move, this is going to come in quickly here.
Really fast. Yeah, for sure. Because I mean, volatility's already been sort of dissipating as it is. I would expect it to come in pretty fast.
I think I'm going to close this micro crude contract. I bought this, yesterday? 2 days ago?
2 days ago, yeah.
Yeah. So yeah, I've got the micro crude, just one lot up 150 bucks. I think I'm just going to close it. Just take some risk off in this environment, free up some buying power. There we go. But yeah, that's how we've been playing this thing. When we dropped below 60, we saw this big red bar here. I think I bought it on the next day or maybe at the bottom here, but getting a big green bar reversal. I'm not playing for a much bigger move than this. And as Thomas has pointed out, he thinks we're going to be in this new trading range between 65 and 55 for quite some time. So just going to play that chop and see if we can, buy some dips where we want to, or sell some rips if we get closer to 65. But that's the beauty of the micro contract. You can do one lot and hold it until you're right. And hopefully that's the case for you.
Yeah, the nice thing about it is like it typically has given us at least $1 move, like so $100, wins, which is, it's not nothing. It's great.
Yeah. Real quick update in the Tasty FX markets. If you've got a Tasty Trade account, you can click on the Tasty FX tab and open a Forex account through this portal here. And then you'll see what we're looking at here. But some pretty big moves in the dollar, given the move in the bonds here. But this dollar franc position, this was, I was losing like 130 bucks yesterday, losing a lot less today. The dollar, Aussie dollar long that I have up 20 bucks. I think I'm just going to leave all these on into next week and just see where the markets go. But I think eventually the next move here would be to just buy another tranche of the dollar franc pair, given the extreme that we're seeing in this price movement. You can see this here. I got long at the top of this short-term range, but if you zoom out, we still have a long ways to go to the upside if we are to get a big reversal. So you can see we're kind of bottoming out at this range here at 79.3. The lowest it got earlier this year was, let's pull this one. This was like 78.2. So still some wiggle room here, but the nice thing about trading these super small is you have the ability to throw on another tranche. So if I have 5 micro lots here at 8.11 and I buy another 5 micro lots at 7.93, all of a sudden my cost basis goes from the top of this near-term range to the middle of this near-term range. And if we keep going down, I could do that again in theory and just dollar cost average to the downside and bring that basis lower. So that's the nice thing about doing super small lots like this. You have the ability to do some more tranches if you want to.
This thing's gotten smoked since the beginning of the month.
Yeah, absolutely.
Absolutely smoked.
Mm-hmm.
Where's gold now? Is it still down pretty decent? Yeah, this is I am a little surprised that gold has not reversed as hard as the rest of the market, honestly.
Yeah. I mean, gold futures having a nice intraday range today, almost a 200-point range if you look at this from 4,200 to 4,000. But yeah, I think when it comes down to placing your bet on where gold's going, I think there's more people that are placing it to the upside than downside, but this has been a nice trading range if you've been selling strangles, iron condors, and something like this, or GLD. That's my vehicle that I've been using. But I've got this. We did this trade, the copper gold pair. So not working out right now, but this is a much longer term trade. So we did this with Thomas on where we bought the HG call calendar spread at the 6 strike. So I bought the February, sold January for $750, down $100 right now. And then gold did a very similar trade, bought the February 390 and sold the January 405 call diagonal spread. So that was a 15-point wide diagonal spread for $775. So kind of just playing both to the upside with positions under $1,000 and seeing if we get those rips. You could also see it as kind of a market hedge if you believe that if the market sells off aggressively, gold would rip higher. You might see the same thing in something like copper and other precious metals. So kind of an interesting downside market hedge while still playing into the narrative that we might see higher prices in both of these.
I'm glad you remind me of this trade. Let's see if I can get in because I never got in that day.
For the 6 strike?
Yeah, I totally forgot about it. Yeah, I'm trying to get back in now. Not back in, but I'm trying to get in. I never was able to get a fill that day, and I even tried the day after, but now it's even cheaper. So let me try.
Love to see it.
Totally forgot.
Love to see it. Let's see. If we're in the YouTube chat, we can take a look here, see if we got any trade ideas. Gold's getting spiked this morning, but GDX is only down 35 cents. Shouldn't GDX be down more the same as gold futures? So there's going to be a disconnect between gold futures and GDX, at least kind of a small one. But because when you look at GDX or GLD, you have a continuous product where when you have gold futures, you have a rotation when you go from one contract to another. Not necessarily saying that that's the case right now, but I think when it comes down to trading both of these, and if you're looking at the net change, you can see gold futures are down 2%, where GDX is only down 43 or 0.43%. So I think when you look at GLD, you'll see a closer relationship between GLD and gold futures, where GLD we're down 1.5%, gold futures down 2%. But you can see this even like in the E-mini futures and SPX. SPX is up 0.48%, E-mini futures up 0.43%. So just keep in mind, like these are products that are going to move at a 99 correlation clip most of the time, but you're going to have a little bit of a disconnect for whatever reason or another.
Yeah, and sometimes you can just look in those situations, look at the actual makeup of the ETF and kind of get an idea for what's going on. You'll see why or why not it's actually not rolling along with it, but especially the GDXJ. I mean, the miners, I always think of that one as almost like I don't know. It's almost like it's like the biotech of the gold world ETFs in a way. I mean, it's just the miners are a lot smaller. They move very, very randomly. So, take that for what it's worth.
Yeah. Donald, looking at IonQ, December 38.65 strangle. Let's take a look here. December 35 days out, 11-point implied move from 47.90 where it's trading right now. If we wanted to check out this 38.65, it's basically just outside of the expected move to the upside.
Yep.
Just inside the expected move to the downside, but you're matching the premium here, collecting about $160 on each side. Certainly a high return on capital when you look at the buying power of less than $500, collecting $335. So yeah, do you have a position on in here?
I think I'm just still short a put from a while, aren't I? Yeah, I'm short the 55 put. I think maybe even in these still. I can't remember. Let me see. Yeah, that's it.
Yeah, I think
I like that strangle.
Yeah, I think the strangle is certainly viable. I lean more towards just selling the put here when you consider how far it's fallen from early October. We went from 85 down to 50. So I might just throw this put on, lean a little long, and see if we can catch a bounce here. Especially when you consider, like, I could sell this 45 put for more premium than the strangle, have no upside risk, and reduce cost basis by 10% from the strike price. If I sell this 45 for $400, I think I'm gonna do this. This feels good. So, and that's coincidentally the most liquid strike in terms of open interest. Markets aren't too great in here, but I'll always lean towards these round numbers, for lack of better words, where it's like the 40 strike or the 45. You'll usually have more liquidity in those, and you can see this here, 3,000 contracts at the 45, then you have a couple hundred in between, and then 3,000 at 40. So just when you have these illiquid markets, you can go to those more liquid strikes and hopefully save yourself a couple of pennies here. All right, let's fill at 420, IonQ short put at the 45 strike.
Yay, come and join me in the short put and IonQ. Everybody floats down here. You'll float too.
Hey, we'll see. How about Palantir? 205, 210 call debit spread on Palantir for December. Yeah, sitting at 175. It's fallen from 200 and change. So I think when you look at, let's see, 205, 210. Are we looking at different expirations? That's the question.
205, 210.
205, 210 is in the 42 day. So maybe the end of December. December monthly is where I would go with this thing. Because when you look at the December 26th cycle, you got 30-cent wide bid-ask spreads at a minimum, it looks like. But you go to the December monthly, and you got 10-cent wide bid-ask spreads. So I would go here, and I would actually do, instead of doing a far out of the money call debit spread, I'd rather do something like a calendar spread here in Palantir. I mean, the problem with these out of the money debit spreads, they are cheap and you can make more. But when you consider the fact that even if you get a move in Palantir from 176 up to 210, this spread isn't going to appreciate to $1,000 until you're at expiration, especially when you have high implied volatility. So you can look at this here and kind of synthesize the same move. A 165, 175 call debit spread right now is only trading for 587. So given that difference there, let's see if we can throw on like a 200 strike calendar spread instead, where we're selling this higher IV in December, reflecting a 22-point expected move, and we're buying a longer term January option for a 30-point expected move. You can see we've got twice as much time, but it's not reflective of twice as much premium here. So the 200 strike, I'm going to do this. So I'll do the 200 strike calendar, see if we get a rally up closer to that level. But you can see I'm buying this option in January for $800, selling the option in December for $425. So my total cost here is a little bit more than the debit spread, but I have a lot more wiggle room to manage this thing. And my max profit on this is going to be significantly higher if we look at the analysis tool and just look at the theoretical P&L through the next couple of weeks here. So this is like right now, if we got this move to the upside, I can make $160. But if we push this further out in time, we can look and we'll see, like if I push this to the end of the month, 11/28, now we're looking at a $300 profit if we get a rally, not adjusting implied volatility at all. So let's see if we can get there. So I was just filled to 362 instantly. Instant fill. You hate to see it.
Yeah, not only do I have that calendar on, but I also have a diagonal too, the 185, 200, 185 being long in Jan. So it's just had such a big move to the downside. You know, these names get a lot of volume. They trade a lot. And I wouldn't be surprised if see a little bounce here in this name. Same with NVIDIA.
Yeah, definitely. How often do you backtest your trades? Does it need to be done for every trade you make? Is it more important to backtest SPX 0 days? Thoughts? Good question. I don't think you need to backtest all of your trades because when you look at, if you do a backtest for a specific strategy, within those backtests, there's going to be thousands of occurrences, let's say for SPX. If you're doing something every day, if you're doing a 0 day every day for the entire trading year, you're going to have 250 some odd occurrences for that year. And within those occurrences, you're going to have subsets of winners and losers. So you can't, I don't think it's good to just, it's not good to like take a microscope into those specific subsets. I would also just lean on the research that we do. Like if we show, when the market's down more than 1%, selling a put spread is a reliable strategy over time. You're going to have times where it's not, and then you're going to have more times where it is. And that's where the totality of the data comes into play. So I don't backtest really any trade I do. I just know from a macro perspective, if I did this trade 1,000 times, do I believe that this would be a winning trade and a net profitable trade over time? And obviously I'm not going to place trades that aren't in that category.
Yeah, I mean, I think we're kind of at a point in our career we don't necessarily backtest as much because we've done so much trading. We're aware of all the different outcomes and possible changes to the trade. But I think it's good for people who are fairly new and trying to figure things out. At some point or another, though, you just have to sort of assess the environment and the trade that you want to put on and just go for it. You got to click the button every now and again.
Yeah. What do we think of a rut iron condor 47 days out? 2,600, 2,300, 100 points wide. Wow.
Really?
100 points wide in rut. Let's see. 2,600, 2,300, 100 points wide in 47 days. So that's December 31st, end of the year. And what's interesting is like, this is technically a weekly cycle, but these are actually really liquid, all things considered, because it's that, end of the year, end of calendar year type of trade. So
end of year, end of quarter. Yep.
Yeah. So 2,600, 2,300, let's take a look. I mean, this is within the expected move to the downside. So it's going to be a kind of a tighter trade here, but 100 points wide would be 2,600, 2,700, 2,300, 2,200, picking up $2,800, risking $7K.
I don't like that part.
Risking $7K.
Yeah, I don't like that risk reward.
Yeah, I mean it's 1/3 the width ultimately. It's just a large position. I think with iron condors, it's tough for me to take a big shot with an iron condor because I know that there's not a lot of defense that I can deploy if this thing gets blown out to the downside or upside. Like really all I can do is if you test that 2,300 mark, you can roll out in time. You can roll the put spread out in time and then get rid of the call spread or just leave the call spread on. Same thing to the upside. You could roll that call spread out in time, get rid of the put spread, but that's really it. Like you don't have the same flexibility as if you did a strangle. But of course, doing a strangle in something like IWM, which is going to be reflective of a similar product here. I think if you were doing a similar trade going to the end of the year, like why not do this a couple times, but do it undefined risk? That's where I lean. Instead of doing a 7K trade that's an iron condor where you don't have the same flexibility, I would rather do something like this where I'm selling the 260, selling the 230, picking up $500 for $3,900 in buying power. If you did this twice, you're going to be at a similar buying power requirement. You don't have the same max profit, but you have way more flexibility with this type of trade. Like if you get tested to the downside, now all of a sudden you could roll your call down. You could shift the whole thing. Like if you get a big rally in IWM, you could go from a 230, 260 to a 240, 270. You can just move the whole thing. So you have way more flexibility, and it's a much higher probability of having a winning trade if something like this, because you have so much more tools in your toolbox to defend the trade. So similar to IBIT, like I've been managing this position. We've had plenty of volatility in here. Started the year at 55, went to 60, went all the way down to the low 40s, shot all the way up to 70. Now we're sitting at 54. And if this was an iron condor, I wouldn't have had the same flexibility, not even close to the same flexibility that I've had. If we look at my order chains here, I've done plenty of rolls through the entire year. And again, I wouldn't be able to make these adjustments, like going from a 55 strangle to a 55 straddle, and then going to a 60 strangle. Like you just have so much more flexibility when you're undefined risk. And even though this trade has been crazy, it's still a big profitable trade with using, a couple $1,000s in buying power, because you have that flexibility with undefined risk. And I'm way more comfortable doing a strangle in IWM than like some other product where it's an equity that's flying around like crazy. Like Micron's a good example. Like IWM is certainly not the same as something like Micron. So that's a long-winded way of saying I'd rather do a strangle in IWM versus an iron condor and rut.
Good call out, actually. I'm glad you made me realize I need to adjust on my IBIT strangle. Just rolled that call down, and it's just it helps my position there. But yeah, good call, and totally agree on that one. I mean, I think it's just that's the whole point. Like when you looked at the risk, for that rut iron condor, similar risk in IWM, and you're able to manage it a whole lot more freely, I think.
Yeah. Love calendar spreads and Palantir really take advantage of the IV. Yeah, I mean, that's what we're seeing too. Just the fact that you can collect more than half of the payment on an option that has twice as much time, that's always going to set up for a nice risk reward. And you still have the ability, like, even if Palantir stays down here and I lose some money on this 200 strike call that I bought, I can roll this 35-day into a 45 or a 50-day, convert it to a diagonal spread. Like this debit of 360 allows me to do a lot of different things to still defend that trade. So yeah, love the defined risk, short premium aspect of that short option relative to the long.
When'd you throw a wheat trade on?
This I've just had forever.
Oh,
this is just, I had a 560, 570 diagonal spread, I think. Yeah, 560, 595. Then I rolled the 595 down to the 580
for a minute.
Yeah, we were trying to catch this bounce here. I think like right around here, we saw this big red series of events.
Yeah,
but then it just kept going down, and it's been a tough trade if you're trying to buy the dip here.
For sure.
Outside of using static contracts. But yeah, I've had this on forever.
Yeah, dude, these mics are awesome, actually. I mean, the fact that I can say something while you're saying something, it's the best.
Someone in the YouTube chat said,
hear you.
Yeah, someone said, now you guys can interrupt each other constantly.
See?
As much as you want.
No, because it would definitely happen a lot, right? And then you'd be like, wait, what? And you didn't hear what the other person said, or et cetera. So most times we just sit here being quiet, right?
Yeah, seriously. Rodrigo looking at...
Shout out to the team for the mics. Appreciate you guys, man.
Yeah. You have the new light setup. I don't have the new light setup yet. But next week,
what?
We're going to be illuminated, let me tell you. Worrying about early assignment risk in SPX does not exist. SPX, any cash settled product, whether you're looking at RUT, SPX, the VIX, anything that's cash settled, there is no early assignment risk because there's nothing to be assigned because you can't trade stock in SPX. So yeah, everything's cash settled, no worries. That's why we go to SPX or XSP when we're doing 0-day stuff. Because if you go to SPY instead, you can get assigned SPY. So like if I have this 674, 670 put spread here. That's for a 0-day trade. If SPY sells off into the close and now all of a sudden it closes at 672, this long option becomes worthless, and the short option is going to turn into 100 shares of stock on Monday. And then if we get a big sell-off on Monday, now all of a sudden your 4-point wide spread where you're only risking $300 is 100 shares in a $67,000 product notional when you consider that.
I'm just the idea guy, okay? I'm not the implementation, but I'm going to tell you something that I think will happen at some point in time. You will have the option to decide whether or not you will take assignment on something at some point in time. I feel like they'll figure that out. I mean, when you think about all the different things, the new marvels that have happened over the years and options trading, et cetera, I feel like that would be one at some point in time.
Yeah. Let's see. ALK 40 strike December put. Airlines are down, but ALK has the best underdog story. What's the underdog story with Alaska?
Yeah.
Let me know. I'm happy to buy into this story. I love an underdog. I'm always rooting for the underdog.
Is it like the new hot destination place for next year or something? I don't know.
Potentially. I mean, Alaska, I've been to Alyeska snowboarding. Solid place.
Bro, I've never been to Alaska.
Yeah, Alaska is cool. It's kind of quiet unless you're going to like one of the metropolis areas, but big military zone.
True. What does a club in Alaska look like? I wonder.
Great question.
It's like one of those like places with all ice in the interior and like
I was literally thinking about that. I was like, it's got to be something like something along those lines, right?
You would
Must
think.
Must be.
You got to have at least one of those out there.
Trade idea in GLD. Long the 385 on Jan, short 2 of the 405s in December, long 1 of the 425s in December. All right, let's see.
Sounds like a lot.
Yeah, let's see. Let's see if we can get this loaded up here. All right, 405, short 2 of the 405s. Okay. And then long 1 of the 425s. Oh, so this is like, yeah, I'm not going to like this trade. I can tell you already. I don't like the short with the long further out of the money. The two shorts, because you're like bearish, but you're not. But let's just see. Let's see what the whole package looks like. Long the 385 in Jan. Okay, that makes more. Okay, so this is a crab trade, ultimately. Long the 385. Okay. Here we go. Let's get rid of all my other strikes here. Check it out. Yeah. So yeah, crab trade. So you got the 385, 405, 425. The 385 is pushed out in time. So I retract my statement. I do like these trades where you are, it's the same thing as a diagonal spread or calendar where you are buying a longer term option, inventorying that bullish delta, and then selling 2 of the 405s, defining your risk at the 425 in the shorter term cycles. So when you look at the raw value of this call, if you were to just buy this call by itself, you're paying almost $1,200.
Yep.
But because you have these two cost basis reducing components here, or really these two at 405, and then you're defining your risk to the upside, you're turning this upside trade from a $1,200 trade into a $600 trade. So I do like these setups, especially when you consider, like, let's say gold chops around, these options expire worthless. You can get rid of the ratio here, and you could roll this 405 down to the 395 in December, and then reduce basis still, convert it to a diagonal spread, have a 10-point wide diagonal spread on for way less than $10. So yeah, I like the setup. If you're looking,
I actually like that trade.
An upside trade here. Yeah,
might throw it on.
But yeah, we're already long gold, so we are with you in spirit. I've got the 390 405 diagonal spread. Same story. Paid $1,300 for a 98-day option. Collected $567 for a 60-day option. That's significantly higher than my strike price here. So yeah, we love the diagonal spreads and calendar spreads because it's keeps your risk defined in case you're wrong, but you take advantage of the near-term IV in any setup, really.
Yeah, I'm gonna throw that on. I just have the short put spread in D's right now in GLD. Boring.
Yeah. I like it. Target, call calendar 105, November 100. Okay. So that's, looking at a 5-point wide diagonal spread, January, November. Let's take a look. Sitting at 90. What do I have on here? I have a leftover 95 strike call with 7 days to go, trading for 274.
Charging.
Man.
This thing can't get off the mat.
I know it's looking real bad, but like these are the situations that I like to get bullish delta in. Like when you consider Target, Starbucks, Walmart, Costco, like whatever it is, these stores aren't going away, and it's just it's an opportunity to buy in. The tough thing is if you do it with a Jan Nove position, it's harder to time it because you don't have as much time for it to work out. They do have earnings before the open on the 19th, so that could help this position. So yeah, let's take a look. 105, 100. So going to Jan, 100's $3. The 105 Nove is 70 cents. So yeah, this is a fine setup. You have a 5-point wide spread. You pay $250 for it. Kind of your cookie cutter setup. I might actually go move this in 5 points. So go to the 100, pick up twice as much premium, go to the expected move, and then bring this 100 down to the 95. I kind of like this a little bit better because it gives you a lot more neutral profit territory versus the upside setup. If Target chops around or sells off, you're going to lose a lot more quickly in your 100, 105. And if we evaluate at this day here, you can see you've got neutral profit territory with this trade, where if we bring this up, you don't have as much, and this is not considering a vol crush. So if we crush vol, now we're looking at a scenario where you're definitely losing money on this trade. Let's just bring this down to like 35%. That's probably, I would assume it goes down between 5 and 10% in the long option here. So you can see you would be losing here, where if we bring this down, you would be kind of neutral with a closer strategy. So yeah, I'm always going to lean towards just bringing it in, paying a little bit more. But yeah, I'll come back to this on Tuesday, and I'll probably place a very similar trade wherever Target's sitting at.
I like it. I'm with you. I might end up doing the same thing.
Cool.
Why not? Let's see if it can get off the mat.
Mm-hmm.
Is there earnings next week? Is that what it is?
Yeah.
Oh.
Wednesday morning. So Tuesday before the close would be the last time to trade it.
Speaking of, I think next week there is a Fed meeting minutes. If I'm correct. Next week, Wednesday, actually. Yeah, the 19th. FOMC meeting minutes. Oh, what was that? Just getting filled I got filled on the gold. The gold crap trade. There you go.
Love it. Very nice.
Shout out to whoever gave out that idea.
Yeah. Yeah, it looks like we're getting some numbers next week too. I'm looking at an economic calendar. I don't see any asterisks next to jobs report on Thursday, home sales Thursday, PMI on Friday. You've got some stuff on Tuesday, some stuff on Monday. But yeah, to your point, you get the minutes on Wednesday at 1:00 Central. So yeah, the data will start flowing in slowly but surely. Slowly but surely. All right, we got about 13 minutes left here. Meta, Leap, 400 days out, 610. 610s. Let's see.
What, a Leap call?
Yeah.
Hold on, don't pull it up. I want to guess. Wait, the 610 Leap call?
The 610, 400 days out.
400 days out. Jeez. I'm going to say that it is. Damn, wait, 610? I'm going to say it's like $60.
I'm going to say 40% IV, 200-point move, carry the 2. I'm going to say it's...
No fair. You looked at stats.
No, I'm literally just talking and like trying to think of what it could be. I think you're probably right. I think it's around there. I think it might be a little more expensive just because it's a $600 stock with over a year.
Yeah.
I'm going to lean towards like closer to 10K. Let's see. Yeah, there you go. 11K.
It's way off.
But Samsonite, I was way off. All right. So the question is synthetic stock or an 80 delta call, which is better and how to lower buying power? Is a calendar possible? Yeah. So synthetic stock, I think, is out of the question here. You're just buying a call, selling a put in an illiquid market. So you're probably going to get some slippage here just from the bid-ask spread being almost $300 wide. Buying power. So the nice thing about synthetic stock is that you don't have to put up as much as if you actually own the stock. So with a trade like this, you're putting up 23K in buying power on a $60,000 product, where if you bought 100 shares, you're going to put up 30 grand for the same trade, same risk profile. An 80 delta call was a consideration too. So this would be like the 450 strike. If you look at the extrinsic value here, you can see it right on the platform. You're paying about $5,000 in extrinsic value to hold this position. So I don't really love this trade. If you're doing an in the money long option for 20K, like I think you might as well just do the synthetic stock if you're going to do that, something like that, and get rid of the extrinsic value payment. Especially if you're not selling something above the market to reduce that a little bit. Can you do a calendar spread? Yes, a calendar is possible.
Sure. That would be my go-to. That is my go-to. It's literally what I have for this name in my personal account.
Yeah. And really, it's just like, the question is, where do you think Meta's going to go next year? Do you think it's going to go from 600 back to 700, kind of the middle of this range here? Are you trying to play for it to go back to close to 800? The closer you are to the current price, the easier it's going to be to reduce basis on it. So I wouldn't go higher than the 800 strike. If you're buying this option 400 days out and you're trying to sell something against it, you're going to have a really hard time collecting anything up here or beyond. I might actually go closer in. So like go to the 700 or the 750. Let's just look at, we'll throw both of these on and just look at where we can reduce basis. So buying this option, inventorying delta, one of them's 8K for the 700, and we're looking at 6,500 for the 750. I would just go straight to January. I don't think there's going to be much premium here in December. Yeah, there's $300 for the 700, and there's $1.60 for the 750. If you go to January, you're looking at $900 for the 700, which is a lot better, and then $420 for the 750. So I've got this calendar spread on, long Jan, short Dece, but yeah, you could do something like this. Go to January. I'll just put these on so we can look at the values here. Yeah, so the 700 strike calendar spread, you're reducing cost basis by 10%, which is quite nice. And then the 750, you're reducing it by, let's say, 8%. So I would lean towards the 700. If we look at this and we just bring the risk graph up, get rid of my position, and then let's just push this to like the end of the year. What does this look like for December 31st with no change to implied volatility? If we get a rally back to 700, you're paying $7 grand for this calendar spread. You can make $3,500, not adjusting implied volatility. This theoretical risk just is to the end of the year. So you're getting a lot of decay in this January cycle, of course, and you're getting the appreciation and premium on your 700 call. So you can make 50% on your debit paid if you are correct on a trade like this. So I lean towards this. If we could do one last check here in Meta, let's say you wanted to actually buy the 80 delta call. The 80 delta call would be the 450. If we do curve analysis, if we get a move to 700, you're making $7 grand on 20K. So way more reward to risk with the calendar spread. You could even do the calendar spread twice and pay less than what you're paying here to get the same P&L.
Yep.
If you're trying to make that. So long analysis of that trade, but yeah, there's always opportunities to reduce premium. I think when you go inside the expected move with your long option, if it's a leap, that's where you can get a good return in terms of premium reduction there.
And just so you guys know, this is the kind of analysis we do all the time. We don't always assume like one trade's going to work. It helps to look at the different ways of splicing up the trade.
Yeah. Thoughts on a hood 105, 160 strangle in December? 105, 160.
What do I have on? I got something on. Oh, I sold a put yesterday. Actually, you guys were talking about, you and Nikki were talking about this on last call, I think. And it inspired me to sell a put in here, I think.
Beautiful. Yeah, big rally from the lows from yesterday. Quite the implied move here. So if we're looking at 105, 160, you're outside of the expected move, which I like. Picking up $500, $1,200 in buying power. Yeah, I think you just got to be careful with this thing. I wouldn't go crazy with contracts. I would just do like one if you're willing to do it. But the nice thing about this is that it does have high implied volatility, even at a low IV rank. 70% IV is plenty to do whatever you want. If you wanted to, like, let's say you get tested to the upside, you could buy back December, go to January, move the strikes, manipulate your risk, and still pick up a credit. So yeah, I don't mind it. All right, let's take a look at NVIDIA.
NVIDIA.
All right, a 210 straddle in December, $1,500 in credit. What's the proper way to buy the guts and sell the wings? Good question. All right, so you got the 210. You're in December, leaning long. So the issue here is that if you are trying to buy the guts and sell the wings and buy this back in December and go to January, you're getting out of the near-term IV that's reflective of earnings next week, and you're getting into a longer-term, lower IV crush potential in January. So if you're leaning bullish here, I actually wouldn't do anything with this position, because right now you've got 1570 in credit and you've got this straddle on. We can see your risk profile here. If you get the move to the upside, it's going to be beautiful for this position because you're going to get the nice vol crush in December, and you're going to have that premium come out of your in the money short put. With that said, if you really want to move it, I would just buy back December. I don't like adjusting in the same expiration because you're going to pay a debit and you're going to get rid of your credit. So you can still go to January, and all you're trying to do here is just replace your 3K debit with a 3K credit. You could go to you can move this down a little bit. So you've got the 210 straddle. You could go to like let's call it the 200 straddle, just bringing it down, going out to January, picking up a small credit, doing something like that. It's going to be tough to adjust this position without paying a pretty big debit, but you could also consider something like this, like going to a 190, 200 strangle in January, paying $4, which would bring you to $1,000 credit, and you'd basically end up with something like this. You'd have this strangle on for $10, and you'd have a risk profile at expiration that looks something like this. So I don't like paying a big debit when you're making these adjustments, especially if you're leaning long in NVIDIA. I think you sit if you're comfortable with the risk. I like the position you're at if you are bullish in December. But yeah, if you want to bring the strikes down a little bit, you can move it to January, bring it down to 200. It's just going to be a slower moving trade.
Yeah.
Let's get a couple last questions here.
Still hanging in there to the upside. Wow. How about it?
Love to see it. How about a crab trade in VRT? $9, up $9 right now. Along the 180, 200, 220, Jan, December. Okay.
What's the chart look like?
You don't say. Yeah, big rally today. You're seeing a lot of this, like big sell-off and then a huge green bar today. But the E-minis and NASDAQ are pretty flat, all things considered. When we've looked at a bunch of names that look very strong today. But yeah, let's take a look at this one. The 180, 200, 220 for $7. Yeah, I think this is kosher. If we look at theoretical P&L, you've got this is for today, but if we push this out in time, you're going to have a much higher probability of or a much higher profit potential to the upside. But yeah, same story. You're paying $1,600 for this option, but you're reducing basis down to $700 with these short components here. So I like it. If you're playing for reversal, it's a nice way to keep that defined risk and really get that upside exposure. Celsius 40 strike put. Let's see.
Celsius.
December, $1.25. Yeah, I don't mind it just because the buying power is low. But if this was like an elevated buying power, I wouldn't sell this for $1. But yeah, if you're willing to do it, you could do it. I've got the 50 strike short put in December, so I'm with you in spirit. Last one, UNH Jan 270 call. How would you manage this from now through Jan? This one's a tough one, but they do have, I believe they have a DOJ hearing on the 19th. So if the case gets dismissed, maybe you see a big pop. But yeah, this one's tough.
Down today, huh?
Yeah.
I mean, they all kind of been moving together, UNH, CI, and Humana. I did the Humana diagonal last week and hanging in there. But yeah, like Mikey said, be on the watch out for that news.
Yeah, you can see there's premium priced into November here.
Yep.
So if you're at 270, you could sell the 335 for next week, something like this, and just reduce basis a little bit. Yep. Or you can go to December, sell the 340, 350, call it a day. But that's really all you can do. I wouldn't go to January. I wouldn't verticalize this because like you're picking up a little bit more premium, but it just slows down the trade a lot. I would still rather keep it diagonal. And that's it. We're out of time. Thanks for tuning in. If you've got any further inquiries, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. We got plenty of content coming your way the rest of the day, so stay tuned on the YouTube channel as well as tastylive.com. And yeah, we'll see you same time, same place, 11 a.m. Central tomorrow. And by tomorrow, I mean Monday. Peace.
Later.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Let's go. You wanna see? Turn it up.
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. We got another special guest with us today. A little three personalities on the show for today, but
some research action.
Some research action.
Yeah.
Guys, Sahil, my brothers, how we doing today, guys?
Doing good. Always fun when we get to triple box here. We got our matching black shirts on too. We got some three-way matching action going on here. That's not usually the way this works out. So good wordless coordination there, boys. We're killing it.
The uncoordinated.
The uncoordinated.
Yeah.
Exactly. I know it's been a week. Sahil has some graphs and some more talking points that we're going to touch on today too. So what's going on, everybody? Big Deal Ranch. Thanks for taking the time to hang out with us today. We're going to just catch up on some market news, talk a little bit about what's going on in the market today.
The shark
Friday.
attack. Exactly.
The shark attack.
Exactly.
There we go.
The shark attack.
I like it. But no, we'll go ahead and touch on everything. The market had a pretty big sell-off overnight, and then we pretty much rebounded like nothing ever happened. So
As it usually happens.
As it usually happens.
Yeah.
Does it feel that way, Gus?
Yeah, that is how it's gone as of late, and it's really interesting. It's like the opposite of yesterday, where we opened higher and then just worked way lower the entire day. We like to do this inverse thing, I guess. That's why we got to always be contrarian. But yeah, I'm appreciating the green. When I saw where we opened, I was like, is this going to be catastrophic? Am I in trouble? And
Yeah.
fortunately, that has not manifested. So I'm grateful for that.
Insane bounce today. You had any thoughts on that? Insane bounce.
I mean, yeah, just comes back up, man.
That upwards drift.
Yeah. Positive drift. The true contrarian, we were talking about it.
Yeah.
True contrarian just thinks the market keeps going up forever. Okay.
Right.
Yeah.
100%. No, I mean, as we get into it, we can go ahead and pull up some of these slides, get into some of the talking points. We got some good ones. We got
some nice ones.
Yeah. What do we got here today, Slee?
So, like, this is not anything like, I've, like, I don't know, 8 or 9 talking points or whatever. We don't have to go through every single one. I'm trying to keep this nice casual. If the conversation goes off to deep end into some tangent points or whatever, we're going to allow that to happen.
All right.
I just wanted to get some nice talking points and some nice graphs to show what's been happening over the past week. Basically, you go on r/Wall Street Bets, you see which are the most top comments over the past month, and you see what's happening. So, yeah.
I like it.
We can get into it. So, the first one is about the AI bubble. So, this is something interesting I wanted to talk to you guys about, is that stocks obviously sank yesterday, as we were talking about, as the tech shares tied to the AI bubble continue to tumble, and worries about market overvaluations increase. And it marked the worst day for the major indexes over the past month. So, the big question I like to ask everybody when I come onto the show, because I like to talk about AI bubble, Mag 7 a lot, is do you even think we're in an AI bubble? Circa 2000, the computers and everything, because that was obviously a massive bubble that happened in March 2000. Do you think we're in a similar position right now?
How you feeling about that, guys? Do you want to share your sentiment?
Yeah, I mean, I think it's certainly in the equation. I've long said that I think AI is much like the internet in that I think that it's going to revolutionize and fundamentally change the way that the world operates, and I don't think it's going anywhere. But at the same time, we saw with the advent of the internet and the dot-com bubble, in the early 2000s, that you still can have a bubble even when something is as promising as AI is for the future as the internet was at the time. So I'm inclined to say yes. I don't think that AI itself is this fugazi thing that's going to go away, but I just think that it has become a little bit overinflated as it is right now, and I think that we're in this situation where some sizable percentage of companies that exist right now in the AI sphere are not going to be around anymore 5 years from now.
I see. Little pets.com.
What'd you say?
Little pets.com action.
Little pets.com.
Yeah.
Precisely.
No, I mean, I pretty much piggyback off the same sentiment as Gus for the most part. And it's funny, Gus, because your last words there, I was like, so you kind of feels like we were kind of in an AI bubble when, things come back down to reality a little bit. But that's exactly what it feels like. We've seen the shareholder meetings. You just put AI in there and we're popping off. I feel like that's a bubble indicator at this point.
Well, and it's crazy because we've been saying that forever as a joke, but it really has turned into forever that I've been saying,
That's
you
what I'm
just
saying.
AI and you go up 10%. I mean, we're like at 2+ years now where all you have to do is say we're doing XYZ with AI in your earnings call and you get a bump for no reason. And at the beginning, it maybe made a little bit of sense, but I also this is a broader thing. If we're allowing tangents, let me take one. I can't stand how everybody is calling everything AI. Like robots are not AI. They are two different things. It frustrates the hell out of me when I see people just use the word AI.
It's like AI has an actual definition in every single company, some that are not even close to the tech space or whatever. Just say the word.
I'll give you a big one too, is when people are playing like against the computer in a video game and they say, oh yeah, I'm playing against the AI.
Oh, that
no, you are not. You are playing against a program.
This was actively programmed into the game.
Yeah.
Yes, precisely.
But they used to use AI, like they used to use the AI computer like back in the day when none of this stuff was even a reality. So it just became the colloquial term. Like when you're playing against computer players in a video game, right? Like that used to be the term that people used to
You're
use
right.
because AI didn't mean anything back then.
You're right.
But like
It was
now,
the AI bots.
Now it has a thing, and people still use it.
And we've lived through it all.
Yeah, I agree with you.
Yes, we have.
What we got next?
Chipotle investing in AI now, man.
Are they?
No, probably not.
It's not
Probably
gonna
not.
save them.
But they will. Okay.
Maybe that's what they
The
gotta
stock
do.
market
Yeah,
is-
they gotta turn it around.
They should. Okay.
If Chipotle whips out AI, just know they're in a bad spot. That's
I see. I see.
cool.
All right, we can go to the next one then. So, are you controlling? You're controlling.
Matt's got it.
Matt's got it.
Yeah,
Okay,
Matt's
okay.
got it.
Now we go production. MicroStrategy and Bitcoin. No truth to the rumor. Michael Saylor says. Strategy aggressively accumulating Bitcoin. So what does this in a headline mean? This is basically a headline I took. So MicroStrategy and Bitcoin. Because MicroStrategy invests so much in Bitcoin, like most of their holdings are in Bitcoin, they just go up and down at the same rate. I thought this was really funny. And because MSTR stock has gone all the way down, because Bitcoin has been also going all the way down, people have been kind of saying that, oh, MSTR is selling off all their Bitcoin or whatever. And then the CEO is doubling down and saying, no, we're going to keep buying contrarians. We're going to keep going, riding it up all the way to the top. And people are getting pretty mad at him, saying CEOs just do whatever. They don't even care.
As a
What are our thoughts on this?
CEO in that position, what do you say? You say we're selling our Bitcoin.
You just
As
say
a
we
CEO,
suck.
what do you say? Do you just plead the fifth? Like, what do you say?
I don't know.
You know,
shareholders. Okay.
Shareholders. I know Gus
Okay,
and I
a
would,
little worried. Okay.
just a little bit. Gus and I would kind of touch on how MSTR has the Bitcoin strategy, right, guys? I mean, we've alluded to that a couple times over the last week or two.
It frustrates me.
Right.
It frustrates me so much. I don't know why anyone would buy MicroStrategy when you can just buy Bitcoin. If you want Bitcoin, buy some Bitcoin, buy some IBIT, buy some Bido, buy some BITB.
Yeah, why
I
would
don't
you-
care. There's so many things that exist for you to trade Bitcoin without having to buy MicroStrategy. I don't get this. I don't get why people like it. I don't get why it props the company up. Makes zero sense. I mean, I suppose I understand why it props the company up. You say you have X number of Bitcoins, and so your valuation can only fall so low when you have those holdings. I get that. But it just doesn't, I don't understand the excitement surrounding these companies that are just synthetic crypto treasuries. It doesn't make any sense. Just buy the crypto. And as you can see from the chart here, MicroStrategy, there's almost a leverage situation where it's getting hit harder than Bitcoin. The sell-off has been more aggressive, though correlated.
But it goes higher as well. It's okay. You want those leverage projects, okay? They always have the other side to them, okay?
Yeah, absolutely. But I mean, now we got 2 and 3x Bitcoin leverage ETFs that are getting proposed and might be rolling out soon. And if that happens, I think it even further hurts the case for a MicroStrategy. And yeah, there is leverage to it. And as a trading vehicle, I like MicroStrategy. It's got good volatility. You can do options with it. Like if you're doing short-term stuff, I just don't buy into the long-term thesis of these crypto treasury companies.
Something caught my eye as we were talking about some of these crypto treasury companies, and that was, did you guys hear that Steam was releasing their own console?
Steam Machine, my guy.
Steam Machine.
Yeah.
Did you hear about that, Gus?
Yeah.
I have seen that. I was just seeing that for the first time yesterday. So yeah, what's the price point? What's the deal? I'm hearing it's like the greatest thing in the history of console wars.
So I got to get a little bit more updated on it. Literally, Matt was running me through some of the details right before we hopped in here.
I could run through it a bit more if you want right now.
Yeah. If you could let us
Yeah,
know
do
more
it.
details on Steam.
Tech time with Matt. We're calling him in.
But to give a little extra context, so Steam is releasing their own console. This is a big deal because
So they had the Steam Deck before, which was supposed to take over the Nintendo Switch. They sold 1 million units. People are really excited about it because it's a Linux-based operating system.
So why is
That was hard to
Steam
say.
so popular?
People have their Steam libraries. I mean, Steam has built this up since Valve announced this whole thing about PC gaming and everything like that. Steam, everybody has their libraries on Steam. Being able to take your Steam library on the go with the Steam Deck is a huge deal for everybody, you know. So
They were the ones that essentially saved the PC gaming market because it was a lot harder back in the day to actually play games on PC. Before, you'd have to get these box games, which half the time weren't compatible with everything like out there, and the market Steam came out at a perfect time when pirating was really huge and it was not safe to pirate games. Steam was a way for people to get games onto their computers in a safe way, and they've been building that ever since.
And I think they released, I heard about the news last night. I'm not sure when it was officially released, but I believe they're still releasing more details. I think, Matt, you were telling me they don't have the official price point out on these yet, but it's a big deal. If you're in the technology community as a whole, whether it's a console or PC, you might have heard something about it.
Yeah, so similar to what they did about like 10 years ago with with the original Steam machines, their price tag isn't going to be directly like compared to consoles, like around the $500-$600 range. It's going to be closer to the price tag of a PC, is what they're communicating right now. And the talking points about it are just more. They don't want to anger those other console developers so that they start pulling their games off of the Steam library, because that's the big draw point with Steam right now, is they have everything.
Yeah.
From
Epic Games is like the only other big one, and they're nowhere near any market share or whatever. So
yeah, they started to gain some traction, and what helped for them was the free games every week. Like every week they change out what like free games you could just get on Epic, but the infrastructure just isn't there like Steam is. The community isn't as strong on Epic as it is on Steam.
But you just built it up over the year. They were the option. You know, Valve's whole thing was piracy is not a pricing issue; it's a service issue. So they created a great service. All of the releases, day in, day out, day one on Steam, and everybody just built up their libraries, all the achievements, all the communities, everything. And so when you have the handheld Steam Deck, now you have your Steam on your PC, then you have this whole Steam machine, which is supposed to be an even more of an entry point because it's such a small machine and all that. They released a new Steam controller as well.
Yeah,
I know. So
I know. The controller's interesting. It's gonna have to grow on me though. It's gonna have to grow on me.
No, you don't like the touchpads.
It's like they took the sides of the Steam Deck and then put it together. That's the way I look at it. And it's interesting because they they announced all three of these devices just the other day, which, you know, Valve hasn't done anything that big like ever. And keeping in mind too, this is not like the first time they've released devices like this. They've done this all in the past. They've sort of like trial run periods with everything, right? And now with the success of the Steam Deck and their previous iterations of these other devices, they've, I think, garnered enough like knowledge as to how to really dip their toes better into like each of these markets.
Is there any valid conspiracy around GTA 6 being delayed and them wanting to delay now that we got the news that we're going to have a console for Steam? Oh, I'm sorry. What did I do?
Conspiracy theory around GTA 6 delays?
No, I was saying, is there any conspiracy there? Like they're delaying
let me
the
explain
console.
you.
Is there some
GTA
type of
6. Okay, all these games now take 10 years to release. Elder Scrolls 6 was also announced like 7 years ago. Bethesda has not made a single announcement about it after the fact.
Right.
So
yeah, they
I just think they're just bad
it.
at making like these such large games nowadays. Like I don't know how GTA 6 is going to live up to its hype at all.
But is it too far fetched to think that a console could push a product that they had coming for a new generation of a console to come for it to launch and release?
That's a conspiracy theory right there. I don't know. I'm not sure if it's going to be for Steam. I would more so say it would be for Microsoft or PlayStation.
You know, I might be buying this. I see where Errol's coming from.
But it'd be so funny.
I mean, it makes sense. I mean, I know that GTA 6, it's been a thing I've been tossing around this entire time is, am I going to buy a console to play this? Because, you know, PC is the primary way that I attack these things. It seems very logical and likely that could be, you know, the most popular game of all time when it releases. And, you know, I mean, GTA 5, how many millions of dollars a day are they still making on shark cards right now in 2025? So, you know, you want access to that market share. Steam wants access to that market share. I can see those pieces fitting together. I don't know. That's an interesting question.
All right, official Tasty Live position, conspiracy theory.
Thank you.
I think we're split. I think we're a house divided on this one.
Yeah. What else we got for the day? I know that's a little bit about the consoles, PlayStation, Xbox. I don't know. I'm getting a little bit of Xbox console fatigue.
No.
So
Xbox console fatigue?
I'm getting console.
Because Xbox doesn't, like, Microsoft only had one good generation, which was Xbox 360. And
my bias doesn't want me to agree with you, but when I think about it, I'm inclined to agree with that.
And not a PC? When the Xbox is basically
PC.
But the next Xbox console is basically going to be a lockdown PC.
100%. Well, this is the thing. Xbox, PlayStation have been going into the console space with video games. That's PC's thing. Like, if they want to come into the console space and like show you how it's really done, I feel like Steam can do
Just
that.
Microsoft, whatever they do, it feels like they can't do anything. PS5 hasn't done anything, and they already sold over 80 million
That's what I'm
units.
saying. Maybe
okay?
that's why they're seeing like, yo, we can come up in this space and do it a little bit better than they've been doing it the last.
No, I hope Steam does well. More competition. For
all the
Nintendo,
better.
PlayStation, and Microsoft is always a good thing.
I love it. I love it. We can pull up these
Yeah,
slides
I
back.
am interested about that price point though. That price point makes it all interesting if it's going to be like a PC level price point, which that's what I keep seeing. But if it comes to that, and it's like I could buy a nice pre-built for $1,400, or I could buy the Steam Cube for $1,400. One is a PC that lets me do all the other PCs, and the other thing is basically just a console. So that does get a little tricky, because that's always been the justification for consoles to me is it's you can only play games, but it's a third of the price of a PC. But if we're getting into
That's how every generation starts. This is the cheapest way to get into all the new games with the powerful console and whatever, and then the computers always end up catching up by the end of the generation until the new cycle starts.
Pretty much.
Yeah.
Cool.
Anyways, I like these tangents, but that's why. So we went from MicroStrategy to video game consoles, which is good.
Yeah.
So the reason I brought up the CEO was because of the next slide, just talking about all the CEO layoffs that are going to be happening. So U.S. CEO turnover has hit a record 1,358 departures in 2025, which is up 9% from last year. Companies are confronting the economic uncertainty, tech disruptions, and all the leadership changes. So when something screws up, everybody wants a new leader, and it's up 9% from last year. So everybody's talking about the bad job market and everything, and this is kind of saying CEOs are not safe either. Walmart just announced that their CEO is retiring. They're having a new person in. So I don't know. Any thoughts on the people at the top? We always talk about the employees and everything. So
well, I don't want. I know some of the, what it just brings me to some of the ventures that Tom might get into. Just kind of reminded me of that, and just shining more of a light on those type of pay situations. So that's kind of what it kind of reminded me right off of the bat.
What is this scaled in any way to adjust for new companies forming, or how big does a company have to be for their CEO to get counted in this figure?
How big does the company have to be? I think it's just counting. I think it's just counting companies that have had their IPO for more than 3 years. I think was the methodology that they use. So it's not like going to be some new startup or whatever. I forget the methodology, but it was. I think they have to have had been on the stock market for more than 3 years. So yeah.
Interesting. Yeah. Well, yeah. I mean, if there's no bias there, I do find this to be very interesting. Is it Yeah, I mean, it's tough to decide, because there have been a lot of companies, that are moving on from their CEOs as well. It's not like there's something in the cosmos that's making CEOs quit. Are CEOs just getting shorter and shorter leashes as there becomes more and more pressure, and competition in pretty much every sector all the time?
This is what it's sounding like. At the same time, you could imagine how small of a pool of legit CEOs that they actually have that can bounce around from these companies. So at the same time, it's interesting. I think it's interesting. A little semantics, but I think it's interesting.
We were talking about this yesterday a little bit as well. The conspiracy theory that's not actually a conspiracy theory. You go do your CEO, make your company stock rise by talking about AI and stuff, okay?
Sell your shares.
And then sell your shares, and then you leave, okay? There we go. And then you don't care what happens after that, okay?
Look, the blood ain't on my hands.
I'm not even sure if that's a conspiracy theory. Probably not, okay?
Yeah. Someone's like, that's my whole playbook.
That's the whole playbook.
No.
All right.
For real.
Yeah. Next one from this.
Oh, yeah. If anybody needs a new CEO, I'm open to offers. Well, I'll think about it. I'll have to talk to my people.
Bro,
but
honestly, Radio Shack.
Gotta talk to my agent.
As well. Yeah, gotta talk to my agent. Now, Radio Shack could use whatever help at this point too. So.
Or you just end up in Intel.
Yeah. See, I don't think my agent's gonna like that one. I was thinking, nothing crazy, just like maybe Apple or Microsoft.
Oh yeah.
Not like Nvidia or anything.
No. Yeah.
Put in a good word.
I'm glad.
Probably.
No. He's been good. Okay. He's not going for the top. Okay. He's going for middle of the road companies. Okay. Yeah. That's not being greedy.
That's so humble of you.
Yeah. My humility, it knows no bounds. Really.
It knows no bounds.
All right, this one is Under Armour and Stephen Curry. That's okay. Just Steph Curry. The headline uses the full name, which is fun. Okay. So yeah, Steph Curry did not go with Nike. He went with the underdogs, Under Armour, all the way back 13 years ago, and now they're cutting ties. Steph Curry's on his own. Under Armour stock has been taking a dive this year. I just have all the year-to-dates for all these graphs for all these different stocks. Just people are curious how it's doing over the year. And yeah.
No, they've been getting
thoughts on this.
They've been getting absolutely crushed. I'm just looking at Under Armour right now. They're trading at $4.35. So they're a penny stock. I didn't recognize that, and they're at their lows right now. Even for the year, even the last 52 weeks. They've been getting hammered, so maybe that sentiment with Stephen Curry played a little bit of a role into there. But I'm not gonna lie, I love Steph, but he's not one of my favorite players. So I'm gonna have to hand the baton off to Gus on this one.
And that's the hot take right there.
When it comes to Steph.
Not one of my favorite players.
Yeah, I mean, I think Steph Curry is Under Armour. I think that this is a really big deal for Under Armour. I mean, for lack of a better, more eloquent descriptor there. Under Armour too. I mean, does Under Armour go out of business? Like, genuine question. Is Under Armour still around 10 years from now? Because this is a sector where more and more competition just keeps entering. Under Armour has never really been the premier player in it. And now that you're losing your, primary star here, and I think that compounds too. I think that makes it harder for Under Armour to get the next person as well. I think Under Armour's recruiting round this year, as they try to sign these college athletes coming out, people are going to be saying, Steph Curry just left. I don't want to do this anymore. So, I don't know what percentage of Under Armour sales were Curry's shoes. I would imagine it's smaller than I'm thinking right now, but this does seem like a catastrophic brand recognition situation for Under Armour.
See, I always thought of Under Armour as more of a clothes, not shoes company, but clothes. And shirts,
I definitely.
pants,
when I was young, I definitely had all the every color of the Under Armour T-shirt, just with the big logo on the chest. That one. Everybody had that.
But still,
please, no Steph Curry shoes at Walmart. I don't think we're going to be doing Steph Curry shoes at Walmart.
Bro, don't do that to Curry.
Dude, you got the people who go to Walmart, and we're talking about you can just buy the black shirts for I don't know, each of them are worth 50 cents or whatever. You just buy your bulk black shirts and blue jeans. That's your outfit for the entire time. You don't even need Under Armour or whatever.
Good.
Okay, yeah,
it's true.
That's when you go ultra cheap, ultra good.
Oh yeah.
But yeah, we wish
Under Armour going to learn the same lesson And One did. That's a good pull. I totally forgot about And One. That was they were a giant brand when we were kids. Everybody had the And One stuff. I remember those shorts. I can see the logo in my brain right now.
Yeah, huge. I'm surprised though. Lastly, before we pivot here, that Steph Curry did go with Under Armour. Just such a big decision to make to align yourself with a brand, especially at his caliber. Again, maybe they just didn't recognize he was going to pan out into the individual that he was.
Mutual relationship, my guy.
His brother was supposed to be better.
You just think about it,
but obviously, they didn't know it back in the day, so
just would have never thought he would become who he is today. But you just really signed with Under Armour. I think it's a brand risk. I think if he was Nike, I think he would have done better business wise if he signed with Nike or another brand. But
yeah, I think that we're just seeing turnover in this space right now. Reebok has pretty much fallen off, and One has completely gone away. Yeah. Puma is actually resurging a little bit. They're signing some people to sneaker deals. I think LaMelo Ball is with Puma now, so they got some people going. But it's just a cyclical place, and now with the Lululemons and Fioris of the world entering this space and cannibalizing some of this market share, it just gets tougher and tougher for these institutional ones that have never had a Nike or Adidas level brand.
Most definitely. Definitely.
I used to call And One's Andy's big deal. That's amazing because my dad still says that to this day. Andy's. It's an inside joke between me and my dad is that I'll lean into him and act like I get fouled. And we say Andy. It's like a thing.
That's
just because the And One it looked like Andy for real. You're not alone.
I was talking to my little brother a couple months ago, and I was saying something. I was like, it's an inside joke, and he had heard it, and he was like, that's an outside joke now. And I started dying. I was like, that's gold.
When you realize
that's gold. That's an outside joke. I'm stealing that.
When you realize that your inside joke, everybody actually knows about it?
That was an outside joke.
Okay.
Yeah, absolutely. You're right. That's fine. I'm happy to bring everybody in on the outside joke. That's fine.
I like that. No gatekeeping over here.
We're not gatekeeping. Yeah.
No, sir.
So the official Taste Live position is that we wish our millionaire friend Stephen Curry well on his adventure, on his new business ventures.
Wish you well, Steph.
Correct.
What we got here? Robinhood?
Robinhood, man. And GoPuff.
Okay.
So GoPuff is a delivery service, right? This is extremely weird to me, and I don't know exactly how people are going to feel about this. So Robinhood is partnering with GoPuff to offer a cash delivery service, which is for a fee. So it's like $6.99, and then it's reduced to $2.99 for people who have over $100,000 in Robinhood assets. Okay, literally delivering cash to your door. They basically say we can deliver food. Okay, we can deliver any sorts of goods. Okay, people deliver all sorts of things to their house. Okay. How do we just straight up deliver cash to your house? The delivery driver is straight up just deliver cash.
Here? I would legit just deliver cash. Am I missing something here?
I mean, yeah, you pay a fee like for GoPuff, but then they just bring you cash like a DoorDash, like a GoPuff. Yeah, they
Okay.
show up at your door with cash.
Okay, so what are some of the use cases for that? Why might somebody
What are the
use
use
that
cases?
service?
Rather than
Too
go to an
lazy to walk to
ATM?
the ATM or the bank? I really don't know. I know we're close on time here, so I'll keep my little soapbox here brief. But this just makes very, very, very little sense to me. Cash delivery service, and it makes even less sense that we are going to publicize to the world that if you see somebody walking on the sidewalk with a GoPuff bag, there could be $10,000 in there. I don't know that that's the safest thing we could do for our GoPuff drivers.
Right. So if you're applying,
Security risk is real, though.
Yeah, security risk, right?
Like, I understand delivering, like, food. Like, okay, like, I understand delivering goods to your house. Then it started being, like, delivering food to your house, okay? Like, straight to your door, okay? Now we're on just cash, just straight up cash.
Either way, either way, first of all, great points to today's CEO, because I love talking about actually what some of these businesses are actually doing, like boots on ground. We see all these headlines. That's cool, but what exactly is this, and is there a use case for it? So kind of puts it into perspective. With that being said, anything else top of mind that you guys have before we wrap up for the day?
No, nothing for me. Thanks for joining us, Seal. This has been a lot of fun.
Yeah, this has been a lot of fun. Glad we get to touch on some stuff. Glad we get to go on some tangents from a research perspective, graphs and stuff. I just like talking about market stuff.
It's so good.
People. Yeah.
Yeah, absolutely. We've loved having you.
Thanks for having me on, guys. Yep.
Well, guys, we are running out of time here. Big deal. Steve, Grumpy Mike, Data Trader, Rancher, everybody, thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next. Have a good weekend. We'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
We're back. It's still Friday, November 14th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it's been a wild ride so far this morning.
Yeah. I woke up this morning to take the kids and get them ready for school, and stocks were down aggressively. And I thought, well, this is, as anticipated, good. But this gold sell-off side by side, I guess, is intellectually satisfying, because I've been saying since the beginning of the week that gold is now a risk asset, but I'm also long, so it was kind of stinging and then send the kids off, take a little walk, come back, and it's a different market. And who knows? You and I are talking on last call later today. Maybe it'll be a different market again.
We'll be back on the air together in 2 hours. 2 hours from now, indeed. But 2 hours ago, this was a different market. We're looking at a market where stocks have bounced substantially off the lows. Yeah. It's 100 points in the S&P 500 from the low. NASDAQ's about 2% off of its low. Gold and silver have been shellacked. They've rebounded a touch, but still a metal meltdown kind of day. Volatility has spiked,
Good
at least in equities.
There. I like it.
The dollar, is it following cut odds? There's a whole bunch of weird things going on in the futures market today in the past few days, but it's worth unpacking here. Paul, we can go to the slides. We haven't done this in some time, Ilya. Talk about the macro week ahead. So let's get back right into it. Will we see economic data next week? Well, the CPI report that was missed a few days ago, we're not going to get the next round until December 10th. Great. We're going to have it before the Fed meeting because it's going to come out in the morning of the Fed meeting day.
Hilarious.
So
hilarious. Is it any wonder that the market is a coin toss for a cut now? It seems to be channeling what Fed officials are doing, which is cradling their heads in their hands and going, heads or tails, everybody.
Well, we're going to find out what the Fed thinks next week because while we have inflation data from Canada, from the UK, which maybe people will take as a read through, at least the Canadian data, given that Canada is basically a U.S. Oh God, am I about to call it a 51st state? No, I would never do such a thing.
There you go.
But we are their major trading partner. And so there's a downstream effect there. If Canadian inflation falls, labor falls, maybe it means less demand out of the U.S. I probably think that you're most interested in those FOMC meeting minutes, though.
For sure.
Because we're going to get
that and the S&P Global PMIs at the end of the week, because these are going to be a timely barometer on global growth, including in the U.S., but also more generally. We're going to get Japanese figures, Australian figures, UK figures. Most importantly, I would think Eurozone figures. I've kind of beaten the drum for all eternity that as the US, China, and the Eurozone go, so too does global growth. And if you can figure out a combination out of those three that gives you positive expansion, then for the most part, you're okay. This round of PMIs are going to be the US and the Eurozone and assorted others, but we're going to get two out of the big three global engines. And of course, the third one, China, is so anemic now, going on a 10th consecutive quarter of deflation, that they're kind of an afterthought in any case, at least as far as global growth is concerned. And so when we're going to get the FOMC minutes, we'll get a sense of where the Fed's head is at. And then at the end of the week, we'll get context on how that lines up with where global growth dynamics are, and U.S. growth dynamics are, and Eurozone dynamics are. And that'll give us a sense of what's next. One of the most interesting things this week, as I'm sure you've noticed, the euro has been outperforming. And if that's making the euro something like a haven of coherence, where the economy is anchoring and the central bank is not going to do anything at all next year, as the markets have it priced in, we could have a euro rally on our hands when it's all said and done.
You mentioned the Fed meeting on Wednesday, the FOMC minutes on Wednesday, excuse me. I'm wondering if they're even going to make a difference. What gives the FOMC minutes a punch is when they provide deeper insight into what the Fed is thinking. They give us the details. From yesterday up until the release of the FOMC minutes next Wednesday, we'll have seen 17 different speeches from various Fed policymakers. Some of the same policymakers talking twice, three times during that window. But on the calendar from Wednesday to Wednesday, there are 17 different speeches. And then John Williams is speaking at 2 p.m. on Wednesday, right when the FOMC meeting minutes come out. So is there a possibility that these are stale, that we get to Wednesday, we have this expectation, we're going to look for something, and they kind of just fall flat because the market says, but we've just heard from all of these people, most of them over the past week, we have their updated views. What the Fed told us in October is now outdated. We need not be concerning ourselves with it because so much has changed since that meeting with respect to the government shutdown?
Maybe. It's certainly not impossible to read it that way, but let's take a look at sort of who's speaking, because that's a big part of it. So, for example, this week we had a bunch of Fed speak, but most of it was not from voters. And so
right, we talked about that yesterday on the show.
Yeah, and so it's an interesting kind of situation. So if we look at what we have on the calendar next week, I mean, to be sure, tons of speakers. I mean, Williams obviously very important in that mix. But as we look at all of this, it seems like we're still going to be wanting to read those minutes and kind of put all of it in the pot, because it'll be important to contextualize where they were and what they're saying now, and whether there's been change, and whether what has happened in between then and now motivated a change. And then we get to see a reaction function so that we can from there go, okay, here's their way of thinking, here's how their thinking has evolved, here's the things they're responding to. Now we can benchmark December with a little bit more clarity. And we're going to have to look for voters. I think that'll be key.
If we include Williams,
governors and voters.
If we include Williams' 2 p.m. speech next Wednesday, 5 of the 7 speeches next week from Monday at the market open until the FOMC minutes on Wednesday are governors or voting members. William, Jefferson, and Waller. You're going to get Williams a second time on Wednesday. Barr is going to be speaking on Tuesday. So when you have, again, so now we're going to have 1 duplicate, so 4 people who are voting members speaking next week ahead of the minutes. I'm like, okay, well, this is a 12-person board. A third of the board is going to give us their updated views before the minutes come out.
I wonder, by the way, I wonder how intent the Fed is, by the way, in looking at all of this, at preempting the minutes. That might be an interesting thing unto itself.
Right. And because we don't have government data that's been included recently, as of November 6th, we haven't had a new GDP update from Atlanta Fed, and the New York Fed nowcast has been on basically stalled out as well. So those will resume soon. We'll get an update to see how the economy actually has responded to the government shutdown. The first of a few that we may have over the next few months, because this continuing resolution only funds the government through January. And one might imagine that there could be another round of contention ahead. But you know what, Ilya? It's a different day today. It kind of feels like we did a round trip or a deja vu from last Friday.
Mm-hmm.
We are effectively at the same level that we closed at last Friday, which, considering where we were this morning and overnight, we were effectively back to last Friday's lows. The NASDAQ here down.
Yeah, look at that 4-hour candle fade. My God. This is going to be a choppy day.
Well, choppy day, and perhaps as we look to the S&P here, right, maybe a choppy few days. I like to think, if I go to a daily chart and I pull this back a bit, Ilya, this is a symmetrical triangle in the context of what has been an uptrend, and symmetrical triangles during uptrends over the past year, over the past 2 years, really since the bull market resumed back in October 22. Symmetrical triangles and uptrends have been great things to buy into.
Not an unfair assessment, I think.
Right.
By any stretch. Technically, this is very much an uptrend, and that's very much a consolidation pattern that you would normally look to resolve higher.
Yet the consolidation pattern itself does suggest that we don't reach a termination point, a point where we see the lines intersect, until that second week of December. So this,
and by then, hopefully, you will have had a breakout or not, because if you're having to trade through the end point of a triangle, then it's not a triangle, because by then inevitability has taken course. There's no conviction in the pattern's resolution. This is one of the great things about technical analysis. In my mind, technical analysis is most powerful when the self-fulfillment component is at its maximum, where enough people are looking at the same thing, where its empirical validity doesn't actually matter. Who cares? If everybody is going to buy on a break of the triangle top, then the pattern works. Who cares if triangles as a concept work? And so if everybody is going to act, there will be action. And that really only happens, you're putting on some sideways fibs here, which is exactly the right thing in my mind, because you kind of want to be in like a 75th percentile, 70th percentile of the triangle. Otherwise, it's not really a pattern that anybody ought to care about.
Right. And that's kind of what I'm building up here, where if you think about when we cross the 2/3 is the level that I look to. You want to break out between 2/3 and 75% of the time. So that means November 19th. This is getting a little, precise, and I would never want to make a prediction like that. But you start to think, okay, we get from next Wednesday through basically leading up into Thanksgiving. And that's where, if this is truly a symmetrical triangle, we start thinking about the breakout to the upside occurring. And if we're failing before then, or we just continue to chop around through into early December, chances are this is not what we think it is. But first blush, okay, you look at the triangle. I look at the support last week. We are carving out a higher low. As someone who's long MES from basically right here, I don't see anything different to do. It's still a consolidation that's consolidating.
I do, as you might suspect.
Of course you do.
As you might
lay
suspect.
it on me.
Well, so this is one way to look at this chart, but as you know, I'm a fan of horizontal levels and also of really basic support and resistance. And we very clearly have broken the sequence of higher highs and higher lows because what we have, if you put, let's say, if we're in NASDAQ land here now, let's take a look at, let's call it 25,395, something like this. And what you'll find is there are former resistance become support levels there that define the way higher. And we've now broken through those and found a lower plateau against which to build. You can see it on a daily chart very clearly because you can see the significance of these levels. It's going back to essentially the tops in early October. So where you had that big sell-off, that big October 10th bloodbath, it's that top. And it is now, of course, or it was acting as support after we took it out. We have now cleared back under it. So the cadence has changed, technically. And now, because, up until that point, you did not have that kind of a reversal going all the way back to April. So it seems like things are rolling over. But really, it's the weekly chart that tells the most damning story. Because when you look at the weekly chart of any one of these, and I texted you about it when it happened 2 weeks ago, the gap and failure of those shooting star doji type candles, which was Fed week. That was the week where we gapped. We got that shooting star. Everything had gone the market's way except the Fed. Earnings did. The Trump and Xi thing did. Certainly, earnings hadn't happened in earnest yet, but the markets were very primed for good results, and they got them for the most part. And all of the subsequent week and a half, those earnings didn't help. The China-US détente didn't help. None of it. None of it worked. And now we of course, had a round trip on the government shutdown. And we know that hasn't helped either because we're right where we started at the beginning of this week, end of last week. And so what the price action says to me here is that blow off, that top is very much still valid. And the overall trajectory here is a market that doesn't want to embrace good news. And a market that doesn't want to embrace good news is a market that is waiting for bad news to keel over.
One thing that I noticed today, I was looking through the FactSet Earnings Insight report. Two things stuck out to me. One, I suppose it's worth pulling this.
This is from our friends at FactSet?
Yes. The number of tariff mentions on companies' earnings calls over the past 10 years. So we can see here there's a spike in 2018, no doubt. And then there's a spike here this year as the market gets prepared for the tariffs in Q4. They arrive in at the start of Q2. So Q1, everyone's getting ready for them. but the rate of mentions in tariffs is down 33% quarter over quarter. Is this subsiding as an influence? I know the administration right now is talking about providing some relief for the tariffs that they themselves instituted. But is this if companies aren't paying attention to it or mentioning it as an issue one way or the other, right? Why should we as traders care about the tariff talk coming out of DC? Should we not?
I mean, it's almost like the president is playing good cop, bad cop by himself, where he comes into the room wearing a Groucho Marx nose, beats you up, steps out of the room, takes the nose off, and comes back with coffee and a cigarette. It's a very curious thing that's going on here. I think we have to care about it probably most in the sense that the Supreme Court could overturn the IEEPA tariffs and thereby throw a ton more uncertainty into the mix. And what we have is already a very clouded landscape. I would argue the reason the markets are so annoyed with the Fed saying December is not a lock and we have no idea what we're going to do really because we don't have data and we don't have conviction and we already gave you 50 basis points and it takes 12 to 18 months to absorb those, so just relax. We've backstopped the labor market as far as we think we need to. Nothing is coming unglued. We don't need to jump out the window with intense easing, not unless your name is Stephen Mirren, who apparently has never seen a rate cut he doesn't love, in whatever size. We said, hey, let's go 100 basis points. You'd go, a little soft, maybe 1 to 25. So it's a plausible thing for the Fed to go, you know what, why are we going to jump out the window now? We need to have rate cut room if something actually is going to break. And how would we know it's breaking if we can't see economic data? Only if it's already in the active process of coming undone and the markets are screaming. And if that's occurring, yeah, okay, we know, but we need to have some kind of ammo to do something. And so you have this situation with the tariffs just compounding that fog. That's not going to help. And it's already a foggy sort of environment. So I think that's probably the biggest vector of influence at this point. I don't think anybody so much cares about adapting to the costs. I think we've gone through that story. But I think the markets just have no clue how this is going to get resolved if the Supreme Court pulls the rug out and we have to legislate all of this again.
And will that be re-legislated in the run-up to the midterms?
That's a big one, too. That's a big one, too.
2398 on the Russell, Ilya. We started poking through downside support that's been in place since the start of September, which is a fairly noticeable or noteworthy development. Still kicking myself from a few days ago when we were talking about that 2375 put spread on overtime and futures power hour, and I never jumped into it. So, but I also would have already gotten long the NASDAQ too soon, so it would have been a wash. Yeah. Either way, though, this feels like it's an important test. You could make the case that with the NASDAQ and the Russell both having now set lower lows, the short-term path of least resistance is lower until proven otherwise. That may mean more consolidation from my view if I'm in the S&P 500. That may mean another retest of 6,700.
I mean, to your credit, right? This hasn't broken down. It's in a really ugly, scary-looking range, but other than the Russell, which looks like it is breaking down a little bit more, NASDAQ and the S&P have not crossed any Rubicons. But man, are they trying. They tried today. They tried last Friday. They're trying to break down, but so far they're managing to avoid it by a hair. Russell was a little soggier, but I would argue even there. If you look at that October 10th low, it's not quite there yet.
It's not quite there yet. When you look at the continuous contract, I'd like to think if we had you do, I don't know about myself, if I had some integrity a few weeks ago at the start of November, had I been here, we would have marked off a breakdown of the uptrend in the Russell and said, okay, if this bull trend is going to remain intact, what's going to happen? You're probably going to see a pullback to former resistance, turn support. That could mean 2290. That could mean 2340 here on the continuous contract. So maybe this is what's occurred now. We have that setback here. You'd look for, more losses aren't ruled out in the short term. But if you think about like where the market could find footing over the next few days, it would be in this band, this 2%, 3% band down here. Same thing for the NASDAQ. If that were to, we were to see like a potential turning point. We have recent swing lows closer to 24,250.
Yeah.
It's not over yet.
We're getting stuck here for a second consecutive week now, and it is not lost on me since I am short. I'm not in the NASDAQ. I'm in only S&P. I put it on Fed Day. So the moment Powell said December is not a foregone conclusion, far from it, I started pricing it up, and then helpfully within moments after that, he said, somebody asked him a question, and he said, I come out here every time, and I tell you we're going to be data dependent, and I tell you nothing is predetermined. Then he leans in and goes, I am saying more than that now. And so everyone just kind of, there was a kind of audible gasp in the room, like, uh-oh, we're getting one of those here. So I sold immediately. And I'm okay with sitting on it. If that's not the high, so be it. But this market's going to have to prove me wrong. It's also going to have to prove me right, because it hasn't done that yet. We're not into some sort of a free fall situation. And for a second consecutive week, we keep running into the same support. Will the market wear it down eventually? I think so. I think the sentiment dynamics are such that the next thing that's going to happen is going to be ugly. But is it possible that that's not the case and it's going to find this support and ultimately anchor at it? Of course it is. This is a market that wants to go up. It doesn't want to go down. I think it'll be compelled to go down, but that doesn't mean that has to happen now.
I'm looking at the volatility spike here. VIX is 20.38. We go to the front month futures, it's 20.22. We go out to January, it's 21.35, 22 in February. So this is a market that, but for a slight hiccup here, this little kink at the front end of the curve, this is still a volatility futures curve that's in contango. Yeah. It's not as, right, if we were to go out, let's go out a year. If we were to go out a year, do we have that yet? No. So let's go to UN 26. Okay. So as we go out, like, thinking about 6, 7, 8 months right now, it's 2 points wide front month to back month, but it's still contango.
Yeah.
So until contango. Right. So like, if we're going to see the volatility futures curve retain that shape, I'm inclined to think, right, if we were in backwardation right now after today's action, I'd be like, oh no, this looks like crap.
Yeah.
This is terrible. This isn't good. This is going to be, there's fear in the air. The fear sticking around, the fear is accelerating. Today, the market tried getting into backwardation a little bit. And after we get out of this rebound off the lows, the contango reasserts itself.
Yeah.
It's why
October 10th was the last time where we kind of flirted with it.
I think for bulls and bears alike, I mean, the play may be short iron condor for the next week against 65.30 up against the high near 69.50, because we're basically directly in between the two. And if this market's going to chop around, the simple way to take some exposure here through next Friday, 65.50 on the downside and 69.50 or so to the upside, 25. Oops, let's go. Let's just do this. I got a better way here. We're going to go U. Let's just blow this out. All right. So 69.50 as the gut, 25 points wide, and then 65.50 stagger. So that's 62%, 4-1. But that's, will the market stay range bound without clearing the October 10th low or the October 29th high? That's effectively the bet that's being made here. I think at
with the idea that you're going to squeeze a 25 IVR out of it. I don't know.
Well, it's not even for next.
You know what I mean? Like, I don't know.
That's why it's like
I don't know if I'm tying up my capital doing that.
I'm comfortable just because it's also a position that's still technically working. Yeah. If it's a symmetrical triangle in an uptrend, you kind of just buy and wait for it to break out, or you wait for the breakout itself. I'm comfortable staying long here because on Thursday last week, when I said, oh, this looks like a place to get long, 2150 day, we're there.
No, that makes perfect sense.
So,
I mean, if you're from a
trapped.
risk reward tactical perspective, right? If you're not short where I'm short, this is the bottom of the range. And if you wanted to just close your eyes and say, you know what, all of your high-minded thinking here, forget it. We're at the bottom of the range. I'm a buyer. Let it show me that I'm wrong. And if you're at the top of the range, I'm a seller. Let it show me that I'm wrong. But the risk reward here, like, would I initiate a short here now? Not on your life. I'm staying short because of where I'm short from.
If anything's on my life, I prefer for you not to short stuff. Just want to get that on the record.
What about Bitcoin? I sold some more today.
No, that's silly. Treasuries are still struggling.
Working so far.
Yeah, we can hop over to the fact that there's a rebound here today. Ethereum is flat, raises an eyebrow for me. Why is Ethereum holding up?
BTC is off what, like 3% on the day?
Yeah, so we have this move in treasuries today where it was looking like a much better market earlier, and then as stocks rebounded, folks decided to dump treasuries to
I don't
stock purchases.
I don't like this. I'm long from basically here. I've given up a lot of gains because I got long the last time we tested this back at the beginning of October.
Ugly candle. It's an ugly candle.
It's an ugly candle. I'm coming up on expiry in maybe like 7 days on the first leg of this exposure. I've been sitting on it for a long time. Very annoying. But I keep telling myself it's bonds. They're not supposed to move fast.
They're not supposed to. So when they do, it's a problem. Engulfing bar today, potentially in notes and bonds. We put in a high relative to yesterday. We're potentially closing below yesterday's low. That's 112 and 21 ticks. We're currently sitting at 112 and 19 ticks. In ZB, currently sitting at 116 and 17 ticks. That would be another engulfing bar, clearing out yesterday's high and closing below yesterday's low. It sets up what I would think in both notes and bonds would be an immediate retest here of this, dynamic support resistance zone, which in notes, it's basically 112, 112 and 5 ticks. In bonds, we'll call it 115 and a half to effectively here, 116 and a half where the market's pivoted. For longer term reasons, not just what's happening here, I'm comfortable staying long the market and dealing with a little bit of indigestion. So long as we, one, maintain the uptrend from the May, July, September swing lows, but two, on that longer term ZB chart, thinking about where we are coming off of the potential break from the COVID high and then the tariff week high, we're still holding this breakout territory through the summer swing levels that kept us capped off in June, July, August before we finally made our move in September. So that's why I'm hugging 116 right now. I'm happy to maintain the long deltas. This is a longer term view. As long as that uptrend's in place from the recent lows back in May, and we're staying above 116 outside of the COVID tariff downtrend, I kind of just got to grin and bear it because I have so much duration here on the books that at 70 odd days to expiration on some of these ZB calls, there's no reason to panic right now. And at worst, I'm going to have to take a small loss in a few days.
Yeah, I mean, my biggest annoyance here, otherwise I would sit comfortably long and not think too hard about it, is the first leg is only 7 days from expiration. And so I need to think about what I want to do here in a hurry. I need to think about whether what I want to do is roll, or if I want to just take that leg off, or if I want to wait here. If I take the loss on that leg, it's not by any means anything terrible, less than 1% of equity. It's basically where I got in. But it would be annoying. And so I just need to figure out what I want to do here. Whether I want to basically reload with more duration or let half of the position roll off and let the other half, which is 14 days to expiration, have a little bit more time and then see.
I'm sitting in a little bit. I got more time than that. I have 42 and 70 here in ZB, and I think it's ZN where I'm doing a double bull at 42, short the put spread and long and out of the money call spread. It's just a game of patience right now. Bond volatility is really low, so that's why I'm not necessarily a fan of like hitting a put spread. The move index over recent days just got off of its lowest level that we had seen since November 2021. So bond vol is effectively dead right now. This is not the optimal place to be doing any sort of typical tasty methodology.
Right.
You're going to have to be directional here if you want to trade this, given the volatility that's come back into the equity space, what we're seeing in metals, what we're seeing in currencies. In terms of an order of prioritization, bonds probably are falling lower down the list than we'd like to admit, maybe if not to the bottom of the totem pole. Because even ag right now, you look at corn or wheat, those IVRs are 70s, 80s, 90s, were 127 a few days ago in one of the products. And that's just a much better environment for what we're trying to accomplish here through our option selling, volatility selling methodologies.
Yeah, I mean, you can have a 42-day call vertical on the long end right now with, I mean, almost 4.5 to 1 risk reward. So I'm kind of that's how low vol is. So I'm kind of inclined to, as I'm looking at this, to kind of rationalize my exposure. Maybe take the L on the stuff that's expiring. It's not the biggest L ever, not by a long shot. And then from there, just reload cheaper.
If we were looking just for a play back to the highs that we had back 4 weeks ago, along the 113.5, short the 114.5 here in notes, it's a little bit better than a 3-to-1, approaching a 4-to-1 at a 40% probability of profit. And would we realize, this is why I'm so comfortable being long here. So am I going to realize a max loss on these positions? No, because if we break below 112 or so, or 116 in notes or bonds in the next few days, there's so much time to expiry that the positions will retain enough intrinsic value that I can get out at a smaller loss. So I'm happy to take that 3-to-1, 4-to-1 swing, knowing realistically, I'm not giving up that full one. I'm really giving up half if things go sideways. So it's really like, it's not really a 4-to-1 trade in my book, because if I realize this to max potential, I wasn't risking $200. I was only really risking $100, and I could potentially make $800 on a $100 roll of the dice. So just chill, right? You just got to chill with it. That's not the metals mindset here. And I can feel my blood pressure rising as we're getting ready to land this plane into the metals portion of the airport, Ilya.
Yeah.
What the heck has happened here in the metals over the past 24 hours is really all I can say, because it's another 4.4% loss for silver. This all starts yesterday during the show, which, Ilya, the funny thing about yesterday is that when where are we for yesterday's action? We got to go back a little bit more in time. Let's go to a 10-minute chart. I do the slides right before the show begins. I don't want to put the cart before the horse and have things not be timely. So at 12, at like 1:15, when I finalize the slides, silver's trading at $53 an ounce. And then immediately it gets drop kicked for $1. You see the same type of price action today, shortly after U.S. equities or U.S. the session becomes a little bit more in focus, 8 a.m. Eastern. Why are gold and silver bleeding out in your view before I share my crackpot conspiracy theories and discuss how we manage positions that maybe aren't doing so well today because someone decided to buy the dip a little bit too early yesterday?
Yeah, I'm looking at this and what it's increasingly telling me, I think, is that we have a situation where gold and silver have basically become risky assets. Not in the strictest sense. This is not to say that they're correlated with stocks. Interestingly, they're not. But it seems like in the way that we are sort of used to trading, both when you and I started in sort of the wake of the global financial crisis and in the midst of it, because I really started to trade just a few years before in maybe 06, 07. And the kind of binary world that's emerged where things go risk on, risk off, we almost forget that we're in a world where the norm before then was to have a couple speculative narratives that don't necessarily line up with each other per se. And gold and silver seem to have become their own speculative narrative. Not so much the same narrative as AI, oh, goody, the great and powerful supernova, as Dylan would call it, et cetera, but also on a separate track almost. A speculative narrative about deglobalization and an era of economic warfare and constant kind of bumps in the road in the trade relationship between the major economies, be it the US and China or the US and Europe or the US and Canada, Australia and China, Australia and India, and on and on and on and on and on it goes. It's just with the US no longer policing the store, there's all kinds of shenanigans. And people have seemingly wanted gold as a kind of non-affiliated currency to move around the different nodes in the new system. And it seems like when you look at the beginning of this week, we get the end of the government shutdown. What happens? Stocks and gold rally. Now stocks have faded and gold has faded. It seems not together per se, but it seems like both are becoming creatures of speculative appetite, of the desire for capital to go and engage with what the menu of speculative narratives is. Where gold and stocks are not necessarily the same speculative narrative, they're two different dishes on the same menu, as it were.
40.94 here in gold. Notably, throughout this kerfuffle, the past 24 hours, there has not been a substantial decline in volatility. I think that's perhaps the one thing that has me hanging my hat on maybe this thing holding up here near 40.55. It's interesting because if we had this measured move off the bottom, we were discussing literally within the past day that you had reached that 100% target in silver prices. You had moved up to hit 52, right, off of this potential inverse head and shoulders pattern. Mm-hmm. And then the market gets its bounce. Where did it bounce from today? I think this is really fascinating in silver.
It did do that. And gold did something similar. There was a kind of former resistance turned support situation here.
You're seeing that play out. So maybe this isn't a total, this is maybe just people being too levered long and taking profits and something that's been doing well ahead of NVIDIA next week. There's been a lot of research.
I'm not abandoning my long position for what it's worth because I'm willing to let it work its way out.
Yeah, and so I'm thinking about myself here, right? Forest from the trees. One of the litmus tests that I always like to do with myself after a position that was working goes against me is let's pretend I haven't looked at the market since I put the position on, right? If I put this position on when we get through 40.55, I get filled on my call spread, 43.50, 4,400. If we're trading at 40.96 today, would I be content with the fact that the market is up 1% over the past 4 days? Would I want to keep this position on? Would I be content with the fact that IVR is higher today now than it was when I put the position on? Those boxes are still checked for me. I'm not comfortable with the price action, but also this is something that we'd like to see proceed a little bit more calmly, not just go up $100 a day because it gets unwieldy and then you get these potential blow-offs and dramatic, sharp retracements. So I'm looking at this. Silver, I am just very deeply unhappy that I bought the dip yesterday, apparently too early against the swing high that we had here on the 20th. But you know what? $50 is holding up. It was the high on the 9th. It became the neckline in this head and shoulders pattern. And I think it's going to hold here for the time being. The contention I have, though, with this is that if it is a risk asset, what if it's as simple as the tariffs? Yesterday, we had Besson and Co. doing the whole guy in hot dog suit thing. We're trying to figure out the people who did this. Luckily, we figured it out. We can take the tariffs off. So the evil people who put the tariffs on, we got them. If in our worldview, we have said there's no other currency alternative to the US dollar because you can't trust the yuan, the pound, the euro, the yen, the ruble,
not to the extent you can the dollar. That's for sure.
So as countries have these trade flows coming in and they're going to keep some of the currencies domestically, they're not going to keep them in dollars. They're going to keep them in gold because at the margin, if we're trading with the world less, they're going to have less need to recycle their US dollars back through the system. And
moreover, the dollar has become something of a troubled asset when you look at the kind of volatility we've had and the reason why you're going to trade with these partners less. It's largely a self-inflicted thing.
So it's self-inflicted, but it's tariffs on, dollar reserves down, gold reserves as a percentage of the mix up.
Sure. Yeah.
Directionally, if we're going to, the trade war was evolving previously. It was like tariffs on, and we don't know where they're going to go. And then it was directionally, tariffs are going to be on, but they're not going to go higher from here. And now but they're going to stay on. And now directionally, it's like tariffs are coming off. So if the previous paradigm was tariffs on, dollar reserves down, gold reserves up, wouldn't it make sense then it's tariffs off, gold down?
I'm not so sure because I think saying things like tariffs off implies that once this part of the tariffs comes off, and again, this is not all the tariffs, this is just the IEEPA tariffs, but it is most of them. So if this part of the tariffs comes off, that the administration is going to go, well, I guess we'll just take the L here. What do we know about this administration and in particular this president? They don't take L's. So either they can spike this somehow and change the narrative and say, you know what? We're going to run in the midterms on we would have given everybody $2,000, but that evil Supreme Court, you got to put us back in so that we can get this stuff together. And we'll get you your $2,000 later. That's one way that they could do it. The other way they could do it is say, well, the Supreme Court mandates we return this money. We're going to extrajudicially return it, not to the companies we got it from, but in a dividend to the people. And bury it in courts that we couldn't do that for the next however many years. And grease the midterm wheels. And then they can tell us in a few years' time, whatever business is silly enough to want to sue and try to claw this back, we can let them try to work that out. We'll see you in a few years. Okay, maybe they do that. But if they choose the likeliest alternative, which is to just go searching for other justification for these tariffs, and they have some options, then is it really tariff off, or is it tariff chaos until we figure out what the new architecture is? And isn't that just long gold again?
Yeah, that's kind of where my head's at, but that's the long-term architecture may not be playing with us in this particular 45 in, 21 out cycle. What happens?
Maybe not. Depends on when the Supreme Court decides to make its decision.
So I'm still at 39 DTE. The whole point of the trade when it was put on is it looks like this is bottoming here, and we're going to get a run up to the highs. Working out until 24 hours ago, 25 hours ago, that was proceeding better than one could expect. At these levels, it's still valid. I'm going to hold on to it. If we're below 40.55, I'm going to be out for a small loss. Silver is a very similar story. It's bad today, but like the frustrating part about it is like I still have the positions on from when it was trading near 48. So I'm green. I'm just not like, where's silver here? Silver is here. So like I've lost a bit of money in silver today, but it's still a green position for me. So I don't know if I'm ready to abandon it yet. If we get below 50, I'll have to reconsider because that's where we effectively bounced today. The high from the 9th, 49.96 and a half, 49.96 and a half in silver. Ilya, we have 7 minutes left, so we're going to keep going. It's been another week of an energy slinky, a zigzag in these markets. Crude oil down, up, down, up. You know what? We're back near $60 a barrel, Ilya. It's the Bob Barker price for crude in recent months, particularly since June 24th, when Israel and Iran end their exchange of missiles. I know it's frequently a point of interest here for those that, where did those go? Okay. Why can't I see my messages to the Ayatollah? That doesn't make any sense. Anyway, I messaged him recently.
Why can't I see my messages to the Ayatollah?
It's a totally normal thing to hear on air.
Yeah.
I messaged him again a few weeks ago. He still hasn't responded to me. But ever since...
That's just rude. You wouldn't expect somebody with the kind of stature that the Ayatollah has to be a rude person.
It's a cultural exchange. We're trying to make peace through understanding of where I should put my money in the oil market. And
not an unreasonable basis, by the way, to begin a dialogue.
Yeah. And it's what we do for the job, right? Am I risking fatwa to make sure that tastylive traders are fully up to date? Sure. But maybe it's worth it.
Risk reward.
60.77 is where oil bottoms out in the days after the Israel-Iran kerfuffle. The 12-day war is, I think, what they're calling it. That is more or less where the market has found a midpoint between the highs and lows thereafter. So while it's a 20.4 IVR, I still have the mindset that if we look at the recent trading range, high-low, and we look at an opportunity trading around those levels, going 1 or 2 points wide, if someone were to want to replicate the position that I'm in, I'm at 32 days, 55, 65 are your short guts, 67 and 53.
The wrong way.
It's at 60% probability of profit plus.
That mitigates significantly.
This has been yeoman's work for the past 5 or 6 months, though, Ilya, right? A short iron condor, short straddle, just expecting the market to stay pinned absent the geopolitical risk. Yeah. So with a 2.25% swing in oil prices today, getting back to near 60, this is much better than where we were 2 days ago when this was looking like a directional meltdown. So in terms of trading the sideways chop, one of the things I'm most confident in, if you told me, Chris, do you feel more comfortable in your gold calls or your S&P 500 MES position or your crude iron condor? Crude iron condor is the one where I'm not even thinking about it because I'm not worried about it whatsoever.
I mean, I'm a little bit short. I got a little bit short once we got that gap higher and pop in the direction of 62. So basically at the top of the current range. It looked like it was breaking down earlier in the week. Thankfully, I didn't add anything because we haven't gone anywhere. But this to me still looks like a reset and a retest of the underside of where it was breaking. I mean, you can kind of see it on the chart here. You can also see it on a 4-hour, 8-hour, anything that it extrapolates the price action here a little bit. You can kind of see that there was a sort of range bottom, let's call it around 59.50 to maybe something like 60.10, and you're sort of testing the underside there. The trajectory since let's call it late June, that peak on the 23rd of June, has been down. It's been a sequence of lower highs and lower lows, and this most recent test of that trajectory on the 24th of October gave us a stall. So I'm short against that. We'll see. It's not a big position. It's just basically saying, okay, well, we've rebounded to the top of a trend that we've tested this would be the fourth time now, and we're setting lower lows and lower highs. Let's keep going.
Natural gas here is off 2.24% today, but that doesn't tell the story of what was a bigger loss, and we have rebounded since. Notably, that loss today would have put us below the 1 week moving average, but it's another close there that we've seen every session now since October 30th. So this continues to plod forward. Westwater was pointing out that once you get around the corner of the next 2 weeks here in November, the December longer term forecasts are looking exceptionally cold for a polar vortex. So demand may be building. As for me, yesterday we took advantage of the relative increase in vol to widen out our strikes on a short iron condor position, which at 5859 and 3938 on the chart, 3938. And that's over in the F6 contract. So let's make sure we get our chart right. That would be playing below the lows that we had here in October, or we would have to be clearing out the highs that we had here in April. So the market pricing right now at a 42 DTE for what's going on in natural gas, just looking at the potential strikes, this is a 60% probability of profit risking 2.5, a little bit, barely actually, just a little bit more than 2 to make 1. That's, I think, an awesome risk to reward for 60%. And I'll tell you, Ilya, I'm comfortable placing that kind of trade when we're talking about either clearing out the yearly highs or the lows. I think we'd have more than enough warning on advance to such a level to be able to manage the position. So trying to take advantage of something that is uncorrelated to stocks, to the metals, it seems reasonable. We are rounding things up here because we only have about a minute left as we do wind the show down about a few minutes early on 6B on this Friday. British pound. That to me is the first focus today because we just had a UK budget note come out this morning that they're not going to be raising income tax rates. Instead, they're freezing tax rates, which puts more of the lower income and middle income people as their wages rise into higher tax brackets. It's expected to raise £7 billion over the next few years. That is below the 20 to 30 billion estimate that Chancellor Reeves was expected to put out in terms of a tax scheme. So UK gilt yields higher across the curve today, and the pound, despite the dollar struggles otherwise, the pound isn't able to take advantage of this. It's staying pinned below that August 1st low. We're not really able to punch through 132. Earlier today, I took off my short call spread that was at 21 DTE, took profit on that. Now looking at 56 DTE, I'm thinking the 134, 135, maybe 133, 134 becomes the place to look. It's a Friday. I don't love putting trades on Fridays. I know you don't either. But this is something I'm going to keep in my pocket for next week.
I'm also on the other side of it. Earlier in the week, I peeled off in fact, as of Monday, I peeled off the last remaining bits of my long US dollar exposure. I started peeling him off last week. The Canadian dollar was actually the first to make the anti-dollar move. So I peeled that off last week, peeled off Aussie on Monday, Euro and pound that evening. And now I'm actually long a little bit of Euro, long a little bit of pound. And we'll see how that goes. They seem to have taken out their most recent range tops, and they're trying to claw their way to something more substantial. So I'm letting it work out. I think in the pound, it's soggier than in the euro. The euro was holding up better. But we'll see. I think I'm still short the yen, so I'm not abandoning the dollar here. The yen's been weaker. And we'll see how it goes. But I'm on both sides of this market.
Calendar for Monday, Canadian inflation data, 5 Fed speakers, Williams, Jefferson, Waller are all committee members who are voting at the December meeting. So maybe we get some headlines that move those Fed cut odds, which have rebounded basically right back to 50-50. We saw a slight dip below earlier this week. We've now back above, but it's a far cry from the 90% plus odds we were trading at.
Nobody knows what's going on.
No data, no cuts. That's the Fed's message right now. So, Ilya, you and I are going to be back in about an hour's time. We're navigating this ship into port for last call today. So 3:30 Eastern, 2:30 Central. Be sure to tune back in. Until then, we have more great programming coming up. Production team, mind chiming in? I think we have a cancel crash coming up next, or are we doing live calls? Either way, we're going to find out. Okay, well, we'll find out. We're going to commercial here. Stick around on Tasty Live. More Tasty Live coming at you next.
Option pricing is central to everything that you do as a trader. You want to buy options, you need to understand option pricing. You want to sell options, you need to understand option pricing. You want to understand how you can sell a put spread, have the stock actually go down, and still make money? You need to know how to interpret and apply option pricing. So for the next 45 minutes, that's exactly what we're going to do. We're going to focus exclusively on this one critically important area. But before we dive in, if you're watching this on YouTube, be sure to add this video to your watch later playlist. That way, if you take breaks along the way, you won't have to give up on your journey just because you can't find the video in your browsing history. It will be saved in that watch later playlist. But all right, without further ado, let's do it, man. Let's dive right into the option pricing crash course. Hey, Jim Schultz here with you guys for the Tasty Live Network. Excited to get into another brand new crash course right here, right now on option pricing. Now, if you've already seen some of the other crash courses that we have on the website, that we have on the YouTube channel, the reality is this. A lot of what we cover in this crash course is going to be overlap with the content in those other crash courses. But option pricing is so central, it's so fundamental to everything that we do with all of our strategies. I really felt that a dedicated, concentrated crash course on option pricing specifically would still be very useful. And also, quick disclaimer, or maybe second disclaimer at this point, this crash course, it's not really designed for a true beginner. I am going to be skipping over some things that I'm just going to assume that you understand and that you have at least a reasonable handle on when it comes to some of the beginner concepts. I would check out the full 2023 options crash course that we already have on the network, on the YouTube channel, for more of a beginner angle. All right, so without further ado, let's do it, man. Let's dive right into episode number 1 of the option pricing crash course, and let's start by talking about the two sides to the option contract. So every option contract has two sides and a host of standardized variables. Now, we're going to get into the two sides of the option contract in just a second, but let's start by taking a closer look at some of the variables of the option contract, and let's begin with the variables that are fixed over the life of the option. You have the underlying stock, you have the strike price, you have the quantity of shares of the contract, and you also have the expiration date. The underlying stock, you have an option contract in Microsoft, it's going to stay in Microsoft. You have an option contract in McDonald's, it's going to stay in McDonald's. Easy enough. The strike price. Whatever the strike price or eventual transaction price in the stock is at contract origination, it's going to remain fixed over the life of the trade. So if the strike is 25 or 50 or 100 or whatever, it's going to stay at 25 or 50 or 100 or whatever all the way until expiration. The quantity of shares, this one is super simple. Standard options are always for 100 shares in the underlying stock, and the expiration date, usually set to the third Friday for regular monthly options, but there are also weekly expiration cycles, intra-week expiration cycles, and even zero DTE cycles in some of the major indexes like SPY and QQQ, at least as of this recording. Whatever it is, the expiration date is fixed over the life of the option. Okay, those are all fixed, but arguably, the most important variable associated with any options contract is very much not fixed. The option price itself. So in regards to the options price, I mean, something we're going to now spend the next, 45 to 60 minutes on inside of this crash course. There are really two ways that you can think of an options price, both of which have their merits, both of which have their usefulness. You can think of an option price from a theoretical standpoint, or you can think of an option price from a practical standpoint. Let's start with the theoretical angle. So option prices are determined by what are referred to as option pricing models, with the most famous option pricing model being the Black-Scholes option pricing model that was developed back in the early 1970s. Essentially, what an option pricing model does is it takes a set of known variables in the marketplace, and it uses those variables to compute what the theoretical price of the option contract should be based on those inputs. Specifically, if we know the underlying stock price, the strike price of the contract, the implied volatility, the expiration date, any dividends paid, and the risk-free rate at that time, getting to an options price becomes a fairly straightforward process of inputting these variables into the model, cranking through the math, and voila, you have the theoretical fair value of the options price. All right, easy enough. But options are living and breathing things. The financial markets are living and breathing things. They may not necessarily respond exactly as they should respond given some theoretical equilibrium point that was established by a model in a vacuum. Not to mention, the implied volatility itself is something that is not known by the market. It needs to be estimated, so you have at least a little bit of wiggle room there too, but I digress. As a result, while theoretical option prices will always be established by these mathematical models that do a very good job, mind you, real option prices are going to respond to the realest thing that you would ever see in the markets, order flow itself. And it's very simple. It goes back to the basics of supply and demand. If there is more demand for an option, its price is going to rise. If there is more supply of an option, its price is going to fall. So in the end, if you want to marry these two things together, the theoretical side and the practical side, you can think of it this way. The theoretical side sets the initial equilibrium price of an option contract, and then the practical side takes it from there with the natural forces of supply, demand, order flow, etc. All right, so with that foundation, let's now turn our attention back to the two sides of the option contract. Each option contract has two sides, the buyer and the seller. You can enter the contract on either side. You can choose to be the buyer or you can choose to be the seller. It is 100% up to you at trade origination. Now, it's very important to recognize that there are some synonyms that go along with the two sides to the contract. On the buy side, you could also say that you're long that option, or you could say that you own that option. So buy, long, own, those are all synonymous. On the sell side, you could also say that you are short that option, or you could say that you wrote that option. Those are all effectively synonymous as well, selling, short, and writing. Essentially, the three synonyms on the two sides are often used interchangeably, so you want to be well versed with this terminology so that you can follow along with trading content and conversations. Okay, easy enough. But next up, two very important things. First, options are often referred to as what is called a zero-sum game. So what this means is whatever one side of the contract wins, the other side of the contract loses, and vice versa. So if you determine the profits on one side of a contract, you have indirectly also determined the losses on the other side of the contract. Second, and I've been teaching derivatives for nearly 20 years now, the best way, and it is not even close, to think about the option contract, the relationship between the buyer and the seller, all those kinds of things, is the following. Think in terms of the long side buying the contract from the short side. Now, when you bring in, marketplace dynamics and market makers and liquidity providers and all those things, it's more complicated than that. It's not quite that simple. But when you start to think about the contract and you start to think about option pricing itself, it is so useful to simplify the process down to that one singular basic component alongside buying the contract from the short side. You're not too far from reality that's going to completely mess up the spirit of what actually happens in the marketplace, and it is going to make things much, much simpler for you to understand the contract, option pricing itself, and all the things that we're trying to do inside of this specific crash course. Okay, so now that we have a decent foundation of the option contract itself, something that is absolutely necessary to understand option pricing, one final thing before we bring episode number 1 to a close. In the option world, there are two basic option types, call options and put options. And the basic difference is this. Call options give the long side the option to buy shares from the short side of the call at the strike price. Put options give the long side the option to sell shares to the short side of the put at the strike price. And remembering that the strike price is fixed over the life of the contract, something that we established a couple of minutes ago, my hope is that it's somewhat clear to see that the long side of a call option is bullish. They want the stock price to rise above the strike price so they can buy it at that lower strike price and lock in an instant gain. Similarly, the long side of a put option would be bearish. They want the stock price to fall below the strike price so they can sell it at that higher strike price and lock in an instant gain there. And if we recall that options are zero-sum games, something that we addressed about 35 seconds ago, then we can easily extrapolate that if the long side of the call is bullish, the short side of the call must be bearish. And if the long side of the put is bearish, the short side of the put must be bullish. That is 100% correct and a great foundation for understanding these relationships. Now, if you are a beginner trader, you might be thoroughly confused at this point. Sure, you got the contract down, you got the specifics down, the two sides, and all of that. But all that info that I just dropped on your doorstep with calls and puts and strikes and bullish and bearish and all that kind of stuff, you might want to call a bit of an audible at this point. Go back and check out that 2023 full option crash course. That would be a very, very good thing for you to do right now if you are a little bit lost as to some of the things that I said a couple of minutes ago with calls and with puts and with bullishness and with bearishness. But if you feel okay with the basics that we kind of laid down and skipped over with calls and puts and things like that, what I want to do now is I want to get into the next episode where we bring in a very important component to what we're trying to do, which is moneyness. Because once you have calls and you have puts and you have moneyness, you can establish the building block to all option pricing, intrinsic value. So I'll see you inside. Jim Schultz back with you guys for episode number 2 of the option pricing crash course. Back in episode number 1, we just laid down the basic foundation. The contract, the variables, the two sides. We even scratched the surface a little bit on call options and put options and bullishness and bearishness. Here in episode number 2, we're going to pick up right where we left off. So let's do it. Let's dive right in to episode number 2 of the option pricing crash course. So at its core, option pricing is actually quite simple. It only has 2 pieces. If you understand these 2 pieces, then you understand option pricing. Intrinsic value and extrinsic value. These are the only 2 puzzle pieces to the puzzle that is option pricing. Now in this episode, episode number 2, we're going to cover intrinsic value. And then the following episode, episode number 3, we're going to cover extrinsic value. Now thankfully for our work here right now, intrinsic value is pretty simple and pretty straightforward. Essentially, intrinsic value measures the immediate worth of the option contract to the long side of that contract. In other words, does having the option contract give the long side some clear value relative to what they would have if they just held the stock? If the answer is yes, you have intrinsic value. If the answer is no, you do not have intrinsic value. So let's look at some simple examples. Remembering back to the option contract basics from episode number 1, we remember that with a call option, the long side has the opportunity to buy the stock at the strike price over the life of the trade. And with a put option, the long side has the opportunity to sell the stock at the strike price over the life of the trade. So suppose we were looking at a call option in Apple with a strike price of $190. If Apple were at $195, then this contract has immediate value to the long side of that contract, the long call holder, because he could buy Apple at $190, the strike price, when it's actually worth $195, the current stock price. Therefore, this option contract has intrinsic value. Conversely, however, if Apple were at, say, $175, then this contract would not have immediate value to the long side and thus would not have any intrinsic value. I mean, why buy Apple at $190 with your call contract when you can buy it at $175 in the open marketplace? Now suppose we're looking at a put option in Starbucks with a strike price of $100. If Starbucks were at $90, this contract too would have immediate value to the long side of that contract, the long put holder, because he could sell Starbucks at $100 when it's only worth $90. So if he already owned the shares, he could sell them for $100 when they're only worth $90. There's immediate value there. Or if he didn't even own the shares, he could just go out and buy them at $90 and then exercise his put option to sell them at $100, again producing immediate value. Both instances give the long put holder an immediate instant gain. Conversely, however, if Starbucks were at $115, then this contract would not have immediate value to the long side and thus would not have any intrinsic value. To be clear, why exercise your put option to sell Starbucks at 100 when you could just sell it at 115 in the open marketplace? So that's intrinsic value. Pretty simple and pretty straightforward. If there is immediate value to the long side, you have intrinsic value. If there isn't, you don't. To go one step further, the amount of immediate value that the contract might bring is indeed the amount of intrinsic value that you would have in the option price. And to better understand this idea, we now need to introduce the idea of moneyness. So let's take a look. So there are 3 states of moneyness: in the money, out of the money, and at the money. And these different states directly connect the examples we just went through with the idea of intrinsic value. A call option is in the money if the stock price is above the strike price, and a put option is in the money if the stock price is below the strike price. So in other words, call options and put options are in the money if they provide the long side of the contract with immediate value. A call option would be out of the money if the stock price is below the strike price, and a put option would be out of the money if the stock price is above the strike price. So in other words, call options and put options are out of the money if they do not provide the long side of the contract with immediate value. And lastly, a call option or put option is at the money if the stock price is equal to the strike price. So what this means is this: if an option is in the money by $12, it has intrinsic value of $12. Call or put, it doesn't matter. If the option isn't in the money, so either out of the money or the rare instances of at the money, then it doesn't have any intrinsic value. Its intrinsic value is 0. And that's it. That's the first piece to the option pricing puzzle: intrinsic value. Whether it's some positive number or it's 0, it is the first building block to understanding an options price, because an option will always sell for at least the amount of intrinsic value that it has. But remember, there's another piece to the option pricing puzzle: extrinsic value. And thankfully for you and me, that is coming up in the very next episode, episode number 3. So I will see you there. Hey, Jim Schultz back with you guys for episode number 3 of the options pricing crash course. So back in episode number 2, we covered the first piece to the option pricing puzzle: intrinsic value. Here in episode number 3, we're going to cover the second and final piece to the option pricing puzzle: extrinsic value. So let's do it. Let's dive right into episode number 3 of the option pricing crash course. So to kick things off today, I want to lean on the talented crew that we have on the Tasty research team. So here is Anton giving us a really nice foundation of how to begin thinking about extrinsic value.
Extrinsic value is an options concept that explains why certain options are more expensive than others, regardless of the value that the underlying stock is trading at. This is useful for deciding if we want to buy or sell an option. The way I think of extrinsic value can be summarized in the following 2 points. Number 1, an option's extrinsic value takes into account each underlying's unique implied volatility and combines it with the known variables like the price of the stock, the strike price of the option, and the time to expiration. The higher the extrinsic value, the more the stock has to move to retain any value by expiration. Number 2, intuitively, extrinsic value is an average market expectation of what the option could be worth in the future, whereas intrinsic value is the known value of the option today. Keeping these 2 points in mind, we have to decide if we want to buy options or sell options over time. This is where the research comes in. Over time, if we take the price of an option 6 weeks from expiration and compare that to the average price of the option at expiration, we see that nearly all options are cheaper at expiration, even after taking into account all the market action. This means that the extrinsic value is usually priced higher than the stock's actual movement. If we're trading options as investors, then we want to be on the side that's typically profitable, the seller side.
And that is exactly right. Extrinsic value is usually priced higher than what actually happens in the stock, what actually materializes in the marketplace. As option sellers, we can take advantage of that. So let's build on this empirical finding from the tastylive research team and bolster up our understanding of extrinsic value. And to do so, not surprisingly, let's begin with the relationship between the option buyer and the option seller. So option buyers want option prices to move higher and as high as possible for that matter. So they always want both intrinsic value and extrinsic value to be as high as possible. Option sellers, however, they want option prices to move lower, with 0 being the lowest and best possible point. So they always want both intrinsic value and extrinsic value to be as low as possible. Understanding what we understand now about the option contract and how we determine intrinsic value, given its relationship to moneyness, these are pretty straightforward expectations. Still, it's important to remind ourselves of the different perspectives of the option buyer and option seller as we look at a few different factors that impact extrinsic value specifically. Essentially, there are 3 different main factors that drive extrinsic value. There's time, there's volatility, and there's the relationship between the stock price and the strike price. Now, we could dive into an option pricing model and we could show all this and illustrate all this mathematically, but I actually want to go a different route. Let's try to understand this intuitively using only what we've learned inside of this very crash course. I mean, the mathematics are great. Without them, we would not be having this conversation. But for most of us, what's going to help us in the moment, real time, when we're making decisions in the real live markets, isn't whether or not we can differentiate the Black-Scholes model with respect to price or time or whatever. It's going to be whether or not we can correctly identify and interpret the key relationships between the important metrics in the marketplace and how they might apply to our positions, our portfolio, and all of those things. So let's take a closer look at time, volatility, and the relationship between the stock price and the strike price, starting with time. So the relationship between time and extrinsic value is actually fairly simple, especially when you think of an option contract in terms of the option buyer buying the contract from the option seller. Whenever you increase time, all other things being equal, you increase extrinsic value. Whenever you decrease time, all other things being equal, you decrease extrinsic value. Working through this from the vantage point of the 2 sides to the contract should make this obvious to you. Remember that an option buyer, call or put, it doesn't matter, has a limited risk position with the potential for effectively unlimited gains. If the stock goes against him, he would lose the premium he paid for the contract and no more. But if the stock goes for him, there is essentially no cap on how much he could potentially make on the position, even though technically stocks can only fall to 0. So that does put a theoretical cap on profits to the downside. So for the option buyer, more time adds greater return potential. Keep that in mind. That is very, very important. On the other side of the contract, for the option seller, it's the polar opposite of that. He can only make limited profits with the potential for unlimited losses. If the stock goes in his favor, then he'll keep the premium he collected on order entry, but no more. If the stock goes against him, however, there is no limit to how much he could potentially lose. Again, we see the zero-sum game nature of the option contract in action. So for the option seller, more time adds more risk, and that is the key. Remember, the buyer buys the contract from the seller, but it is effectively the seller that determines the price he is willing to sell the contract for. Therefore, contracts with more time will always have more extrinsic value and thus higher overall option prices. And contracts with less time will always have less extrinsic value and thus lower overall option prices. And to prove this to yourself, don't take my word for it. You can look at it for yourself. Open up your tastytrade platform, pull up Starbucks, and grab any strike. Compare the 45 days to go expiration cycle and the 21 days to go expiration cycle right now. You will always see more extrinsic value in the 45 days to go cycle relative to the 21 days to go cycle. Just like you would see more extrinsic value in the 21 days to go cycle than you would see in the 7 days to go cycle, and so on and so forth. All right, so that's time. Let's now take a look at volatility's relationship with extrinsic value. Now that we have time's relationship with extrinsic value well established, volatility's relationship with extrinsic value isn't too bad, mainly because the driving force behind this relationship is the risk to the short side of the contract. With potential losses for the long side limited and potential losses for the short side unlimited, it's easy to see that the short side is already taking greater risk than the long side. But if you layer on top of that even more volatility in the underlying stock, that just adds even more risk to the short side of the contract. The reason why is the same as what we saw with time and option contract dynamics to begin with. If things don't work out, the long side can always just walk away with limited loss. For the short side, unfortunately, it's not that easy. And if there's more volatility in the underlying stock, that means by definition that the stock is expected to move more wildly. Well, those wilder moves and larger fluctuations can allow the long side to benefit from these big moves and cash in on a large move in his favor. If that were to happen, that would mean the short side would be on the other side of that large move, absorbing larger losses. Therefore, the short side is going to increase the price of an option contract on a more volatile stock, all other things being equal, to help protect him from all that added risk. And again, don't take my word for it. Prove it to yourself. Open up your tastytrade platform, which at this point should already be open, and take a look at two stocks that have about the same stock price, but relatively different implied volatilities. You will always see in the same expiration cycle greater extrinsic value in the stock with a higher implied volatility for all the reasons that we just mentioned. All right, so we've covered time and we've covered volatility and how they impact extrinsic value. Now, let's see how the stock price strike price relationship also impacts extrinsic value. So the relationship between the stock price and the strike price is an important part of understanding extrinsic value. And a lot of what we'll see here in the next few minutes has to do with the relative distance between the two. So that is why I like to refer to this relationship as simply the proximity effect. Now, that is just my own term. I just made that up to kind of describe this relationship. But this proximity effect is a central component of the Black-Scholes option pricing model. So a complete understanding of all that is happening with it is beyond what we're trying to do here. However, I do think that taking some time to understand some of the simpler implications of this effect can be really helpful in breaking down an options price. So essentially, what the proximity effect boils down to is this. Does where the stock is right now make it more or less likely that it will go from being out of the money to in the money relative to some other point? Remember that option sellers are taking all the risk, and option sellers are especially hurt by options that go in the money, because that is when the option starts building up intrinsic value, something we learned in the last episode. So option sellers are going to be keenly aware of where a stock price is relative to their strike price to best assess the risk of that option going in the money. As a result, what we see is that at-the-money options always have the most extrinsic value. Or in other words, the option seller is charging the highest possible premium to take the short side of an at-the-money contract. Why is that? Well, one reason is what we just learned. An at-the-money option is literally on the cusp of being in the money. So to guard against that additional risk, the option sellers are going to charge the most extrinsic value that they possibly can. Here, I would say the proximity effect is at its strongest point. Now, what happens when you start moving out of the money? What you will see is the extrinsic value drops off from that at the money level, and it drops off more and more the further you move out of the money. Or in other words, the proximity effect is getting weaker and weaker and weaker. It's a complicated thing, the proximity effect, I know. But again, don't take my word for it. Look at any stock in the same expiration cycle and study the extrinsic value differences when you move from the at the money strike to the out of the money strike. You will see extrinsic values falling every single time. That's the proximity effect in action. Wow, and just like that, somehow, some way, we made it through episode number 3 of the option pricing crash course on extrinsic value. It's a lot to take in, so this is one of those guys, you may need to watch it a couple of times, you may need to slow some things down and take some notes to kind of add to your own personal study resources. But when you are ready, I will see you inside of episode number 4, where we are going to answer the question, why do option prices move? I'll see you inside. Hey, Jim Schultz back with you guys for the option pricing crash course. We are now inside of episode number 4, and we've already established a nice little foundation. We've looked at the option contract, we've studied intrinsic value, and we've also studied extrinsic value. So now it's time to begin to apply what we've learned by answering the question, why do option prices move? So let's dive in. So at this point, my hope is that it's pretty clear to you. An option price can only change for one of two reasons, right? Either the intrinsic value changes or the extrinsic value changes. Those are the only two factors in an options price. So a change to an options price has to be related to one of those two. And just as we saw when we learned about intrinsic value back in episode number 2, it's actually really simple and really straightforward. If an option is in the money, it has intrinsic value. If an option is not in the money, it does not have intrinsic value. So when we're talking about an option price changing due to a change in intrinsic value, we're really talking about one of two things. Either an option that was out of the money is now in the money, so where it used to have zero intrinsic value, it now has some intrinsic value. That would certainly change an option's price. Or an option that was in the money is now deeper in the money, or not as deep in the money, or possibly even out of the money. If it has moved deeper in the money, its intrinsic value will increase, so its option price will increase. If it's not as deep in the money, its intrinsic value will decrease, so its option price will decrease. And if it's now out of the money from having been in the money, it will have lost all of its intrinsic value, so its option price will decrease even more. All right, fairly straightforward. But what about extrinsic value? Well, just as we learned about in episode number 3, the previous episode, this is going to be a little bit more involved. So on one level, the things that are impacting extrinsic value can be boiled down to one of three things: time, volatility, proximity effect. But if we go even a bit deeper, to a deeper level, now we want to start to figure out, okay, what is impacting these three things specifically? Time, volatility, proximity effect. Because if we can uncover that, then we can learn a lot about what's going to cause extrinsic value to change and thus cause an option's price to change. So let's start with a closer look at time. So we know that more time means more extrinsic value and less time means less extrinsic value. We saw that back in episode number 3. But if we take this a bit further and begin to apply it strategically, here's what that looks like. If I'm selling out of the money options, then I know that 100% of the option price will be extrinsic value. I know this because out of the money options don't have any intrinsic value. So the only component of the option price is extrinsic value. Therefore, if I choose to sell an option with more time, then I'm going to be able to collect a greater credit. And as a result, I'll have a wider break-even point and higher profit potential. Of course, I will have to potentially hold the option for a longer period of time though. But if I were to choose to sell an option with less time, yes, I won't have to hold it as long, but the lower credit I will collect will leave me with a tighter break-even point and lower profit potential. Now at tastylive, we feel that the 45 days to go marker is a really nice hybrid between duration and credit collected at trade entry, but more on that in the final episode of this option pricing crash course. So now let's take a closer look at volatility and how it moves option prices. So more volatility, more extrinsic value. Less volatility, less extrinsic value, as we've already seen. Again, if we're focused on out of the money options, we're only dealing with extrinsic value in the option price. So what causes volatility to expand or contract? Of course, volatility itself is a random entity in the market, just like everything else. But if we focus on expansion, there are two events that often lead to significant increases in volatility: market drops and binary events. Market volatility and market prices are inversely related most of the time. So if the market suddenly drops a sizable amount, there is a good chance that volatility will have expanded rapidly. One way to intuitively understand this is that the market usually rises over time. So a large drop can obviously spook a lot of investors, leaving them feeling a lot more uncertain about the future. As a result, market volatility rises to reflect that added uncertainty. In regards to binary events such as a Federal Reserve announcement or company earnings report, the possibility of large moves as a result of these events is higher than it would be for just any old normal day. Therefore, to reflect this increased possibility of a big move, volatility will often rise leading into these events. And on the contraction side, given the inverse relationship between market price and market volatility that we just mentioned, and a market that wants to grind higher over time, what you end up with is market volatility, usually in a state of contraction. In fact, according to figure 2.2 inside the Unlucky Investor's Guide to Option Trading, the market is either in a lull state, where volatility is slowly dropping, or a contraction state, where volatility quickly crashes approximately 90% of the time. And at tastylive, this is where we feel the most opportunity lies in the marketplace. selling options in stocks with high implied volatility to position ourselves to benefit from that volatility contraction. All right, so lastly, let's take a look at the proximity effect and figure out what might impact that and thus impact option prices. So this one doesn't necessarily have a clearly defined trigger like time or volatility did. But instead, if one of the limitless random forces of the market were to move a stock in a big way, either closer to or further away from its strike price, the options in that stock are going to be affected significantly. As we learned back in episode number 3, if the stock moves further away from an out-of-the-money option, the proximity effect will be weaker. Its extrinsic value will fall and its option price will move down. If, however, the stock moves closer to an out-of-the-money option, the proximity effect will become stronger and its extrinsic value will rise. Its option price will also rise. Again, this is mostly what we saw back in episode number 3, but it is so important. It's worth mentioning again here now. So here are some of the factors that move option prices. And my hope is that by taking the time to understand these things now, you'll be better equipped to recognize them when they're happening to you with your positions inside your portfolio in the live market. All right, we are almost done. One episode to go before I cut you loose and let you go into the forest. I bet right now you are wondering, all right, Jim, this is good stuff. This is important stuff to understand, but how do I put all this together and take advantage of everything that I've learned? You know, that is such a great question that I've decided to make its answer the entire subject matter of episode number 5. So I'll see you inside. Hey, Jim Schultz back with you guys for the final episode of the Option Pricing Crash Course, episode number 5, taking advantage of option pricing. Now, if you've made it through episodes 1 through 4, then you have all the tools necessary in your toolbox to begin to take advantage of all the things that we have learned. Now, to be clear, there's still so many things that need to be considered beyond option pricing with strategy selection and portfolio management and all kinds of stuff. But using just what we've learned in this crash course alone, the first 4 episodes and then this episode, you might be surprised at what you'll be able to apply to the marketplace. All right, so let's do it. Let's dive right into episode number 5, the final episode of the Option Pricing Crash Course. So to kick things off here in this final episode, let's shoot from strength. Let's identify something that you may have already noticed. There are really only 3 ways that you can make money from options. Yes, interest rates and dividends factor into this equation too, but the interest rate impact is often negligible and not all stocks pay dividends. So keeping our focus on the 3 main drivers makes the most sense. You can make money through direction, time, and volatility, which is interesting because the 3 factors that impact option pricing the most were the proximity effect, which is basically direction, time, which is of course time, and volatility. The 3 option Greeks that will play the biggest roles in your positions without a doubt are delta, which is direction, theta, which is time, and vega, which is volatility. So hopefully you can see the connection and parallel between option pricing, P&L, and the overlapping factors that contribute to both. Man, I mean, it's almost like all this stuff is connected mathematically and quantitatively. So, okay, got it. We make money by delta, theta, and vega. Well, let's take this idea one step further by actually going a few steps back to the option contract itself. Remember, at trade entry, you decide which side of the contract you want to be on. You could be on the long side, you could be on the short side. Well, given that choice, take a look at this. If you choose to buy the option, take the long side. It's important to recognize that you can only make money 2 of the 3 possible ways: direction and volatility. You can get the directional move right, or you can benefit from volatility expansion. Both scenarios leading to higher option prices, which is what you want. But time will always be working against you. You will never be able to turn theta into a positive for your P&L. That is the price you pay for unlimited profit potential. Conversely, if you choose to sell an option, take the short side, you can make money all 3 of the 3 possible ways: direction, volatility, and time. A directional move in your favor will help you, a volatility contraction will help you, and the simple passage of time will also help you. All three profit drivers are open, a form of compensation for having to bear the added risk of unlimited risk. And hey, I can't speak for you, but first, it's really hard to predict market direction correctly and consistently. And second, having the passage of time, which is pretty much as close to a sure thing as we'll ever get, working for you is an incredible advantage. So my conclusion, selling the option, taking the short side of the contract is the clear winner in my view. But building on those incredible advantages from positive theta and the simple passage of time and what they give us as the option seller, let's go one step further and talk about where we like to enter our trades and where we like to exit our trades. If we look more closely at the extrinsic value decay curve for an out-of-the-money option specifically, we see a couple of important points. First, we like to enter our positions around 45 days to expiration, as we talked about in the previous episodes. Well, if you look at this out-of-the-money decay curve, right around that 45-day mark, you will see the slope of the decay curve begin to change in such a way that the decay is accelerating. That's exactly what we want. But second, we also like to exit or adjust our naked positions at 21 days to expiration. Well, notice what happens to decay just shortly beyond that point. It slows down dramatically. So in other words, if we continue to hold an out-of-the-money position closer and closer to expiration, we are not being compensated with the same rate of extrinsic value decay that we had in the first half of the expiration cycle. So we prefer to get out of the trade, or at least out of this expiration cycle, at this time. Isn't that incredible? I mean, if you've not seen that before, that is a real eye-opener. But here's where it gets a little crazy. That's actually not as surprising as this final point. This is another direct quote taken from the Unlucky Investor's Guide to Options Trading. Historical data show that perceived uncertainty in the market, implied volatility, tends to overstate the realized underlying price move more often than theory suggests. So in other words, IV might be pricing in a $12 move, but on average, that move is only $10. Or IV might be pricing in a $25 move, but on average, that move is only $15, and so on. So very similar to the foundation that Anton helped us with in an earlier episode, this gives the option seller an incredible advantage. Option prices are determined by implied volatility. But as we've seen empirically, implied volatility frequently overstates the amount of extrinsic value that should be in the option. So we are being overly compensated for selling that option and bearing all of that unlimited risk. Put very simply, the actual moves in the marketplace end up being, on average, less than the expected moves that were priced into the marketplace based on that implied volatility. Again, lots to consider from here. Lots of additional decisions to make and questions to answer. But do you think that you could take advantage of that? I certainly do. So I really appreciate you guys, man. I appreciate you guys so much. I am humbled that you stayed with me all the way through this crash course. I really hope that you got some value from all 5 episodes in uniquely different ways. If I can ever help you guys in any way, please do not hesitate to reach out. You can email me at jschultz@tastylive.com, or we can connect on Twitter or X or whatever they're calling it these days at jschultzf3. I would love to hear from you and help in any way that I can. So that's it. The option pricing crash course has come to a close, so I will see you guys next time.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
Hey, happy Friday, everybody. Tim Knight, and we're wrapping up. Let's see, how's this going to go? So we've had a full week now. We're going to get a full week next week, and then I guess we get kind of chippity-choppity into the holiday season. It's been an interesting day. Yesterday was a terrific day. This morning, it looked like even better. But the market bottomed about 5 seconds after the opening bell, and it went blasting higher. Who knows why, afterward. But that blast pooped out about, a couple hours ago or so. We're still green across the board. It looked like we might crash early this morning, but we have flipped green, ES, NQ, RTY, all up. And that's okay. For myself, I'm pleased with one particular thing that happened, because I came into the day really short. I had like 30, some crazy number, like 36 different short positions. And yesterday I did something I rarely do, which is bought a very aggressive options position. Nothing fancy. It was like beginning trader 101 stuff. I bought yesterday the IWM put, someone in the money that expires today. And I bought it like a few minutes before the close. Market closed. It was already down like 35%. It wasn't a big position. It was just for fun. But also I got a little ahead of my skis, as they say. But this morning, to my relief, everything was red, and it took me about a microsecond to get out of the position this morning. The old saying, it's better to be lucky than smart. I felt very lucky this morning. I got out with 100% gain, and later in the day it was down like 90%. Whew, I was lucky, right? So that was a nice bright spot, which helped act as a bit of a salve for the fact that my monstrous profits from early this morning got less monstrous. They got smaller. They're still there. I'm still a profitable day, even though the market is entirely green. But yeah, a shadow of its former self. But I'm not a day trader personally. I'm a swing trader at heart. It's very hard in this market to be one, because a swing trader ideally wants to hang on to positions for some weeks. In this kind of grind 'em up market we live in, like I say, it's tough, although lately it's been not so tough. I've gotten stopped out of like one item out of those 3630 Micron, and I've had it with Micron. I've kicked him out of my bear pen. I'm sick and tired of that guy's strength. He just won't stop going up. But that was the only one I got straight stopped out of. I covered a few items just to tidy things up and take some risk off the table, but things are still very much intact. I have only 30 positions now. And like I said, they're all just straight equities. That one crazy options play I got very lucky on and made a nice profit, but he's done. Let's look at the charts. And by the way, for you iPhone folks and your iPad folks, I've just put out an app, which is pretty cool. I won't talk about it much, but it's free. If you want to check it out, just go to slobohope.com, and I talk about it there. It's just fun chart stuff. So let's look at some charts together. We begin with a spider, and I'm actually pretty cool with the fact that we're green right now, because the trend of the market, I think, has changed. And the bears have, I think, kind of the upper paw in this market, because we've got some severe trend line breaks. And every time the market finds any reason, any excuse to go down, it goes down. it wants to go down, in other words, but usually it can't. But if it has any decent reason to do so, like, I don't know, let's say if NVIDIA disappoints next Wednesday, that would set the world on fire. Not saying that it will, by no means. It could blast to another record high easily. But my spidey sense is that'd be a pretty interesting pivot point for NVIDIA to sort of like affirm what people are nervous about, which is that maybe this AI mania is done. So Wednesday is going to be a huge day. I suspect Wednesday, nobody may trade. Everybody just be kind of nervously waiting for the news. But anyway, the wedge was broken long ago. And as I said yesterday, I added another trend line because things had gotten so sour. This was the first break. We've got another break here with a new trend line. And we got almost down to those lows from last Friday. Challenged those a bit, but not quite. So yeah, looking kind of raspy out there. I like it. The diamonds violated last Friday their trend line a little bit and violated the same trend line today a little bit. It's not really kind of giving up the ghost. We were at a lifetime high on Wednesday, and that did not last because basically lifetime high on Tuesday, lifetime high on Wednesday, pretty much control Z'd those fellas yesterday and fell even more today. Long story short, I think net we're going to end pretty close to unchanged for the week. So all the thrills and spills of Tuesday and Wednesday have gone poof. The small caps, which was the basis of my aforementioned options trade, are up. Luckily, I got out down here with those puts. They're fighting back, but this zone here, let's just rough it out real quick. This vicinity, that's a pretty good, hello, you, come over here. That's a pretty goodly amount of overhead supply. I like that because the problem with dealing with a market like, say, this, which is at lifetime highs, is you don't have that advantage as a bear, in case there's any other of you out there. Because, Kailu est fini, the sky's the limit. And so you don't know what's going on. Once you've got this in the rearview mirror, you've got something to work with. When you get a true organic market that goes up and down, over the course of time, the trend lines reveal themselves, if you know what you're doing, and the patterns, support areas, resistance areas, gaps, all that stuff. If it just goes up and up and up and up and up, it's just like, well, it's like a game of musical chairs. Who'll be the one without a seat? SMH, the semiconductor. This one's very interesting and exciting because we have fully broken this one. And here's the really cool part. We fell to a multi-week low today. We even got below last Friday's low. And we fought back all day. We are up a little bit right now. But as with the prior graph, we've got some overhead supply to work with. And I re-entered this short about an hour or so ago because I think we've got an advantage there. And again, we're all at the mercy of NVIDIA at this point. So that'll be Thursday. Thursday promises to be very interesting, irrespective of direction. Here's NVIDIA itself, which is just absolutely perplexed what to do with its life. For weeks now, it has been grinding around this zone around 190-ish or so, plus or minus, grinding. We're basically the same level now that we were 5 weeks ago, and there's been motion since then, but it's been just a grind fest. So I don't trade NVIDIA. I don't plan to trade NVIDIA. Senator, you're no NVIDIA, but I watch it with great interest. Okay, let's turn our attention to gold a bit. Another interesting creature. Now, gold seems to have stumbled somewhat. We're down 2.76% on this. I shorted miners yesterday by way of GDX. I'll talk about that in a few charts from now. But the fact that yesterday was the peak for this counter trend. We've sort of like dropped the ball here. And I say we with the hope that we're actually going to go a lot lower on this, because short term, I really want to see this cheaper. I'll talk about palladium in a sec too. But this seems to have stumbled. And we see this reflected. This is GC, the futures contract, but here by way of GLD, we can see that this gap was far from filled. The closest we got is yesterday. It did not even muster enough strength to close the gap, and then we've tumbled away from that. So it looks like we'll be, again, pretty much unchanged for the week. There's all this up has been negated. Silver went crazy yesterday, a lifetime high, threw that away. It threw away yesterday, it threw away Wednesday, it threw away Tuesday. So there we sit daintily on that very long-term horizontal, which has been the peak back in 1980, I guess. 1979 and 2011 and this week. So that's an important level, which of course is not inflation adjusted, but nominally speaking, people's brains don't really take inflation into account. It's just, 50, that sticks. As far, did I talk about SLV? Yeah, there's really no new reflections on that. So there's same deal. As far as palladium goes, remember I said about better lucky than smart. I got kind of lucky on this one too, because yesterday, nervous Nelly that I am, I got way too concerned that asset prices would all be dragged in one direction or the other, irrespective of their form. So I was long palladium, and going back to the spidey sense, I got the feeling that asset prices, equities in particular, were going to fall, and that precious would not be left to their own devices. So the bifurcation that I've been hoping for hasn't transpired yet. I got out. It was a 6-figure palladium position, and I literally lost like $80. And then it became many thousands of dollars. So yeah, got out of that. We have not broken the support yet. I'm kind of hoping we do, because as I've said ad nauseum, I really want to pay a good price for it down here instead. So I kind of couldn't help myself. On Wednesday, I finally did the deed, and then I just surrendered the next day. And like I said, that was, for once, a good decision. I also, on the miners, this is kind of interesting. I shorted GDX yesterday, and this morning, it was looking really good. But, and I'm sure you've experienced this before, right after the open, I took a quick glance at the chart. The profits were outstanding, and I saw this gap that we were almost had sealed that gap, and my impulse was get out, take profits, get out. But I got greedy, and literally like a minute or two later, I took another look, and the profits had gone down like a third. And then, put it this way, a multi-$1,000 profit eventually wound up to be $94, something like that. So a good trade if I had been like a little bit more on my toes, but in my defense, it's a little hard to be totally on your toes with like 36 positions dancing around. In any case, I bought a little dust earlier today, because my view is that we're not done here, and we'll probably punch below that price gap. But yeah, just as pleased as I was about getting out of those options, I was just as displeased about not paying attention and being a little more nimble this morning. I knew it would be a crazy day. Some individual shorts, nothing to do with precious. Just a one or two here. Coals looking really good. We're sinking on that one, almost 4%. I really, really like this because it has got a Himalayan mountain range of overhead supply helping the bears out. Pacific Gas and Electric of all things. I like this on the short side as well. It's PCG. Carnival. Dookie. I'm almost done here, baby. CCG down about 0.75%. Oh, I beg your pardon. My dog is setting off a end of week alert, so that's helpful. Carnival, I really like the head and shoulders on this one. The gap is the stop. I think this is a very nice pattern. So again, Carnival CCL and its competitor Royal Caribbean RCL, short this also, and with an eye toward breaking this long-term trend line. How are we doing on time? Oh gosh, we got 2 minutes with this munificent bounty of time in front of us. Rivian, this is backed off. I think once again, for the umpteenth time, Rivian broke out and then went flop. It's, you can see, I've talked about this time and again, base after base after base after base. It has a good result. This was a very exciting result. It went from 12 up to like 18 and a half, and then lost about half of it. It just can't seem to get up off the mat. Can't seem to stick with those gains. But longer term, it is executing a series of higher lows. So it's making progress. It's just very unsteady. Bitcoin stinks out loud, down over $3,000. I talked about the psychological importance of six-figure price. Told you, once it broke, it's broken hard. We had support again and again and again. Somebody out there, Peter Thiel, I don't know, Michael Saylor, really wanted this above 100,000. So here and here and here, each time it threatened to break below it and get to like 99995 or something, somebody would gobble up Bitcoin, and it worked for a while. It's not working anymore. We have, over the course of the past few days, lost like 5 figures. 10 figures would be pretty cool. We're down hard on this. So we have slumped from like 108,000 down to 94,000. So that's pretty interesting because this flows into the whole kind of animal spirits and risk on, risk off psyche. In turn, MSTR is down again, 4.4%, which seems to be the one thing it's really good at, is going down in price. So we've moved down from like $540 down to like, we're in the hundreds now, 199 something or another. So that's pretty interesting too. Here's our old, this is a short idea I offered a while back, DeFi development, DFDV, looking good. Beautiful right triangle pattern, and it just keeps on keeping on, down about 12.5%. Short in stocks, the most fun you have with your clothes on. That's what we say. How are we doing on time? We're out of time. Good heavens, we're going to end with such a pipsqueak stock. We'll throw in DJT just for fun. New lifetime low on that sucker right there. Yeah, how about that? Anybody truthing out there besides the guy? I don't know. So, tomorrow, Saturday, I will not be here. Neither will you. But I'll see you again on Monday, and we'll have another full week, and then it's Thanksgiving week. So we've had a fun time, and hope you're doing well, and I'll see you here on Monday. Bye-bye.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The money match event starts now, exclusive to new tastytrade customers.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we're back. It's the final 30 minutes of trading, not just for today, for this week. I'm your host, Chris Vecchio. He's Ilya Spivak. This is Last Call. Ilya, not much has changed in stocks since you and I got off of Futures Power Hour an hour ago.
No. It seems like we're going to settle with basically this week having been a mulligan, where we go, oh, well, do we really want to try to go higher on the end of the government shutdown? No. It turns out that top that the Fed put into the market on October 29th, that's still the top.
It's been quite a day for stocks, though. This morning, there was a bleed out as we head over to the charts. We're looking at SPY here because as soon as the U.S. equity market opened up, traders stepped in and started to pick up the pieces, but it hasn't carried much more than the initial rebound. We're currently sitting at what would be 67.70 right now in ES, the SZ futures. Turnaround on the back of some big volume numbers today, as Frank points out here. 1.8 million SPUs traded with 750,000 options. Calls over puts at 3-1 right now. So people are out here buying the dip aggressively once again.
Or covering their shorts. I mean, that's if we look at the wicks here on the futures overnight, they're ugly. So there was a lot of trying to front run this thing to the downside. Wouldn't be surprised in usual Tom parlance if people were just buying it back.
Well, we see the S&P, or rather SPX, at 4.1 million contracts, SPY 10 million contracts, puts over calls here, noteworthy. But also Tesla and NVIDIA, they did big numbers today. Tesla has over 3.7 million traded in terms of the options after falling out of its range yesterday. It's trying to fight back above 410 today. And of course, NVIDIA, with earnings coming up next week, they did over 3.2 million options traded today. What was a bad session is now a little bit better, up 1.81%. Ilya, I couldn't help but notice that we saw Fed rate cut odds dip back below 50% over the course of the session, and that's become a little bit of an albatross for this market rebound.
Oh, yeah.
Are we thinking that next week, what's the more important story for the market? Are we going to continue to watch those Fed odds, or really just because this is an AI panic, perhaps, about overbuild, about a bubble? Do we care more about the NVIDIA earnings?
I think it's really funny that we're now talking about AI overbuild. This has been a thing that people could have cared about all year long. Why do they decide to care now? We just had a great round of earnings for the most part. Meta was the only real stinker of the bunch, but everything else looked great. Tech earnings are growing at 27% year on year in the third quarter, against an average for the S&P that's still a very healthy 13%. If the markets wanted to be worried about earnings, why would they be worried? This is not, in my mind, a discomfort in the markets that has anything to do with the AI story, and we're just really trying to grasp at straws. All these things that were wrong, that we're flagging now, they've been wrong. They've been concerns, and the markets have shrugged them off before. The difference-making thing here seems to be the Fed. So I think, of course, NVIDIA earnings are going to carry some amount of speculative attention as an event risk. But I think the real defining thing here, as we keep learning, by the way, is the Fed. We got the Fed, which undid the Trump-Xi over the weekend gap, which would not be mollified by those tech earnings, and which showed us this week that the end of the government shutdown is not good enough. We're right back to where we started after the exuberance on that at the beginning of this week. We keep learning over and over and over again that what matters is that the Fed may not give us the cut, and in any case, delay them longer.
I'm partial to think that they're both on equal footing for next week as it pertains to the actual trade, right? It's easier to trade directly around the NVIDIA earnings than it is around speculation for Fed cut odds.
Certainly, especially when it's such a hodgepodge next week. There's FOMC minutes, there's speakers, there's this,
so many
that.
speakers. You're right. And people could trade the SR3 directly if they wanted to, the SR3 Z5 contract. But when it comes to NVIDIA earnings, I would point out that people should head over to the Tasty Live News and Insights tab on the website. Our buddy Thomas Westwater put together an early NVIDIA earnings preview. Will AI hyperscalers keep NVIDIA's outlook alive? It was published on Wednesday, so we're going to get another update next week. I think either Gus or Mike will be handling that one. As it pertains to the earnings themselves through the close next week, $13.50 priced in either direction for NVIDIA at $190 a share. That's, we're talking about neighborhood of 6-7% move, depending upon how the chips fall going into Wednesday. So it's a decent move that's priced in. We all know it's going to be good. We saw AMD. The question is how good and whether or not we can continue this series of just expanding margins and just ever increasing, seemingly endlessly increasing revenue. Ilya, it's NVIDIA, it's Tesla near the top of the board today. Volatility, though, has come in a bit here after gapping open higher at the U.S. equity open. We did run into a new relative high for the week, for the month. But now we're going to fall back below 20 on the close. We're at 1992. What do you make with the VIX at 20? Is this one of those gray areas where you really feel it could go either direction? Or is this rich enough for you to already look to start to fade off?
I think when you look at this, you kind of have to go back to what we just said about this market being repeatedly unhappy with things that would have cheered it before. So you start with it and you say, okay, what has been the story, let's say, over the past 3 weeks? And it's been very, very consistent. Hey, something good has happened. Maybe you get a day out of it. Maybe you get a weekend gap out of it. Oh, no, maybe the Fed won't cut. Something else good happens. Maybe you get a day out of it. Oh, no, maybe the Fed won't cut. And this keeps happening over and over and over again. And this week, with the shutdown ending, is a perfect case in point. We stormed higher at the open. Oh, we're going to reopen. It's going to be great. One day. And why? Because maybe the Fed won't cut. And now we're sitting at the lowest odds of the cut since really the beginning of this week. Looking at CME Fed Watch just right now, we're at barely 46%. 45.
We're talking about the lowest cut odds for December going back to the middle of August. So it's not like this is just about what's happened over the last week. It's really...
No, this is a very serious reset in policy expectations. Moreover, it's very, very important that it's not like the markets have gone 80-20 the other way. We're at 50-50. Nobody has any idea what's going on. The problem isn't that the markets have changed their mind. It's that nobody has any idea what is the thing to make your mind about.
Right. We're not going to get the labor data because they didn't conduct.
And there's no data to show them.
And the next, by the way, that's why I think the next Fed meeting on December 10th is really, that day could set up to be really volatile. Yeah. If we're going to get the first iteration of inflation data, once the government's back reopen on December 10th that morning, there could be a lot of posturing. And if we go into that Fed meeting with a coin flip chance of 25 or nothing, the day itself could be volatile, right? Ultimately, as we work our way through this, I'm of the mindset that as the 10-year on Powell's term runs down, right? As the sand goes through the hourglass.
Yeah.
The market cares less and less about the journey, right? Are we going to get our cuts now? We're going to have to wait until Powell's gone. At a certain point in time, we just go, well, Powell's out in 4 or 5 months. So if the cuts don't come next month, we're going to get him around the corner anyway. So maybe it doesn't matter so much. Maybe it's more about the destination. But that remains to be seen, of course, Ilya, because there's a long way to go until Powell's out of office officially in 6 months' time. I did want to take a look at some of the top sector performers here today as we make our way through the market. No surprise to anyone, SLV, GDX are some of the bigger losers given the performance of silver and gold. Silver is off a very healthy 4.78%. Gold prices off 2.51% still. On the high end, though, it's the energy names. If it's OIH for the oil services companies or XOP, which is exploration and production, you're seeing a really nice rebound here in the energy commodity space. And I can't help but think in terms of the equities individually, right? Over the past few weeks, we've seen the metals equities explode to the upside. We've seen things related to agriculture rebound. Should we perhaps be looking towards energy if we're thinking about getting away from some of the momentum names, some of the high flyers, some of the things that are tech related? I can't, Elliot, I look at this chart. I'm going to go to the weekly here for XLE right now. This is beginning to look like it's trying to break out of what's been a multi-year downtrend to a certain extent, depending upon where we want to draw our trend lines, if that's someone's cup of tea. But it feels like the energy equities may be worth looking a little bit closer to, even if they don't have a ton of volatility behind the names right now.
I think in trying to think about whether you want sectoral exposure like this, I think you have, which, by the way, if you're in a world where rotation matters, and if you're in a world where things are going to outperform or underperform, but growth overall is sustained, that would be the exact way of thinking I would think is reasonable. I think when we look at what's happening here from a sentiment perspective, it's very difficult not to envision that if the markets are really coming apart here, if this sentiment extreme that we've been watching since that Fed meeting and onward, where the market is clearly gasping and positive news is not giving it the lift that it used to, and it's worried about the cost of credit and ambiguity in the policy path, then the risk is that whatever risk-off thing happens is not a sectoral rotation thing. It's a risk-on, risk-off thing. And then it doesn't matter which sector you pick. So, because correlations go to 1. And so I want to be very, very careful about saying that there is room here for this kind of an idea, because I'm not convinced that we don't have a larger sort of thing that's coming together here. If I was shopping, I mean, obviously, there are things that have underperformed significantly this year. Among them, by the way, consumer staples, and of course, energy as well. But if you look at XLP, it's a very interesting sort of thing where you have a valid range bottom maybe holding here, and this thing has been relatively soggy all year, and there's some decent vol in it, and you wouldn't have to ask for much. Let's just get back to 84 at the top of this range. So it's not like there's not opportunities on the board where you haven't had tremendous aggression in the valuations. I mean, tech is up 23% so far this year. Consumer staples are down a little. So there's opportunities, and energy is certainly one of them. But I think what that requires, and maybe, I know you have this, maybe other folks as well, a belief that what's happening here is more sentiment indigestion rather than something more serious coming together, whereas I'm concerned something more serious may already be underway.
If the commodity space is going to see continued acceleration, this is a weekly chart thinking about how copper miners have done this year, how the gold miners have done this year, even the junior gold miners, right? Maybe the energy producers are due for their turn in the barrel, but in kind of a good way. Ilya, we have
in a discount kind of way.
Right. Well, money flows to different places, and energy sector, talk about low valuations right now. Valuations are relatively cheap compared to everything else in the market. Before we finish the second half of the show, Ilya, we do want to throw a quick promo up here on the screen. tastytrade is running a new promo through November 30th. If you're opening an account, use promo code MONEYMATCH at tastytrade.com/moneymatch. You'll get 1% of your deposits matched up to $2,000 plus 30 days of commission-free trading. Again, that's promo code MONEYMATCH. I think we got that right here. Thanks, Katie, for the language. That's only eligible for new U.S. customers, and again, runs through November 30th. Ilya, the rebound today in stocks obviously comes at a really important place for both NQ and ES, although the weekly charts still look like kind of a mess, and it feels like we just reset the board to where we closed last week. Are you getting a weird sense of deja vu like I am? Because the candles and the price points where we've rebounded from and where we're closing look the same. Are you surprised that we did the whole wash rinse cycle where we jumped up after the government reopening and then said, okay, let's go back to where we were?
No, and in fact, I wrote about it on Monday. When we got the rally on Monday, that day's show on macro money and that day's update on the article series that I write that sort of goes with macro money on the news and insights portion of tastylive.com. That day's write-up was, hey, we've just spent a week and a half worrying about the Fed, and we haven't set a meaningful way to break higher since then. And if you look at what this reopening has done to Fed policy odds, it's reduced the likelihood of a cut because, of course, it has, because you removed a fiscal headwind at least until January 30th. So if what we were afraid of was not enough cutting, let the thing have 48 hours to let the exuberance of the news wash and then see what it means. Because it could be that actually the markets end up disappointed because it's the Fed that they're afraid of. And indeed, we get 1 day of rally, we get 2 days of no man's land, and then everything melts down again and we reset. Did I know that that was necessarily going to happen? Oh, of course not. Who knows? Who's got the crystal ball? But the way that it was setting up, it seemed like the market was getting into a rhythm, which was, as long as its rate cuts off, we're not happy. Whatever else you got over there, we've discounted it already. Give us cuts.
What do you think the risk is going short into the weekend? There's the voice in my head that says if the administration is going to make an announcement on tariffs, they're going to do it when the market's closed.
That seemed to be a lesson that they've learned. Yes.
What do you think the odds are that we wake up on Sunday night? You, me, Nick, we log on, it's 5:45 Eastern, we're getting ready for first call, and we see a headline, tariffs against Brazil, 0, Argentina, 0, basically unwinding everything in the Western Hemisphere.
I think it's possible. I'm long Brazil, so I would love for this to happen. By the way, Brazil, that's EWZ, has been surging despite all of this nonsense, because in my mind, people have figured out that Brazil is China's replacement for U.S. ag and all kinds of things. But Brazil finds itself in a very advantageous position. So if we decide to come out with something great this weekend and reduce these tariffs, will the markets like it? Yes. Will we get a gap higher? Probably. Is it any different than when we decided to walk back from a conflict with Xi and that gap and how it failed? I don't think so. I think, in fact, the relationship between the U.S. and China is more contentious and more economically significant. And so, would the markets like it? Sure, of course. Is it going to be good enough for longer than 24 hours? Because if it is, then we've changed dynamic. But otherwise, we haven't changed it since October the 29th, which was the last Fed day.
Yeah, Chinese equities were looking much better this week, but Baba and Baidu in particular have really taken it hard the past 2 days, and they're setting new relative lows compared to where we were in October. Chinese equities, which have been in a very strong uptrend. In fact, if we think that the U.S. equity markets have been good the past few months, everything else in the world has been doing better.
No, it's been risk on ever since the administration showed the world that it can get religion on tariffs if the bond market freaks out. It has been risk on everywhere.
Everywhere. And the U.S., I think, is the second worst performing market by equities this year so far. Poland, France, Spain, Italy, they're all outperforming us. China outperforming us. I digress, though. You can see here that we're still in that consolidation zone, which I suppose brings me back to the conversation you and me were having on Futures Power Hour just over an hour and a half ago, about how the market, having had this little bump in volatility, yet seeing a VIX futures curve that remains in contango, you can kind of make the case that you're probably not going to see significant downside acceleration just yet, but the table isn't necessarily set for that sharp rally immediately eradicating the last day or two's losses. I'm beginning to think that we could be seeing a little bit more chop here, perhaps through Thanksgiving, because we're still in the fog of it. We still don't have the clarity. We're not going to have the data that we need to make a decision. This is also a market where a lot of people have still been wrong and have been fading it for a lot of this year. We can see it in the futures positioning data. We can see it in the sentiment figures. AII now has more bears than bulls, which is a curious development because usually that's only something that happens after a big sell-off.
Yeah.
And, the last time there were this many bears in the market was late March.
Well, we know how this works, right? Is sentiment is usually wrong in the build to extremes, but right at the extremes.
Correct, right.
And so what if they're right?
Then is it retail keeping up the market? If institutional investors are the ones pulling back?
This has been a fight all year. I mean, you've heard a lot more bearish sentiment from the professional sphere than you have from retail, which is
for sure
just on auto buy the dip mode. I mean, this has been a story. I mean, it's worked.
Yeah, well,
it's worked.
It's worked, and I think that's one of the reasons why
invariably, though, I mean, they haven't confirmed that they are, but invariably, that will occur. It will pop, and so for me, the approach has been, I don't know when that is. All I know is that when the market gets itself into positioning that looks like it might be gathering, I'll take a small shot and I'll see. And if that's wrong, then okay, I'll take a small loss and we'll keep it moving. The idea being that once one of these things happens, it's an elevator down, as you've said. It's very difficult to get into a move that's already underway. And so you take your shots, you see where a possible top might be, you keep your risk reward very, very, very conservative, and you keep your size small, and you take your shots when they appear.
Ilya, before we get into the close here with just about 3 minutes remaining, one more quick promotion here up on the screen. I want to remind everyone that we do have our Refer a Friend program open now. When a referred customer opens up a new account and funds it with a $2,000 plus initial deposit using a friend's referral code, both the refer and the referral will receive a $100 bonus. So this should be something that people who are not currently customers maybe have an opportunity to take advantage of. If you're currently a customer, find a friend. Never hurts. Make them a tasty trader. Ilya, we are going into the close here, and we have a little bit more weakness in stocks. S&P off by 0.1%, NASDAQ down by 0.03, so slips out of the green into the red. It was up nearly 0.6% at its highs earlier in the session. So a 2% swing, kind of a wash day. The Russell is your leader, up by 0.19%, which is the relief that it desperately needs. Otherwise, bonds and notes, they're struggling here likewise as we move on through the day, although some stability over the past hour or so. Curious, do you think that this is all related just to the decline in Fed cut odds that we've seen over the course of the week, or is something else in play for bonds? Or you know what? Is the answer to this question, Chris, where's the volatility? Who cares? The MOVE index was just at its lowest level since January 21. Ignore the things without the vol.
It was such low vol that I got rid of my call vertical on TLT that was expiring in 7 days and bought back fresh with 63 days duration with ridiculous 4-to-1 risk reward. So it's so cheap. Bond market vol. I think what the 50-50 on Fed cut odds tells you isn't necessarily even that we're worried about this cut. It's that the market is confused. I think it's not fear of no cut that's animating everybody. It's fear of we don't know what the Fed is going to do, and the Fed doesn't know what the Fed is going to do. And that's really what we're going into the weekend with. There's significant surprise risk, as you mentioned. Somebody could say something. Could be about tariffs. Could be about something else. But it's just going to require staying small, keeping risk controlled, and looking at the big picture from here.
Right now, Microsoft going out on a positive note, Oracle going out on a positive note here as we head into the weekend after what was an interesting day. All these stocks are coming off their highs of the session, though. You see it with Apple, likewise, fading into the close, and Amazon fading into the close, and a Google fading into the close. Interesting week for tech stocks. Obviously, we make a round trip effectively from last Friday, and we give up the gains around the government shutdown enthusiasm. Will we see tariff relief this weekend? How will it impact the market open, Ilya? That's a good question that I think you and I will have an answer for on Sunday, because now that this market's closed, you and I will be back on Sunday for First Call, 5:45. Well, we'll call it 5:55 Eastern, 4:55 Central Time. Myself, yourself, and of course, Nick Batista. So I do want to say thank you to the entire audience for tuning in for another great week here on Tasty Live. Hope you have a good rest of your afternoon. If you're continuing to clean up your book trading, hopefully you can get those positions cleared before everything shuts down. Otherwise, we'll see you on Sunday. Rest up. Thanks for tuning in.